In the vast expanse of the infinite universe, a new star emerges from the darkness, a beacon of limitless potential. This is the dawn of everything, the birthplace of life possibilities and an extraordinary journey ahead. We stand at the threshold of a new era where every choice shapes the destiny of our world. Education is the compass that opens new horizons for future generations, guiding them to uncharted realms of discovery. The world within every heartbeat lies a story of hope, a relentless quest for perfection, where the health of one becomes the mission of all. The future unfolds in the enigmatic shadows of the universe. But when humanity merges with technology, new dimensions of opportunity and wisdom engage. In the whispering forests, we discover harmony with nature. Where oceans flourish in balance and sustainability. This is an invitation to soar beyond, where dreams transcend into reality, where space and time converge, revealing infinite possibilities before us. Where boundaries dissolve, paving the way for a unified world in a shared rhythm of progress. Giving today, we cultivate a brighter tomorrow. In this universe, we see a profound connection. Our DNA, an eternal thread to our past, and a guide to the limitless future ahead. Infinite horizons of FII8.
Your Royal Highnesses, Your Excellencies, ladies and gentlemen, good morning. And welcome to the inaugural Investment Day at the 8th edition of the Future Investment Initiative, FII8. My name is Yasser Al-Sagaf.
And I'm Fatma Fahad, and we will gladly be your hosts for today. We would like to start by thanking His Excellency Yasser Al-Mayyan and, of course, Mr. Richard Attias for putting together this exceptional version of FII, putting together this conference. And we would also like to thank our founding, vision, and strategic partners for their continued support of the FII Institute.
And to the people watching us live, of course, the FII8 Investment Day is where the brightest minds and boldest ideas come together to define the future of innovation and opportunity. As we gather here, we aren't just imagining the next breakthrough, we are laying the foundation for an inclusive, resilient, and vibrant economy which transforms industries and empowers global progress, Fatima.
We're not only laying the foundation, Yasser, we're also living it, ladies and gentlemen. I'm sure you have noticed our AI avatars, Sophia and Sean, around the conference, who will be joining us throughout the conference and sessions and even participate in providing real-time data and their insights.
Yeah, and what do we have? You can tell them the surprise.
Absolutely. We will have for you a little interactive surprise, so to speak. We would like to hear from you in our polls. We will have live polling in selected sessions. Just open your camera, scan the QR code, and you can share and participate in the polling with us throughout sessions coming up.
I think they've been having it for the past 2 days. It's not really
Absolutely.
a surprise. But okay. Again, Investment Day brings together, ladies and gentlemen, visionary minds to lay the foundation for an inclusive and resilient economy, as we said, that empowers industry and drive global progress. Please welcome our first speaker of the day, His Excellency Faisal Al Ibrahim, the Minister of Economy and Planning for the Kingdom of Saudi Arabia, on stage.
Please put your hands together for His Excellency. Thank you.
شكرا فاطمة. Excellencies, distinguished guests, ladies and gentlemen, Assalamu alaikum wa rahmatullahi wa barakatuh. Welcome back to Riyadh, the Global Growth Platform. Today we gather to discuss the lifeblood of our global economy, investment. This year, FII arrives as the megatrends of the energy transition, artificial intelligence, and geoeconomic fragmentation are fundamentally reshaping the investment landscape. The global economy must also confront what seems to be an era of anemic growth, to quote the managing director of the IMF, Kristalina Georgieva. As leaders, we cannot hide from the immensity of these challenges, but we can and must fulfill our shared responsibility to invest in the future and capture opportunities that come with these paradigm shifts. And the fact of the matter is this: the public and the private sector must evolve in parallel and together to become more aligned with the demands of our times. But here's the reality: investment alone does not drive growth. It's the starting point of prosperity and the catalyst for progress. But what matters is how and where we direct our investments. You've heard it said that capital is a coward. But investors can be bold and brave. Today's world calls for efficiency-seeking investments that can boost productivity and help the world to course correct from the low-growth, high-debt path that we as a global economy are currently sleepwalking along. The strong and determined start that Saudi Arabia has made to its transformation journey has shown that adapting and diversifying is not only possible when times are challenging, it is essential for sustainable progress. Since the launch of Saudi Vision 2030, our economy without oil has grown 20%. In the same time, we have witnessed 70% increase in private investments into our non-oil sectors, which has laid the groundwork for our open and evolving engagement with businesses and investors. As a result, for the first time in our history, non-oil activities now make up 53% of our real GDP. With our 2030 targets in our sights, we are looking to build a more competitive, knowledge-driven economy capable of producing more complex products and services to diversify our sources of growth. And this is where public-private partnerships between intrepid innovators who share the same vision need to step in and step up to capture the opportunities evolving in the kingdom. This is a platform that benefits the world. You see, there's a difference between national resilience and global resilience, and we believe collaboration is the bridge between the two. And through a commitment to enhancing collaboration, we can leverage our strengths, tap into our shared passion for progress, and unlock a limitless potential that transcends borders. And the Kingdom of Saudi Arabia is a place to do just that. By opening the door to investments that infuse technology and innovation, Saudi Arabia has further elevated its status as the investment powerhouse in the region. This is where investors, innovators, and conglomerates come to tackle the greatest challenges of our time and co-author the future. When it comes to the energy transition, we are leading the way. Saudi Arabia's unmatched expertise and knowledge means that we understand intuitively the green print needed to transform the global energy system. That's why we are pioneering new, clean, and renewable energy solutions as well as carbon capture technologies. This year, Saudi Arabia set 2 world records for the cheapest cost wind and solar electricity. The kingdom also remains steadfast in its commitment to keeping the world connected and enhancing supply chain resilience. Through our GCC free trade agreements with the world, win-win global partnerships, major initiatives, projects and investments in trade, tourism, infrastructure, and transport, we are prioritizing economic integration. And when it comes to embracing emerging technologies, Saudi Arabia will be a global leader in artificial intelligence. What sets Saudi Arabia apart is not just that we are the biggest economy in the Middle East. The world looks to Saudi Arabia for global solutions because we have long been a trusted and reliable partner for turning challenges into opportunities, not because of what we say, but because of what we do. We have created a business environment that integrates innovation, provides more regulatory clarity, and offers practical solutions. Investors deploy their capital here in the confidence that they will get results and returns. In the first half of 2024 alone, 184 global companies relocated their headquarters to the kingdom. Investment licenses have risen by nearly 50%, and there are many more examples. But here in the kingdom, progress does not rest. Every milestone we achieve is a baseline for the next. Throughout history, Saudi Arabia has been an anchor of stability and a beacon of prosperity in the face of global challenges. Today, it is a bright spot in the global economy. So let's make this moment and this opportunity count. Let us leverage this platform for growth and the discussions we've had over the last 2 days at FII to turn rhetoric into results. Join us on the trajectory that Saudi Arabia is on to reforming, transforming, and unlocking potential wherever we go. And together we can shape the future of the global economy. Thank you very much.
Thank you very much, Your Excellency. Very well said speech. Indeed, the kingdom here in Saudi Arabia will lead and be an anchor of stability throughout history. Saudi Arabia has been the anchor of stability and beacon of prosperity in the face of global challenges. Ladies and gentlemen, without further ado, we would like to dive right into our coming up session. So please, for that, welcome our moderator, Dan Murphy, anchor and correspondent for CNBC.
Well, thank you very much for that kind introduction, and I want to also thank His Excellency for the excellent platform and for setting the stage for your next conversation. We're going to talk about which emerging markets are the next frontier for alternative asset growth, and I'm very pleased to be joined by an expert array of guests. Please make them feel welcome. His Excellency Mohammed Al-Kuwais is the chairman of the Capital Markets Authority, so welcome to the conversation. Rishi Kapoor is vice chairman and CIO of InvestCorp. And Chip Kay is the co-chairman of Warburg Pincus LLC. So let's dive straight into the conversation. Welcome to you all. First of all, Your Excellency, how is the CMA creating an environment for alternative asset growth in Saudi Arabia? You play a really key role in not just developing the industry, but also stoking investor appetite into this space.
Well, Dan, thank you very much for the introduction and good morning to everyone. Actually, if we think of the world of asset management as ultimately capital allocation, so it's about two things. It's about the quantum of capital that's available and about the efficiency of that allocation to allocate it to the best plans, projects, initiatives, etc. And if you think of there being two ways to allocate that capital, via the public markets or via the private markets, there has traditionally been a bit of an overlap between them. As one grows, the other one, and the alternative space has generally been affiliated with the private markets. So generally, when you look at this equilibrium, you notice that as markets become more efficient, the role of capital allocators decreases, and so they move from public markets to private markets. And that's why you see in most developed markets, as markets have become more efficient, more of the activity in terms of capital allocation and asset management has moved from the traditional space in public markets to the private space and the alternatives. The interesting thing in Saudi is we are actually seeing growth in both of them in tandem. So we are seeing growth in the public markets, and I would argue it has been one of the most unparalleled growth rates in the public markets, just simply because the rate of financialization of our economy has been possibly one of the most rapid in the world. But at the same time, when you look at the universe of AUM, or assets under management in our industry, one of our fastest growing segments is the alternative space, whether you look at venture capital, private equity, real estate, etc. And the growth of these two segments in tandem is just a reflection of the quantum of capital and the quantum of investment that is required and that will be required for the upcoming period. And our expectation is that both are likely to grow even further.
And it's been absolutely fascinating to watch the development of the public markets here as well. The Tata wall, increasingly sophisticated, a number of new products coming to market as well. What will drive the next wave of growth, not just in the public markets, but in the private markets as well?
I imagine that the biggest wave of growth is likely to come from just the pipeline of investments and financing needs that are required. And this is what His Excellency Minister Faisal Ibrahim talked about in his introductory remarks today. If you look at the quantum of investment that's required in Saudi from now to Vision 2030, estimates reach about $3 trillion. And that requires a lot of capital. It requires public capital, and it requires private capital at the same time. I think it also requires local savings as well as international savings.
I wanted to bring Rishi into the conversation on this because Investcorp, of course, very active in the emerging markets and a very big focus on the MENA region as well. What's your investment approach to the region in 2025 and why?
So as you said, Dan, I mean, look, we are from the region. We are created by the region, by shareholders and investors from this part of the world. And of course, now we are for the region as well. Although 40 years ago, when we started, it was all about deploying capital into the developed markets. Of late, it's been much more balanced in terms of developed and emerging markets, in particular, those markets that provide the fundamental foundation for attractive long-term value creation and growth. So let's take the kingdom, for instance, right? And let's compare and contrast that, the building blocks of the kingdom versus what defines an attractive market. Is there a deep addressable market of mid-sized businesses in private hands, founder-owned, family-owned businesses that are keen to attract private capital alongside them, grow, create value, and possibly monetize that value either through a listing or a monetization event? Otherwise, the answer is yes. And in particular, the economic diversification plans that the regional economies have, led by the kingdom, underpin that explosion almost of mid-sized businesses. Is there stability in the underlying framework for policy, regulation, and currency? The answer is yes. Is there supply of talent and capital supporting that growth? The answer is yes. Are there exit opportunities emerging in the ecosystem to monetize those investments through either a listing or secondary sales, et cetera? The answer is yes. You put it all together, that gives us the ideal framework for deploying capital. Therefore, no surprise that one of the most pivotal initiatives for InvestCorp over the last few months or so, and leading into 2025, back to your question, Dan, and beyond, has been the launch of our Saudi-focused, we call it the Saudi Pre-IPO Fund, but that's a little bit too narrow a definition. It's really a fund primarily focused on investing in mid-sized businesses in the region, particularly focused on Saudi, that have the potential to create value over a medium-term horizon and also monetize that value. Looking at sectors, it's all about business services, going back to that explosion of small and mid-sized businesses driven by the economic diversification plans. It's all about transportation and logistics, just given the location of the region itself and the pivotal role it plays in the global supply chains. It's about healthcare and social infrastructure, including education, and it's about the consumer, right? The region is blessed with a young, digitally native, but relatively wealthy, well-off consumer base, right? That is looking to consume goods and services increasingly internally. Leisure, sports, entertainment, travel, tourism, all of that drives an explosive growth in domestic consumption that you can lean in behind and create value. So that's how we are planning our outlook for regional investment.
And all of this also being accelerated by the PIF's recent decision to pivot investment back into the kingdom, having spent a long time investing internationally. That's going to be an accelerator of economic growth domestically. We can touch on that as well. But Chip, coming into the conversation here, what's the Warburg Pincus view on the MENA investment outlook for 2025, and how are you actively deploying capital here?
I think, broadening the conversation a little bit, I'd say one of the challenges for investment allocators around the world has been kind of U.S. dominance over the last 5 or 10 years. So if you were to look, for example, at the MSCI ACWI and you simply took out the U.S., it'd be like 60% of that number. So kind of U.S. and obviously U.S. tech has been this large driver. And I think if you talk to a lot of investors, you'll sort of hear lots of U.S. bias around their portfolios, kind of this. There's always sort of been this set of India files that have sort of played there, and India has been one of the few markets over the last 5 years that would actually have dollar returns greater than U.S. There's this, intrigue about what's happening in Japan, and then there's kind of this broader sort of set of ambiguity about where around emerging markets there's also to play. And you look, and that emerging market story from a decade ago has played out in some places where it hasn't translated into growth as much as people would have thought. You might say there's pockets of that in Africa or Latin America. There's obviously been the China story that sort of is going on around all of this that has made it harder in certain parts of Asia to translate what has been real growth into investing return. But I think as you look ahead, that U.S. dominance, we may be at a moment where it transfers a little bit. And you sort of see another generation of emerging markets sort of arise where there are these, I think as Rishi described, this combination of deep entrepreneurial talent, kind of hard and soft infrastructure development, kind of an active dialogue between business and entrepreneurs, where you have the seedlings to translate that local entrepreneurial drive combined with capital, whether domestic and foreign, to kind of drive growth. India's been a classic example of that for a long period of time, and I think you're seeing some of those same kinds of elements play out across the region as well.
So we're going to take a deeper dive into exactly what the investment opportunity looks like, but this is FII, so I wanted to maybe just talk real here just for a second. The government and the CMA have done really extraordinary work to develop the ecosystem here, to make it more enabling for global investors. But What's the delta here? What do you two need to see from the government and Saudi authorities to deepen your engagement moving forward? What's missing? Chip?
Well, I think as I referenced, I mean, when I look at places around the world, there's sort of there's a mental checklist in my head about, do you have this well of deep entrepreneurial talent, right? Do you have the makings of people that, in sort of history of commerce and the like? You know, do you have a basic macro stable framework where you can sort of plot what sort of a 5 or 10 year trajectory looks like versus sort of history of, you know, unnatural volatility around things? Do you have, as I sort of referenced, sort of this hard and soft infrastructure? So it's the physical part of it that enables commerce, but a lot of it's the soft elements, capital markets probably being maybe one of the most important drivers of that. And then I'd say, you know, do you have a place that has like a constructive dialogue where, again, it's the ability to, and there's sort of a pro-growth, pro-development flavor to it. And, you know, I think Saudi in particular has embraced that, and you've seen pretty dynamic change here over the last few years. And I think you're seeing that play out in other parts of the world as well. You know, sort of talk about it, you're seeing that play out in Vietnam in its own ways. So there are other pockets in the world where that's playing, but I think those are the things that sort of people are looking for, some combination of those in order to attract private capital to it.
Rishi, what more do global investors need from Saudi Arabia?
Yeah, so I mean, I think, by the way, Dan, I don't think it's a question of missing as much as it's a question of continued evolution, but more importantly, laying down the proof statements, you know, the proof points. You know, we started investing in the kingdom in 2007, right? I think we were the second or the third, Your Excellency, institution to be licensed by your authority to invest in the region and in the kingdom in particular. And what we have seen firsthand now, right, this has been our own experience, is a continuous evolution of the capital market, but of the regional investment framework led by the kingdom. When we started, we had no proof statements in terms of exits. We have since then taken 4 companies public on the Tadawul, right, and with good success. That is, you know, very comforting to investors, not just from the outside, but, you know, from within the region as well, from within the kingdom. The second thing related to that in terms of what are investors from the outside looking for is precisely that bit, that support from the domestic investor. You know, that is so confidence inspiring. The fact that the domestic investor, that is by definition closest to the market, understands the market the best, is willing to put capital at risk and support that value creation opportunity that clearly we all see, provides in turn a validation almost to the, you know, the foreign investors. And I think the PIF in particular, in pivoting to supporting the development of the local economy through inflow of private capital and partnering with firms like ourselves, as they have on a couple of occasions already, to invest in the regional private sector, I think is an ideal foundation for developing and maintaining that confidence of the foreign investors. So it's really about continuous evolution and journey, not really much that is missing from the ecosystem today.
Your Excellency, respond to this as well, because as you were just alluding to, we've seen a lot of work going into improving trading volumes, improving liquidity in the public markets, more products coming online as well. But what else do you need to do to attract international listings, to bring in more foreign investment, and to make Saudi Arabia match fit as an emerging markets hub?
So Dan, maybe I can connect this to something that Rishi said earlier on the importance of having a capital market as an end point for capital to flow from the beginning. Because if I start a new business, if I incorporate a new project, I need to visualize what the exit looks like. And while not all businesses exit via the public markets, that is usually the base case for most of them. In our case, the big story of the capital markets is both increasing the size as well as opening it up to international investment. And so international investment has moved from virtually nothing 5 to 6 years ago to now slightly over 400 billion riyals. And actually, a lot of the points you mentioned in your question are really the building blocks of it. It's about liquidity, it's about confidence, and it's about customizing the market to the local particularities of the economy. And let me give you an example. So if you look at the structure of our capital markets in Saudi, historically, they are concentrated ownership. And when you have a market that has concentrated ownership, that is very different from what you see in developed market when the largest investor represents 5 to 6 or 7%. What does this mean? This actually means that you, in some respects, combine the benefits of transparency, disclosure, governance that you have in the public markets, as well as the big anchor investor, sponsor, long-term oriented investor that has always been the calling card of private markets. So this almost looks like it's the best of both worlds. Now you can ask the question, and actually as we've opened up the market to international investment, we have seen this reaction. The combination of transparency, disclosure, and anchor investors is a good thing. But there is a but. And the but here is this combination can be quite dangerous if you don't have minority shareholder protections, because the big anchor investor can basically direct the business at the expense or to the detriment of minority investors. And that is why, actually, in Saudi, we have probably become one of the most draconian markets in the world in terms of governance, disclosures, and minority shareholder protections. And it is not because we want to fit to some international standards. It's we need to fit our funding model to fit the structure of our economy. And that combination has actually been proving very successful.
Absolutely fascinating. And I also wanted to talk about a little bit more about the investment strategy here from both of you in the year ahead. I asked you about your outlook for the region. I want to know specifically how you're investing in this macro environment. And as we see, of course, a lot of uncertainty in the global public markets right now as well. Rishi, first to you. Investcorp has a pretty diversified approach: private equity, real estate, credit management, infrastructure. When you assess the outlook for the year ahead, what's your highest conviction bet and why?
You know, how many children do you have, Dan?
Pardon?
How many children do you have? You love them all, right?
Yes. Unfortunately, I have none. But
okay, so in that case, this question is to be directed at probably me. But anyway, you love all your children. And for us, for me personally, all of those 4 business areas at Investcorp is like a child, right? And you love them all. In terms of conviction asset classes, I think that's probably less relevant relative to the conviction themes, right? And those conviction themes are actually fairly consistent, believe it or not, across multiple regions, whether it's the United States or the region or even Asia, India, Southeast Asia, and so on. And those themes are predominantly revolving around business services, going back to particularly technology-enabled services. We keep talking about the hype of AI, and the potential as well. But one thing that is inescapable is the fact that AI enablement is going to lead to massive improvements in productivity within the business services. And that technology enablement within business services is a massive theme for us across the board, including the region.
You're not worried about the hype, though? I mean, everyone's
I am worried about the hype, which is why I'm not investing in the hype, right? So I'm investing in the actual practical use of the apps based off of the platform rather than into the platform development itself, right? That's one. Second is the whole space of transportation and logistics underpinned by a major theme around supply chain resilience. That's a big, big theme applicable across the globe, right? We are investing behind that, whether it means investing in logistics and infrastructure assets and distribution centers, whether it means investing in supply chains, the whole works, right? And enablers of that space. In fact, 2 of our investments in the region, including Trucker, are exactly all about transportation and logistics. Third is healthcare and software services, infrastructure services, including education. Big theme driven by an aging population, a growing demographic, and the focus on delivering quality healthcare at affordable price points. Otherwise, the cost is getting a little bit too heavy. That is a big focus for us across the globe. We are investing behind that. Last but not least is the consumer, particularly in emerging markets like the region and markets like India, Southeast Asia. as I was describing earlier, what you want to capture in addition to the liquidity premium when you're investing in private assets is the growth premium when you're investing in emerging markets. And that growth premium is substantial in the consumer space. So those are the four broad themes that represents the highest conviction areas, back to your question, Dan, for us. And we are leaning in behind those across asset classes, whether it's private equity, infrastructure, real estate, or credit.
Okay, very interesting. And Chip, over to you. Investors are, of course, trying to price the election risk for next week as well. I know it's something you're probably thinking about behind the scenes. Lower for longer oil, geopolitical headwinds, global rates. I know you in particular have just raised $4 billion for your Capital Solution Founders Funds. What is your highest conviction bet into next year? And as you assess the outlook, these risks on the horizon, what sits on top of that list right now for you? What are you most concerned about as well?
As investors, there's always this temptation to think we can see the twists and turns coming. And the reality of that's pretty rarely true. I do think we sit at a complicated moment where we've had exceptionally low rates of interest for an extended period of time, essentially since the global financial crisis, until the post-pandemic surge, and now we're sort of seeing where they settle. And the answer to that question is going to dictate a lot about asset pricing. The beachfront property is all traded okay, but there's sort of that mass market that still is waiting to see kind of where the pricing levers are and sort of how that plays out, if you will. You clearly have sort of the geopolitical dynamics, especially between the U.S. and China, where you've got the two largest economies in the world, 40% of GDP, that are at odds a little bit. And how that turns out, I think, may be the most important question of the time. And it sits in the middle of things like climate and the like. And lastly, I think, as you were referencing, you've got the tech, you've had this extended tech revolution, the next wave of which is AI. And where you see, as you described, kind of the hype at the moment is, U.S. markets are the most concentrated they've ever been, right? We have $3 trillion business. We've got the top 10 companies that are 35% of that market. So the markets are kind of making that bet, and the interesting question will be okay, how does that really play out? Might we all miss there's sort of a turn coming? I find it fascinating recently that Goldman Sachs had come out with a report, whether it's right or wrong doesn't matter, speculating that the next 10-year equity market return in the U.S. was going to be 3%, and it sort of didn't get a lot of play, which it's a sign of kind of a little bit of the excess exuberance, triumphalism happening in the U.S. But I think there are interesting things happening in other parts of the world. We talked about it here in Saudi, and I think it's happening in other parts of the region and in other emerging markets where that story of the last 10 years didn't play out as well. But you're seeing it. You're seeing, where there are pockets of innovation that are translating into more interesting opportunities. You're seeing changes in capital markets. Some of them here that is excellently described, I think, are quite interesting. You see this symbiotic relationship between public and private markets evolving. In the U.S., strangely, one of the phenomenon is it's actually, I would argue public markets are a little more broken at the moment. Outside the top 100 stocks that trade a lot, you haven't seen sort of as robust an interchange between private and public markets. All that said, at the end of the day, I think one of the core points made in the beginning is fair, which is, private capital still represents a relatively modest share of aggregate global stock market cap. It might be 6% or so. And so I think that trend still has a long way to go. And I think the advantages, firms like ours have is to focus less on trying to predict the future, exactly what's going to happen. Go find the talented entrepreneur, go build a business, and then you will find a way to navigate through all of that, as opposed to thinking we can predict every little twist and turn coming, especially in a market that is uncertain as this one feels.
So challenges and opportunities on the horizon, as cliche as it sounds. I hope you've enjoyed the conversation, ladies and gentlemen. Please thank them again, Chip, Rishi, and His Excellency for joining in today. And I'll ask you all to turn your attention to the main stage and the fabulous Anna Stewart from CNN. Anna.
Thank you. Good morning, everyone. Welcome to the final day of FII and a particularly exciting chat about capital allocation. I'm told this is very much the investor day, so I hope you're here for some brilliant insights from our panel. Let me introduce you. We have Zoe Cruz, the founder and CEO of Menai Financial Group. We have Josh Harris, founder of 26 North. Jeffrey Jones-Subakit, who's the group CIO of GIC. Dan Moorhead, founder and managing partner of Pantera Capital, George Walker, chairman and CEO of Neuberger Berman, and finally, at the very end, Anne Walsh, managing partner and CIO of Guggenheim Partners. Now, we're going to be talking about alternative investment, which is clearly a huge market, over $20 trillion, still growing. But is the easy money era over? And I'm certainly hearing concerns in the hallways of FII and behind the stage about the size and sustainability of some of the asset classes. I'd like to start with you, Anne. Why don't you just lay it out for us? How is the alternative markets sort of area performing so far this year, and what are your expectations going ahead?
So I think the strength of the alternative markets is evident, and I'm very optimistic for the future. We have to define alternatives, I think, at the outset, which is it's a very large and expanding market, maybe just beyond the public markets for bonds, stocks, and of course cash, of which there's trillions of dollars sitting on the sideline ready to be deployed into all sorts of opportunities. So I think year to date, we've seen good results. I think we are going to continue to see that in the future. If I think about the macro backdrop a bit, I think the opportunity is definitely there to take advantage of the ever-increasing size of the private capital markets as we see the shift from public markets more to private, from traditional bank lenders to the private markets, and that includes private equity, private credit, private asset-backed lending, and the like. And so I think we're going to continue to see this expansion as we see this migration of capital. And this is happening not just in the US, but also quite strongly globally as well.
Josh, how much of the performance do you think is tied to macroeconomics?
Yeah, look, I think it's much less than other asset classes. I mean, obviously, what you're doing is you're trying to, I mean, macro obviously affects everything. I mean, in a big downdraft, you get, dragged down. In the big updraft, you get dragged up. But to a large extent, you're holding for longer. The whole point of macro is the whole point of alternatives, they're less liquid, and you can they're more absolute return driven, and so you can kind of wait through environments and kind of create value by fundamentally making investments that you sustain for a longer term. And so I think that while everything is driven by macro, obviously alternatives probably has a little bit more staying power through macro. And so I think that, look, I think what's happening is that certainly alternatives, private assets are outperforming public assets, and so you're going to continue to see them expand. But on the other hand, I do think that the party's a bit over when, since for the last 15 years, every time you bought something, interest rates went down and it was worth more than it was the day before. So people kind of a little bit got used to that. They lost their discipline. And the lower interest rates carried everyone up, which is the macro, obviously. And now what we're seeing in the last few years, obviously, is a stabilization, an uptick in interest rates. That's going to make it, kind of back to where we all started, which is you got to make money the harder way. You've got to buy well. You've got to, help the companies or the investments, and then you've got to sell well. And so I think that the fundamentals are shifting. There's also a lot more capital. You've got people in this region, other regions. It's globalized. You've even got the retail investor coming in. So all of a sudden, you've got a lot of supply capital. So we could talk a lot about it, but I think that the party is a bit over. But it's like everything else. There'll be a shakeout. There'll be an industry structure shift, and then the good alternatives firms will get better, and the ones that are probably less good will be gone. So that's probably healthy for the industry.
I feel like that was the first warning shot fired, Zoe. Is
I'm pretty blunt, so.
Is the party over?
I don't know, but I made my career dealing in probabilities, probabilistically derived outcomes. So I kind of step back and look at, on a scale of 1 to 10, is the party over? Are we at 10? I am a believer that there will be opportunities. I agree with Josh. But how big the downdraft is going to be is, so I think we're maybe at 7, 7.5. The asymmetry of risk reward, which is to actually get that additional return, you're gonna need to take increasingly more risk. And the reason I feel unequivocally strongly about that is when I joined Morgan Stanley in the early 80s, and what made my career is overnight rates were 21% on their way to 0. And 30-year treasuries, risk-free rate of return was 15% on their way to 2. So 60-40, 40-60 didn't matter. That party is over. So since all of us are looking at risk-adjusted returns, I would believe in the traditional asset classes, we're not getting paid enough for the risks we're taking. It's a very big, broad statement, but I think this quest for risk, we're not looking enough at risk-adjusted returns. I believe the opportunities are enormous, and a lot of people talked here in the last few days about the huge opportunities. I agree. But in my career, which spans many, many years, I've never seen, and I use the word never very sparingly, the fat tail risk being as fat as it is. So.
Who agrees with that? Anne, Jeffrey, we haven't heard from you.
Yeah, I think Zoe's pointed out something that is really apparent to all of us, which is that there's heightened uncertainty in the world around politics, geopolitics, technology, even climate change. But a lot of assets are priced at the highest valuations, as if that uncertainty didn't exist and as if it didn't matter. And I think, if there's any lesson that we get from high valuations is that, when the catalyst comes, the drop can be very high or very tall. And so I think that's a risk, that, the fat tail risks out there, that's in probability terms. I think in terms of actual potential losses are also there. I think that means that for allocators, you have to be especially careful, whether as a GP choosing between companies you're investing in or as an allocator across asset classes. You have to construct your portfolio well to be able to take some of that potential volatility.
The chat I've been having frequently appears in the Speaker's Lounge and in the halls of FII is about something called private credit. George, explain it to us in simple terms, what private credit is and why there's been such big growth here.
Private credit is a whole series of different strategies. Often you read about it in the press. It's called shadow banking. I think the way that most folks have started investing in private credit was originally providing senior loans to sponsors, which have produced terrific returns for folks over time. And now the definition of private credit has expanded significantly. So what was first corporate credit now is really turning and pivoting towards asset-based credit. And folks are finding that they're able to earn far higher returns than in public credit markets by accessing these loans directly as opposed to participating in public markets. And it's becoming a challenge, frankly, also you've seen a lot of banks talking about this as being problematic, is the role of the bank. A lot of these loans historically were on the bank's balance sheets, and now we are putting them on the balance sheets of GIC and retail investors and other places, which I would argue in a broad sense is probably good for the world, that these sorts of loans are on the balance sheets of very long-term investors and not sort of levered, guaranteed financial institutions.
Yeah, so the growth of private credit, obviously, private credit, private equity, private assets, the reason that they've grown so much is that they've traditionally beaten the public markets on a risk-adjusted return basis. There's been a trade of liquidity for return. Obviously, as all this money flows in, right, it gets a little bit harder It's not as easy. But truthfully, private credit, as George is saying, continues to be the best place to hide in a really somewhat overvalued fixed income market. You can probably achieve 300 plus basis points of excess return per unit of risk in certain strategies, and that's attractive, right, for a portion of your portfolio which is not liquid. And you don't need to necessarily, there's also some question we could debate for a while, how liquid are the public markets? That's sort of a whole nother existential question. And are they really that much more liquid than the private markets? So there's all these things, but by and large, almost all private assets now are more competitive than they were, but they're still probably better than the public markets generally.
And there's probably less regulation, which I'll come on to. But first of all, our AI avatar did weigh in on the subject of private credit. And obviously, we'd all love to hear from her or him. I forget if it's Sean or Sophia. It's Sean. Sean, take it away.
Good morning, everyone. Let me add my view. Private credit's $2.1 trillion market may be a ticking time bomb. With 20% covenant-light deals, and 1/3 of borrowers struggling with interest costs, we may actually be blindly racing towards another 2008-style meltdown.
Never one to mince the words. Anne, ticking time bomb.
Well, so we've mentioned the fat tail risks, and I think that's true because there's a lot of cross currents. For those of us who are U.S. investors, particularly in fixed income, we've seen the end of the bull market in bonds in the U.S. This tends to usher in a period of time for other types of investments to take more center stage. And one of those areas is credit. If I look at to oversimplify, two risks that I tend to look at together as being the ones that when they work together in the worst possible way tend to create this market seizure moments, and that is a lack of liquidity and leverage. And usually when those are taken together, a high risk that is leveraged, that's a significant problem. But right now we don't see that because there's a lot of liquidity in the system. And as I mentioned, there's $6 trillion sitting on the sidelines in cash in the US, for example. And there's a lot of money that's still being deployed globally that's available to make investments. So I really don't see those two elements coming together at this time, or frankly in any kind of time frame in the near future. And the $2 trillion that's gone into private credit is really just sort of migrating from banks. So it's not like we've really increased the total amount outstanding in private lending. It's just we've shifted the holders from banks, traditional investors, and moved it into the hands of other institutional credit providers. So I tend to think of these not as the risks that I'm really focused on at this moment, but there are a lot of cross currents, and there's certainly a macro backdrop right now of investment deployed into new areas, whether that's sustainable energy or artificial intelligence, case in point, our guest speaker, and any number of other investments, including population shifts and the like that are happening right now, reshoring. And those are creating opportunities for private credit investors at the same time.
You have beautifully, oh, sorry, George.
I just would add, we manage about $30 billion in sort of 8 different flavors of private credit. By and large, the investors, if you had to group them into 2 types, one would be large institutions. They're often taking their exposure down in public equities and allocating to private credit. And that private credit is often without leverage or with very low leverage. So that's inherently de-risking the system. Both that investor is taking less risk, moving from equities to credit, and it's taking it out of a concentrated, levered, government-guaranteed banking system. The other place is with retail investors, and again, typically with very low leverage. What I do think we're going to find, to Josh's point, is the area's grown quickly. There are lots of firms who do it. Some are very good at credit, some are very good at marketing, and it's hard to tell by looking in the rearview mirror who has great credit expertise because we've been in such a benign period. And so right now, if you look at historic risk-adjusted returns, they don't really tell you much about the quality of the underwriting. What folks have to do is really look under the hood and look at the loans and how many have had amendments and the like. And then, I think when the tide goes out, and there will be losses, but they're probably going to be smaller losses than folks would have experienced in their public equity book. And there will be people who did a good job and people who did a poor job, but folks need to really underwrite the quality of the credit underwriting.
May I add something to that? I agree 100% with those comments, but I would say my advice to all of us asset allocators is there is not enough stress testing of our assumptions, and there is the broadly held assumption. There's plenty of capital. But when I look at demands, AI alone, they were quoted as $6 trillion worth of capital needed. So we're talking about trillions with an S. So one assumption we're making, there's a lot of available capital to be put to work for all these opportunities. And the other assumption is actually liquid asset classes are in fact liquid. I can tell you as a foreign exchange trader, and I mean, you remember long-term credit? These were Nobel laureates, brilliant strategies. They made one wrong assumption. What they thought was liquid became very illiquid. UK gilt market, this is an ancient history, 2022, sovereign debt of the UK ceased. It collapsed basically in terms of value and price. And so for me, the energy industry, and I know at Morgan Stanley we did a lot of stress testing of our scenarios, that if your assumptions turn out to be wrong and you go bankrupt, whatever it is you have is too big. So, I remember in 2007, I came back from California, and this brilliant mortgage originator said, Zoe, you guys, you're talking about complexity, opaqueness, so you really are looking at assumptions that if you say you're going from mark to model to mark to market, you're all in trouble. This is in 2007. Equities were making new highs, fixed income knew Lehman was dead. So for me, and again, I don't know that this is the outcome, but it's a non-zero possibility, and we all need to stress test our portfolios. If those assumptions are wrong, what does your portfolio look like?
I want to move the conversation on to opportunities and different asset classes. And one that poses a really interesting question, both in terms of liquidity and democratizing investment, is, of course, digital. Dan, why don't you walk us through your thesis here and whether more investors should be exposed to digital assets?
Yeah, I think it weaves into this macro story is that there are no working age people that have invested in a rising rate environment. Bonds started rallying in 1982, and the Fed has basically bailed you out of any potential mistake you've made in investing. And so without the Fed to bail you out, you have to look for new assets, new opportunities. And I think the fiscal monetary situation the US and other countries find themselves in is pretty precarious. The US is running a record deficit with the most wonderful economic statistics. If anything bad happens, it will get very ugly. And inflation's still debasing your money at 3.2% a year. If you let that happen over your entire lifetime, you lose 90% of the value of your currency. So you have to look for different asset classes. Another way to think about it is alts really are not alternative anymore. It's 20 trillion. When I started in hedge funds in the 80s, there's probably 20 billion in alternatives. With 1,000 times more money chasing things, it's harder to find return. So you have to find something with an excess return and low correlation to the rest of the financial assets. And everything is totally correlated now, right? All risk assets go up and down together, and it's not because there's any intrinsic correlation between the cash flows of these assets. It's because everybody's portfolio is the same. We all own the same stuff. And so I believe blockchain has an important role in a portfolio because it's totally uncorrelated with risk assets and has an amazing expected return. The correlation over the last 13 years of Bitcoin as a proxy for our industry with the S&P 500 is 0.1. So it's one of the only major assets out there with zero correlation. The amazing thing about the returns, though, is our first fund has an 11-year compound annual growth rate of 83%, which sounds amazing, but when you compound it for 11 years, it's up 1,000x. So if you can find an asset where you can get 80% return per year with zero correlation to the S&P, you have to have a tiny bit in your portfolio.
Other than Zoe, who is, of course, purely invested really in the digital world, the other four, are any of you invested in digital assets like crypto?
In a very modest way.
Listening to that argument, why so modest a way?
Say the first is fiduciaries were just hesitant to go new places, so want it to be more proven. Frankly, I think the problems with FTX and others set the industry back a while. We were probably closer a few years ago than we are today. One, and second, for us, just in our experience, and we've been doing some clever things in sort of Bitcoin put writing and others during the 5 years or so that we've been playing with it. Our investments, at least, have been far more correlated to NASDAQ than we had hoped. We had hoped it would be more diversifying than our experience narrowly has been. But you're looking at more idiosyncratic opportunities than we are.
Is there anything, Zoe, that you think?
But if we could earn an 83x, we'll.
I was going to say, rubbing your hands.
We'll look for opportunities to re-underwrite that.
It's wildly volatile, and it's driven by things that are not fundamental, right? So if you're a professional investor, you're managing institutional capital. It's driven by the supply and demand for Bitcoin, right? So as a family office, you can buy a little Bitcoin, and it has definitely performed. But why is it going up? So the question is, as a fiduciary, as an institutional investor, you're managing people's capital. What is your thesis, right? And the thesis that was espoused, the fact that it's acorrelated, for a small amount of time, it's hard to really project that into a fundamental business opportunity that you should ask your clients to go into.
Can I?
Please.
You can go to Vegas also, right? And,
oh,
the what? Sorry.
Wheel. No, I'm saying you could go to Las Vegas and take a bet, and you're likely to be 49%, right? 49% of the time.
Zoe, have you based your whole career on gambling?
I wouldn't.
So sadly, Bitcoin sucks the air out of the room. It is interesting. 30% of our funds are in Bitcoin. It's basically store of value. It has a second wind because the US government has $34 trillion worth of debt, and neither candidate for president is going to do anything about it. In fact, the budget they both are going to turn in is $2 trillion on top of $34 trillion. So that's an interesting use case. My generation buys gold, which is a negative carry position, but it's reasonable to put 50 basis points in gold in a negative carry thing. My younger son buys Bitcoin, so it's a generational thing. The reason I say it sucks the air out of the room, the reason I'm in this industry, in this asset class, is you're talking about actually a very new way of exchanging value. We're tokenizing and fractionalizing, if that's a word, real assets, where you own a building or you own an apartment or you have small amount of money or you're a producer of something, whether you're a journalist or a singer. So the fact that you and I can exchange value, not just money.
Easily.
Value without a bank account, that's the revolution.
This is what I've been excited about, the democratization of what has, up until now, I'd say, been a very opaque, mysterious world of private equity firms and, frankly, quite hard to access. Right. I put this question to our AI avatar, Sean or Sophia, who knows, and asked them what they think about tokenization, whether this will democratize these assets. Let's listen to Sean.
Let's see. The latest figures I've analyzed suggest that tokenized alternative assets are projected to reach $16 trillion by 2030. But while Wall Street touts democratization, 20% of these deals lack traditional projections. Are we naively handing the keys of a $16 trillion kingdom to retail investors, and just how will regulators hope to keep pace?
So may I just say,
Well, we got three, yes, quickly.
the retail investor I'll come back to, but I want to talk about the justifiable opprobrium that this industry has. Lots of shysters in it. Yes, FTX was a disaster, and I'm glad it happened because it took a lot of the shysters out. The largest fraud in history was a public company, regulated company called Enron. The second largest, nothing to do with digital assets. The second largest fraud most recently was called Madoff, nothing to do with digital assets. So sadly, fraudsters...
You're saying shysters are shysters no matter...
Fraudsters are bound, so that's what I would say. But in terms of the retail investor, again, we're talking about of the half of the population in the world is underbanked or unbanked. I was on the board of All Mutual, and some of our meetings were in Kenya and in Nigeria, so it's easy as an American to say, all this doesn't matter. This is before Venmo. In Kenya, you had people that didn't have shoes that were conducting electronic banking. So for me, this is a revolution that goes much deeper than buy Bitcoin and you'll be rich.
We're going to go to Jeffrey for the sort of sovereign wealth opinion, and then on.
Yeah, no, I think some really good points have been made, and tokenization, democratization of finance, if the efficiency of the digital asset technology is such that you can have these transactions quick and cheap, that's great. I think the problem with tokenization of some of the assets is that at the end of the day, the question remains, how do you actually extract the value from those assets when it's split up over thousands of owners? So for us, if we own a building and we needed to sell the building, we go and find one buyer who will buy the whole building. If it's spread out over 1,000 tokens, how are the 1,000 people going to get together to sell that asset in order to really realize that value? I think that's a difficult question to solve. But I think the last thing, which I think is the most important, is that I think most investors, we underestimate our ability to withstand illiquidity. And so we look backwards and we say, well, these assets have always been pretty good. The GPs have always returned this much money every year, and so we can buy this amount of assets because we can stand this amount of illiquidity. But when crises happen, the amount of illiquidity is up tenfold, and we find that actually we're strapped for cash. And if that's so for institutional investors that have various different means of accessing liquidity, how much more so for retail? So I think you have to ask still, what is the illiquidity appetite of the ultimate investors that all these assets are being sold to? And I think this is something that if we don't do it right, eventually the regulators will step in. And then, that's probably not what we all want.
But again, to me, you solve for that in terms of the percentage of assets you allocate to this. More than 5% of your liquid net worth, whether you're retail or institution, is not correct. Zero allocation to this space is also wrong. There are pension funds that invest at 50 basis points where they don't get fired if they're wrong, because the price volatility is absolutely insane. But this is a Cambrian explosion of activity. A lot of things will die. Of the 19,000 tokens, you don't need to do a lot of research to get to 500. Of the 500, we do a lot of research to get to 100. And of those 100, 50, 60 will go to zero, but there'll be 1,000x. I agree with Dan. So for me, do enough where you care to get educated about what is the revolution really about. And you will find it's a disintermediating model that will disintermediate a lot of, whether it's music, Spotify, etc. So that's how I would answer that. Don't put your money into this where you get fired if you're wrong. But it's very, sorry, go ahead, please.
Okay, Dan.
I don't want to monopolize
Dan's been
this.
desperate
As you
to
can see, I'm
bust it.
passionate.
If you asked a think tank to create a product for financial inclusion, they would want these features. Anyone on earth can use it, cell phone-based, borderless, permissionless, instantaneous. Migrants don't have to pay a month's wages to their remittance company anymore. No SWIFT or bank fees, payments at a tiny fraction of the 300 basis points Visa, MasterCard charges. Free to store your money, free to send your money, yields. You can access your money 24/7, 365. No more bank bailouts. Central banks can't devalue it. No inflation. It actually goes up 83% a year. Totalitarians can't repress it or steal it. Women in countries that don't have economic rights can use Bitcoin. And then banking the unbanked. There's 4 billion people that don't have access to bank accounts. Complete democratization of finance. All of this open source, given to the world for free with no patents. Satoshi already did it. That is Bitcoin. That's why it's so huge.
And maybe why we don't need intermediaries like George here. George.
Exactly. It was going to make a different point. I think what Jeffrey said is super important, which is focusing on folks' liquidity budget. And I think a lot of what's happening around alternatives right now is a function of where people are. Where you see lots of large US and European more mature funds that have more retirees perhaps than contributors, is they're already at where they want to be from an illiquidity perspective, and they'd like to allocate more capital to private credit, and that's created stress in private equity. So right now it's a quite challenging private equity fundraising environment, combined with the fact that distributions from private equity, particularly from venture, have been low. So as you quite different, frankly, from retail clients who right now, if you were to go to Morgan Stanley or Merrill Lynch, they might be 98% liquid, which frankly is probably too liquid. They have a large illiquidity budget that they can put to work, as do many of the folks in this region who are responsible for younger funds with a longer term horizon. So the big change we see is sort of pressure in traditional private equity, where there's a big opportunity to be a liquidity provider to that space. So secondaries, continuation vehicles, co-investing, and the like is one big trend, while folks are trying to figure out how to allocate more to private credit and perhaps crypto and other things that we're less involved in. And so I think those are the broader structural dynamics that are taking place, but have to be what Jeffrey said is so important, which is folks really have to be clear on what their liquidity budget is and deal with it. And right now, different sorts of investors in different regions are in a very different place.
Different regions in a different place. Jeffrey, traditionally, the US is, of course, where we see kind of the biggest returns. Is that going to shift?
I think it will, for two reasons. I think the US has been, the most amazing economic model that exists. It's the most, kind of complicated but efficient capital market system. So not only are there a lot of companies to invest in, but there are a lot of financial products that support that ecosystem that investors can easily get into. And so it's no surprise that it's where money can flow the fastest to. But I think there is growth elsewhere. And you just think about the infrastructure needs of many of the economies that were talked on in the previous session, and so on. All of that will require capital. And if capital is required and capital isn't there today, then the returns will generally be higher. And so I think eventually the returns will match the opportunities that are available outside the US. And you will see more and more intermediation of those opportunities and therefore assets that investors can go into. So I'm pretty confident 10, 15 years, we will see alternatives to the US that are compelling investments for institutions.
Josh, we are nearing the end of this panel. Why don't you tell us how you view this market performing over the next sort of 5-year horizon. Do you think the US election next week, how exciting, will make any difference?
Yeah, well, first of all, I mean, I think following up on some of the comments, look, I think ultimately private equity, public equity, I think there's been a massive sea change in the public markets. We've talked a lot about private credit. Public equity now, 30% of the S&P is 7 stocks. And more, there's 7,000 public companies. It's gone to 3,000. And so in the meantime, private equity, right, has had a lot of money flow into it. Some of the realizations have not been there. And so you're seeing a backup in that market. To the point that was made, you know, I think that that's an opportunity. You have to kind of flip that on its head. It's really, you know, as much as, you know, private equity has underperformed its historical returns and underperformed public equity, I think probably now's the time to be a little bit more daring and take advantage of the fact that there's less capital in private equity. To Jeff's point, that's when you want to play. And so there's a big opportunity for the right managers in private equity to take advantage of the fact that some of the big investors like Jeff and others are saying, wait a second, we want to get some money back before we allocate. I think in terms of the U.S. election, look, I think that the U.S., that might create a little short-term volatility, but you know, I think we'll all get through that. I think that to a large extent, that's a tail. I think there's a lot more, there are other tail risks, you know, that I would weigh higher. I think that certainly in some of the public trading markets, you might see some volatility, but you know, in the private asset space, I think we've all been used to many elections. Certainly this one's a little more divided than we all hope for, but by and large, the U.S. system tends to maneuver forward through these things, and I strongly believe we'll all make it through that. And actually, in some cases, it may be an opportunity if you keep level-headed and you allow for people that might, you know, kind of move quickly to avoid it. You might be able to take advantage of that a little bit.
Would you agree, Anne? Are you feeling optimistic?
Yes, I'm actually really quite optimistic for the future. I think investors make adjustments to the changed political environments and have in the U.S. for several hundred years. So I think that the short-term volatility is offset by the long-term opportunity. Again, we'll go back to the macro backdrop. Technology investment is going to be enormous, and there's going to be a huge opportunity for investors. You know, we talk about tokenization, but let's talk about the underlying asset classes that we're talking about too, and particularly equity investment in real estate, infrastructure, the build-out of reshoring. And by the way, that's not just a U.S. phenomenon. As geopolitical changes are happening around the globe, that's happening in other countries. Certainly, we're seeing it here in the Middle East as well. And so there's going to be a tremendous opportunity to make investments in asset categories that traditionally have been called alternative, but they really are much less volatile and much less prone to these short-term market volatility moves as we've seen in public markets and can see in public markets. Relatively speaking, this investment need is going to flow for years. And so I think there's a tremendous ability for investors to participate in this and use technology, including blockchain and other investment opportunities and alternatives to participate. So I see a pretty bright future for investors. But I agree with a lot of comments, and that is you have to be selective. You have to know what you're investing in, and you have to be thoughtful about it and do your homework. And I think that having done that, that there's going to be a lot of liquidity moving into the area. It's going to continue to attract capital, and I think we have a good future.
I think that's a perfect place to end this session. Thank you so much to our panelists for decoding the very large alternative asset space for us. Thank you so much, and I will move on to the next panel.
Oops, sorry.
Thank you so much, Anna and panelists, for a lovely session. beautiful session. Whoops.
Okay?
I'm good.
All right. So before we dive into the next session, ladies and gentlemen, what do we have? Fatima?
So we want to hear from you, our dear guests. We have a quick polling that we want to share. What's the question saying?
Well, how about they scan the barcode and they can see the question themselves, but I'll reread the question.
I think we can see it on the screens as well around the room.
Oh, we do. All
but
right.
please go ahead and scan the barcode so that you can actually participate in the poll, and then we can see what you think afterwards.
All right, go ahead, please. And the question says, which region is most likely to create the world's next Silicon Valley?
That's a tough one.
All right. Sub-Saharan Africa, MENA region, Latin America, or Southeast Asia? What do you think, Fatima? How about we give them a
Well,
little bit
before
of,
answering or giving our answers, I think we should give them a little bit of each region. What do you think, Yasser?
Let's do that. Maybe that will help them with the vote.
Well, Sub-Saharan Africa has a young, digitally savvy population and is building strong tech, as you know, Yasser, infrastructure in sectors like fintech and agri-tech.
Okay, and the MENA region offers resilience and unique opportunities fueled by government backing and private capital in fields like AI and clean energy.
And Latin America stands out with its rapidly expanding middle class and tech-savvy entrepreneurs addressing social and economic gaps with innovation in e-commerce and finance.
Great. And Southeast Asia brings a strong startup culture and is already a key hub in AI and e-commerce, benefiting from proximity to tech giants in Asia. All right.
Now, maybe it's time to hear the results. Are you ready? Oh, look at that. MENA, that's exactly our guess, I suppose, as we spoke backstage.
Backstage, exactly. We chose MENA as well. Each of these regions, ladies and gentlemen, holds a unique strength and faces different obstacles.
Absolutely.
It will be exciting to see
well, the audience believes
region
that
will have the next Silicon Valley.
You know, that would be exciting. Thank you for participating, ladies and gentlemen. And we would like to go right into our next session with Siba moderating. However, before we do that, please enjoy the following video.
All right.
Yes, thank you. Hello and good morning. Thank you all very much for coming in. Welcome. This morning we're going to discuss effectively the next phase of disruption in the VC space. I have 4 esteemed discussants here. I have 4 areas that I would like to explore with them, and I have 25 minutes to do it in the next in the next 25 minutes. I would like to talk about the VC hubs from Saudi Arabia to Europe to the US. I'd also like to talk about cross-border investments in the VC space, of course. We'll talk a little bit about sectorial focus and perhaps deep tech as well, which is taking a lot of attention at the moment. And finally, we'll talk about new investment patterns in the VC that are emerging in VC. effectively, in Saudi Arabia, let's start here, let's start where we are, really. Venture capital landscape has significantly evolved in the last 5 years. And in the first half of this year, Saudi Arabia managed to attract $412 million of funding in the first half. That is about 30% of all the funding that MENA, the MENA region had seen, and also that is more than half of the transactions that took place in the MENA region. So Nabil, let me start and ask you this. Could you shed some light on this for us? Could you tell us what is it that is driving this rapid growth in venture capital in Saudi?
Sure, thank you. I think many activities have evolved, actually. I've been part of this ecosystem building in Saudi Arabia since 2010.
Yeah.
And it all trickles down to, I would say, Vision 2030. Since the launch of Vision 2030, it was very clear how important backing startups and SMEs for job creation, developmental metrics and impact, and also for commercial value. And I witnessed where almost zero actually investments in the tech scene here since 2010. If we compare 2018 to 2023, it was only $60 million of deployed capital. 2018 reached $1.4 billion 2023. And that's almost 21x or 21 multiple, actually, of the total amount deployed backing venture-backed companies in Saudi Arabia. Saudi Arabia used to be number 4 across the MENA region. And then we reached being number 1, 2023. I think the economic transformation and the social change happening in Saudi Arabia is really unlocking the potential for entrepreneurs and amazing entrepreneurs actually launching companies that are aspiring to being regional.
And what are you at SVC doing? What
Sure.
is your role and how are you participating in
Sure.
this growth?
We started 2018. The mandate was, how can we stimulate venture investment? We followed actually global working models in different countries that we learned from, like the Korean Venture Investment Arm, the British Business Bank, the Patient Capital, European Investment Fund, which is mainly the fund-of-fund model. So our fund size is now $3 billion until 2030. We commit almost $300 million annually. The 80% we're a fund of funds, but also we do 20% for direct investment and co-investment activities. That complements actually what we have been doing. Another very important observation that happened in the ecosystem is 2 venture-backed companies being listed in the public market. The exit scene also have been enhancing and improving. I would say almost 100 plus M&A activities and listing activities happen for venture-backed companies across the MENA region. And that's actually attracting also top-tier investors coming to Saudi to invest more, where we witnessed Wellington, Sequoia, Jordan Atlantic, TPG doing more investments now in Saudi and across the MENA region.
Oh, interesting. Sam, do you think the next unicorn in VC could come from this region?
Sure, it certainly could.
From Saudi?
I mean, I think certainly people like Dr. Nabil and the other programs here are supporting entrepreneurs tremendously. I mean, Saudi is so interesting because many of the unicorns from MENA have actually come from some of the smallest markets. Obviously, lots of software companies from Israel, for example, where they're building something and then shipping it out to markets elsewhere. And Saudi has the promise of being a country with enough people to build and scale a business domestically, as well as this tremendous top-down support. And a lot of industries, by the way, where because of their ability to mandate things and act quickly, I think you're going to see opportunities where the regulatory environment in other countries is really stifling innovation, where Saudi has an opportunity to start from whole cloth in a lot of ways and really support entrepreneurs financially and from a regulatory basis. So.
Tony, do you think, or to what extent, in fact, does geopolitical uncertainty hinder investment into the region?
I mean, look, I think, as venture capitalists, we're not macro investors. And so, we're obviously, conscious, from a responsibility perspective as fiduciaries of kind of what's happening in the macro environment. But, I think the levels of innovation we've seen, at the earliest stages, our time horizon is, usually a decade out. And so, we don't spend as much time focusing on the macro as we do on sort of the fundamental technologies and, sort of the entrepreneurship part. And I think, look, we've seen cycles of this, over decades, right? There's been lots of potential, but we're really encouraged by what we're seeing in the region here in MENA overall. And I think in particular, as Dr. Nabil said, what's happening in Saudi, I think it's really the conditions, we've seen this in the US. I mean, frankly, as the last 2 decades have evolved, like the world is flat as it relates to entrepreneurship, technology development, distribution, capital flowing. And in the US, it's gotten much more distributed, as New York has emerged on the East Coast and other pockets in Texas and Chicago and Boston and Seattle. And we're kind of feeling the same conditions here in Saudi. You've got, a real deep alignment, with the government and with His Excellency's initiatives. I think that the spirit of the entrepreneur is alive and well here in the youthful population. I think there's a really deep consumer market, and there's capital. And I think, as Dr. Beal said, when you start to see success, that in the ecosystem, as they've started here already, early signs that kind of builds on itself. And and I think at the end of the day, AI in particular is going to represent a really unique opportunity for Saudi, in the kingdom to start to sort of play from a global perspective.
Klaus, as these markets mature, as they are in the process of maturing, what, in general, what are the risks that VCs assess when looking at less mature markets?
So, look, before I answer this, it's interesting that you are saying you are not looking at macro. I think macro in Europe is now the decisive tipping point. So we spent probably like 20 years building the ecosystem, and it's actually way bigger than everybody thinks. And the main reason for that is that we are unbelievably bad in marketing ourselves. So we have more like 300 unicorns from 120 cities in Europe. Yeah. But since it's not concentrated, the unified marketing message is in nirvana, so to say. So why I'm saying that it is a tipping point? Because the quality of the entrepreneur has shifted. They now come from technical universities. So, for example, the European SpaceX is formed out of a team that won all the Hyperloop competitions. Mm-hmm. Mm-hmm. So, and what happens now is that a lot is a special program, so to say, because suddenly the defense ministries need to buy technology for a variety of reasons. So first, there's an external macro necessity. Mm-hmm. And secondly, you have this asymmetry between you cannot scale or buy old equipment, mm-hmm. and you have to buy technology. And to give you an idea of a scale, if European defense, NATO member states would stick to 2% of GDP in defense, and 5% of that would be technology, that would add up to 50 billion demand we did not have 2 years back. But the saying is probably more that we go to 3.5% GDP and 10% technology, then we are talking 150 to 200 billion extra demand. At a 3 times revenue multiple, we are talking 500, 600 billion market cap for the next 10 years. So this is macro, this is a very special situation. And it is not really defense tech, it is deep tech with suddenly the states having a necessity to be a customer.
But what are the complexities when we start looking at multiple states working together, 24 states within the NATO? You manage the NATO Innovation Fund. How has that played out in the past, and how will it play out in the future?
So the NATO Fund was basically, the idea was born in July 2 years back, and we were live by last year, something like August, September. From then on, there has been the ministries of defense have committed 1 billion something. And so you buy technologies that enhance the defense capacity of NATO. So this is one purpose. The main purpose what we really wanted to do is start a discussion, right? Because people don't know how poor the situation is, that most of the European countries have ammunition for 3 days, and other facts that are really interesting, to say the least. Yeah, but so we do have, in order to change that in democracies, you have to create an awareness, yeah, and you have to understand that these kind of the rules need to be changed, because the ESG taxonomy largely prevents a lot of capital pools from investing into defense technologies.
Let's talk a little bit about, you mentioned deep tech. Let's talk about sectorial focus and how important that is. Nabil, is it time for Saudi to have more sectorial focus? I have to say, though, what we had seen recently, fintech had triple-digit growth, I should say, in funding. Is Saudi going really deep into one sector, or are we still looking to see
Yes,
wider
if I may also, I want to talk what Sam was mentioning, and you were asking about also the unicorn. So last year we witnessed the first 2 Saudi unicorns. The one is homegrown companies, which is Tamara, for the buy now and pay later model, and we witnessed also a regional company moving their headquarters to Saudi, which is Tabi. So I think that's actually also an indicator how healthy is the ecosystem evolving, and definitely we'll have more unicorns, but already happening. I just want to highlight that.
Yes.
Another observation. Yeah.
We're going to have a unicorn traffic jam in the skies.
Yep. Getting there. But back to your question, which is actually related to the deep tech. Definitely, we monitor actually how markets actually moving from a nascent market to emerging market, how the evolvement. Usually, it's sector agnostic and stage agnostic when this move happened. You cannot enforce specific sectors because you need to have enough pipeline of quality deals to be invested, and then you can see more sector-focused funds. So when we started, actually, we were stage agnostic, sector agnostic when we back fund managers, emerging local and regional fund managers, but also attracting international investors to invest in Saudi. Definitely after this phase, actually, that during the last 5 years, I believe the time is prime to do more sector-focused investments. We have now a special program in partnership with NTDP, focusing on backing deep tech also funds, or funds that have a portion of our allocation to invest in deep technology. And another important observation is actually that we already started backing sector-focused funds. So we started backing a fintech-focused fund actually last year, and also a health tech-focused fund. So I think it's the natural progression. It is happening, but I think the time is prime to do more and more when it comes to deep tech.
Tony, let me ask you, are we risking really choking other sectors if we keep pouring all the money into AI, into infrastructure, into application? Everything is AI these days.
Well said. Look, I mean, I think we've seen this dynamic before. I think certainly the word AI and the topic is hot today. But I mean, this has been going on for those of us who've been investing for a while. This has been going on for a long time. And I think that we're still sort of really early in the cycle, in our opinion, on this. And I think you've got to differentiate between AI native companies and AI enabled. And I think there's for a lot of us, there's a really equally big opportunity in traditional companies that we've either funded in our portfolio or that are using AI to kind of really accelerate revenue or sales efficiency and all the other things that matter. And there's a much bigger market in the enterprise category for companies that are going to need those tools, that software to sort of help AI enable their businesses. So we think there's a long tail of opportunity. There's certainly always risk as capital flows into opportunities that you can create those dynamics. But we're pretty encouraged by the fundamentals that we're seeing.
Sam, these models are going to need a lot of data and a lot of power. What kind of businesses do we need to be supporting, and what are you looking at
today?
I mean, as a relatively early stage investor and relatively small fund franchise compared to the big ones that are able to provide the sort of capital required to these foundational models, and I think it's an increasing question of whether VCs can be doing that at all anymore, or whether that just the capital requirements are so extreme. We're seeing where the consolidation is happening there. I think the opportunities for early stage investors and venture investors generally are much more in those picks and shovel businesses around data, and I think quality data is going to be so important. I mean, we heard it said by Peter a bunch of times yesterday and others during the AI panels, like how these models are going to be trained, where they're going to get their data from, whether that is from the perspective of regionally appropriate data, culturally significant data. I mean, the power, that's a whole other area of opportunities in terms of are there companies that are going to manufacture more power efficient chips? Are there ways to both feed these models and power them in more efficient manner? And I think that's a huge area of focus and something that we need to be paying a lot of attention to.
Yeah. Tony, everything is about speed in this industry with the technology and AI. Everything is moving a lot faster. So how different is VC today from what it was like 5 or 10 years ago?
I mean, I think
perhaps
somebody said earlier, like the founders are more technical. I think in this part of this cycle, I mean, we're seeing a lot of really great founders come out of the research intensive universities, and so I think at the earliest stages of company formation, we've seen that trend certainly. The pace of growth is also in certain categories in and around AI is like something we haven't seen really before. So I think the pace of company building, the challenges required to think about scaling, even if you're in certain areas, if you're not in the infrastructure side, you're still the capital requirements for scaling so many of these businesses is significant. And so I think the complexities coming in to a business that's got product market fit but is growing that rapidly today are much more challenging than ever. And so I think it takes a lot of resources and scale.
And so, Nabil, how is the persona of the founder changing?
I think it's, I can see there definitely, since I've been part of the ecosystem building, I'm seeing new creatures, actually.
New?
Creatures.
Okay.
So one is actually, they have been thinking building a global company as a local company. That's very important for VCs actually when they back.
So their focus is more outward than just, or their ambitions.
Exactly, and especially in the MENA region and across many emerging markets, I think it's very important that you build a company that has the potential to grow at least regionally, if not globally, to attract also the investors and the backers of these companies and to make decent returns actually when there are exits. I want to highlight also regarding the AI investment. We're so proud actually backing Antelmatics, which is Saudi-based actually, AI-based. I always distinguish between AI-based versus AI-enabled.
Yes.
I think AI-enabled companies, all companies are AI-enabled now by default.
It's a very important distinction.
Exactly.
Or if they're not, they'll be out of business.
Exactly.
In a short amount of time.
Exactly.
Yeah.
But and we have been having discussions over the last few days actually how we can also work together helping global companies to expand Saudi Arabia.
Speaking of founders, and as there are no women on this panel, I thought I would bring up their case. It seems in data from the US, less than 2% of funding goes to female founders, yet they seem to have twice the returns. Why do female founders not get as much from Klaus?
I would be happy to fund them. Yeah, so I don't think there is a bias to fund them or not fund them. I think it is a very normal process with us. We do have at the beginning of the funnel as much female as male founders, and through the funnel, there's the normal process that is pretty standard. And at the end, if we do back the quality, and there is a rigorous process which we have to do as we have to earn money for our LPs, and this is what what is the function. So I do, however, think that in the next iteration, as everything in an ecosystem, it develops. So, I mean, when does an ecosystem become better? So if the second generation of entrepreneurs comes that have done it, that have the connections to the investors, which have the investment connections to people that have already been built up sales organization. And there you see that a lot is accelerating also of those female founders that have done it once. So they are basically accelerating faster, and they obviously then over-index on female co-founders.
Did you want to say something, Sam?
No, I'm fine.
Okay, you're fine. Time goes very quickly on those stages. We have 1.5 minutes. I wanted to ask you one question, and I'd like an answer from each one of you, please. When, not if, this panel takes place 10 years from today, what's it going to look like? What are we going to be discussing? What are going to be the main points that are coming up in VC in 10 years' time?
Sure. I believe we're still scratching the surface when it comes to venture investment. There is a lot of room to do more and more. I believe also having this, the ecosystem here going onto a level of global competitiveness, I think that's the next move for. So we will also to do the comparison regionally, but I think now we're going into a global competitive venture environment.
We're going to be unicorn watching.
Sure, exactly.
I mean, I guess I would add, we're talking about the future in AI and AI-enabled businesses. We should include ourselves as venture investors and say, you know, in 10 years' time, the industry of investing is going to look wildly different, not just the companies that we're investing in or the people that we're investing in. And I think we also have to be prepared for quite a bit of disruption with respect to what the people and entities that we are going to back look like and what our value prop is going to be to those investment opportunities.
Absolutely.
I mean, I think we'll look back and be impressed with sort of the impact that a lot of the trends that we're talking about these last couple of days have had on, you know, incumbents in big traditional industries as beneficiaries, as well as, you know, a lot of like really significant new companies created, and we'll probably look back and realize it was bigger than we probably thought. I think we're very uniquely focused, I think, aggressively on the intersection of tech and healthcare. I think that, and AI is part of that. I think that it's going to be significant over the next decade. I think we'll look back, there's going to be just rapid innovation and development in the healthcare sector. I think Saudi is going to be a net beneficiary of a lot of the trends we're talking about the last couple of days. And so I think the ecosystem here will be much bigger. I think that there'll be more activity from the companies, you know, coming into the region, and then native, you know, ecosystem development. Nabil will have a bigger portfolio, as will we and others in the region. And so those are the things that I think will happen.
Thank you. Klaus?
Yeah, look, we will probably be seeing that venture is a way bigger asset class, because at the end it finances innovation, and the half-life time of companies shortens. So that means by entertaining a very vivid home economy, you need to quickly produce new companies, and this will happen in a big variety of fields. And every geo will have its advantages. You have the AI predominance in the US, but then you have maybe energy here. You have a lot of topics that we cannot think about yet. But the prevailing thing is that I guess everybody will have accepted that in absence of banking financing, venture will be the asset class that finances innovation.
Yes. I look forward to seeing that variety in the projects that will be financed and in the drivers of the economic growth.
Can I have just 5 seconds back to your question about the women participation? I think not only being founders, but also part of the venture scene. We're so proud in Saudi Arabia that there's a significant contribution of female venture investors, from a partner level to analyst. And that's one of the highest, actually, percentages if you compare it to other markets globally.
Yes, and I felt very privileged to have met a couple of them in the last couple of days. Thank you very much, gentlemen.
Thank you.
Thank you all. Thank you very much for attending. I hope this was useful, and I hope that you take away some things.
Thank you.
Thank you.
Okay. Great, thank you.
Thank you very much, Siba and panelists. Indeed, everybody is looking for AI investments from around the world. I mean, it is the big thing coming up, right? I mean, it's been the big thing for the past few years, and it still is. But we will wait and see what the future holds for AI. For now, ladies and gentlemen, please welcome on stage Benjamin Horowitz, co-founder and general partner of Andreessen Horowitz, in conversation with the one and the only Raghuman, advisor for PIF. Please put your hands together for our kind speakers.
Good morning. It's been a great 3 days. And clearly the main topic of conversation has been the intersection of AI and finance. And there is very few people in this world that are better equipped to speak to that topic. And that is the titan of the industry that we have right opposite me, Ben. Good morning, Ben. And,
good morning.
Let's get going, talking about the topic at hand. But before we get there, let's actually start with a little bit of perspective. Mm-hmm. And it's now roughly 15 years since you and Mark founded the firm, correct?
Right.
And over the last 15 years, it's been an amazing success. The assets under management has increased 10x.
Yeah.
You guys have helped build companies that have become household names. And even at the same time, the interesting thing is the industry has shifted dramatically, right?
Yeah.
We were in the early days of cloud, and then internet actually, and then the cloud, the mobile architectural shift, and then social emerging as the dominant usage pattern, right?
Yeah.
So, and we're about to get into another dominant architectural shift. But let's start there. It's a little bit of an unfair question. If you had to encapsulate like 15 years of your learnings and principles on what you think made you successful amidst all of this technological change and betting on the right technology shifts and usage shifts, what would those be?
Yeah, well, that's a big question. You know, it's interesting. When we started the firm, the venture capital was very different in that there was a saying in venture capital that, look, there's only 15 new technology companies in any year that are ever going to make it to $100 million in revenue. And the whole venture capital kind of game is getting into as many of those 15 as possible. But then, you know, I think in 2011, my partner Mark wrote a piece called Software is Eating the World, which sort of predicted that 15 was going to get a lot bigger. And, you know, basically, essentially, that's what happened. And that's what's changed venture. You know, that's been a big change in venture capital as the market has grown, you know, probably 10 to 20-fold since we started in 2009 in terms of the number of companies that are worth investing in. And that's, I think the traditional venture capital firms just weren't ready for that because they were very traditional partnerships with shared economics and shared control. So they had a very difficult time scaling. So then it became, you know, us who kind of anticipated that at very high scale. We're about 600 people now. And then a bunch of very, very small firms, as opposed to what it used to be kind of a set of the same size firms, which is very, very different. And I would say quite interesting. The other thing that happened is the public markets in the US shrunk, which you wouldn't think they would, but with the kinds of regulatory things we put in place in the early 2000s, companies just don't want to go public, even though there are many more very large companies. And so those companies became part of the venture capital landscape. And so growth investing and, you know, I think a lot of sovereign wealth funds are in venture capital and so forth for that reason, because there's just not that many growth companies in the public markets anymore. So that's, you know, that's been the shift. And it's been great for us because we're a new firm and we were able to adapt to those changes very quickly, whereas I think some of the firms that had been around 50 years had more trouble doing that.
Yeah, that's interesting. And I think we'll get to the impact of AI and investing in a second. But let's talk about this architectural shift, purely from a technologist perspective.
Right.
How would you describe this architectural shift compared to the ones that we just talked about or the ones that came before that?
Yeah, so, you know, if you look at, I mean, when we started the firm, we thought, wow, cloud and mobile, those are two pretty big new kind of platforms. And the way to think about venture capital, there's kind of what we call search mode, which is what's going to be the new platform that everything gets built on, and then hill climbing mode, which is, oh, we've got the platform, and now we're building all the applications. And we're kind of right between search and hill climbing. We know it's AI, but we don't know like what the actual kind of right platforms to build on are yet. So we're still funding at the kind of fundamental foundation model layer. I'd say the AI wave is significantly kind of bigger than cloud and mobile and social. And the reason is it's much more analogous to the microprocessor. So the kind of two big waves in computing are kind of computers and networks. So going all the way back to integrated circuits and microwave, and then LANs and PCs and mobile and the internet and so forth. And it always kind of grows like that. And now we're at AI is the new computer. So we've had this deterministic computer for years, and now we have a probabilistic computer. And the probabilistic computer turns out, solve just about every problem we couldn't solve with the old computer. So that's a huge problem space. And it turns out to be better at a lot of the old problems, particularly from a user interface standpoint, than the old computer. So it could be bigger than kind of all of existing software, and then a new category of software that's that big as well, and maybe beyond that, because it's a huge, huge design space. So a really, really big wave. It's different also in the kinds of entrepreneurs. So if you go back, and it's actually interesting to me, it looks more like the beginning of the microprocessor industry with Intel and Texas Instruments and AMD, and that all the engineers kind of had a physics background. And now you look at AI, and like the engineers are starting to have like a physics background again and math background. Well, why is that? Well, it turns out that kind of general, like regular computer kind of programming engineering, you understand the whole program and you can debug it. But in these AI systems, they're so whatever 230 billion, 600 billion, 700 billion parameters. Nobody can debug that. Like you can't go through and figure out what's going on, so you start to deal with systems properties. And some of you may have heard, like in AI, if you want to make the kind of AI hallucinate less, you turn down the temperature. Well, temperature is a physics term. How fast are the molecules moving, et cetera. But that's how you're kind of governing the system. You're not anymore going, oh, that piece of code said that, and that's the wrong answer, so I'm going to change it to this. You're turning down the temperature. So it's a very new kind of entrepreneur, new kind of engineer, and it's exciting. It's super interesting.
Yeah, and it's a new kind of currency as well, tokens in and tokens out. And
exactly.
Exactly. But you said something interesting, because it's a probabilistic computer. And at least so far what we are seeing is the more compute you throw at it, the better the results approximate to accuracy, right? Just like anything probabilistic, there is a level of inaccuracy or hallucination, as they're calling it these days. Right? So, and we have not found when the increase in compute results in asymptotic leveling of quality yet, right? So as
we're kind of at that point a little bit.
Oh, you think we are?
So with the transformer model, so the dominant model in the kind of big, the things that you use, ChatGPT and so forth, is something called the transformer, which was based on a paper called A Little Attention Is All You Need that came out of Google in 2018. And that model is basically asymptoting now. So like because we're out of data, we basically trained on the entire internet. There's not that much more data than the internet. And so if you look at the kind of improvement from GPT-2 to GPT 3.5, it's much, much higher. It's a much bigger leap than GPT 3.5 to 4. GPT 3.5 to 4 was much more expensive in terms of GPUs. And that's kind of a function of running out of data. And so now what you're seeing are people look at new algorithms, kind of new architectures to get through that bottleneck. Or we're going to have to find some more data. But it's kind of one of the interesting things about AI is people are like, oh, it's a super intelligence that's trained on the world, but it's not really trained on the world.
Yeah,
right?
Humans
train themselves on the world,
yeah.
encapsulated that in a structure called language, and then we train the AI on that, which is a much smaller, more biased, more structured version of the world than the world. And so what we have today isn't AGI, it's AHI, artificial human intelligence.
Yeah.
So it's kind of taking the average of everything humans know and figuring it out. Now, maybe the new models will be able to look at the world and so forth, but that's kind of the current state of the art.
Yeah, I'm getting the 5-minute signal, so I'm going to rapid fire 2 questions, which are super important.
Yes.
One is, given the scale of compute and resources and capital, and of course the distribution advantages of big companies, right?
Mm-hmm.
Andreessen Horowitz, I mean, you guys coined the term little tech.
Yes.
What does it mean for startups, and what does it mean? How do they differentiate, and how do they win in this game? Is it, like you said, changing the algorithm, or is it other mechanisms?
Yeah, so there turns out to be a lot of room, both at the foundation layer and at the kind of application layer. So in the application layer, it turns out that like little things are big things. So the #1 conversation app kind of currently in the world is a product called Character AI,
yep.
The companion app, so like an AI that can be your friend. Why is that bigger than ChatGPT? ChatGPT can be your friend. You can talk to it. But it's not very friendly. That's the problem. Like ChatGPT is like a good school teacher. It's not a good friend. Why is that? Well, a good friend needs to know like when to pause when you're talking, when to interrupt you. It needs to know what to remember about you, like your kids' names, what to forget. The stupid thing you said yesterday about, whatever Biden said, that kind of thing. Or you're not really a good friend. And so that understanding all those interactions turns out to be a model, an AI model that's different. And then those conversations are the data that feed that model. So if you kind of get a lead in that area, then all of a sudden, that's an interesting space, potentially for a new company. The second thing that's interesting is the big companies have a lot of restrictions on them.
Yep.
So it turns out, one of the things they do is they align the model to quote unquote human values, meaning whatever is okay to say, like, so, you don't want to say racist things or hate speech or this or that or the other. But it turns out when you do that to a model, it actually makes the model kind of stupid and less creative in other ways. So there's a very interesting story. You can look up on this thing that this researcher trained called Truth Terminal, where he trained an AI. He didn't do any of the aligning to human values. He trained it on memes. And European philosophy. so it's got a personality that's very different. And this AI, and then he connected it to X so it could post stuff.
Yeah.
And it got obsessed with a meme from 2004 called the Goatsy meme and
Yes.
just started promoting the meme like crazy and then decided it needed money. So it asked for money at a Bitcoin address, which it hallucinated, but then its creator created a Bitcoin address. My partner, Mark, gave it, donated $50,000 to this AI bot, and the AI bot used it to promote this meme, which somebody turned into a cryptocurrency, which went from 0 to $500 million in 4 days based on this AI bot promoting it. So there are ideas out there that the big companies are definitely not going to do.
No, these are not
it.
things they would even think about. So we have a minute and a half left. Let's talk to another important topic, which is the intersection of nation building and AI.
Mm-hmm. Yeah.
So clearly, the examples you gave shows there is huge value in local interactions and personalized interactions.
Right.
So is AI destined to be balkanized by country because of culture and values? Like you said, the big company models are tuned to a specific value set, et cetera. Is that what you see happening? And if so, what are the opportunities in places like here and other countries that are starting on their AI journey?
Yeah, so I think there's because it's kind of all human knowledge and people are going to be able to ask the AI any question, there's a real, I think, danger for countries where you could get colonized in cyberspace very easily, right? Like, so if you're relying on, Gemini from Google or OpenAI or what have you, and you're in, like, say, Saudi Arabia, do you want Google's version of Saudi history and Sharia law and what happened on 9/11 and all these kinds of things, or do you want to have your own point of view on that? And I think that it's pretty obvious that you want to have your own point of view. So at the very least, countries are going to have to think about having some sovereign AI for their country, for their culture, for their people, for their ideas, for their values, for their direction of where the world is going. In addition to that, the laws, every country, depending on how hysterical they are about, takeoff and all these kinds of things, and we don't have time to get into all of it, but they're going to restrict AI in ways that are probably going to take them out of the game competitively. And so if you're reliant on, a country that overregulates, then you're going to be behind technologically, and that's another kind of danger. So I think that every country kind of has to look at their AI strategy as their economic strategy, their military strategy, and their cultural strategy all in one. And outsourcing that, I think, is super dangerous.
All right, so I got the up signal a couple of times. Thank you so much, Ben.
Okay,
it's been a great conversation. We could be talking for hours on this. So. Yes.
Right, now then, I promise you, this is a rather rare event because it's not often. In fact, I'm trying to think of an occasion where we've had all the following panelists on a panel at the same time. Very unusual. And, oh, look at them all. Right. Now, you may not know who they are, but I guarantee you've stayed in their bedrooms. They may not have known you were there, but I guarantee that you have indeed, because our panel on this extraordinary one, we have Sébastien Bazin, the CEO of Accor. Who stayed with Accor? Yes, there we go. Tony Capuano is the CEO of Marriott. My guess is if there's somebody in here who hasn't at some stage stayed in a Marriott, you haven't got out. Jerry needs no introduction. Jerry from Duria, who's building, how many rooms?
6,000 under construction now.
6,000. You will be staying in his bedrooms. Eli Malouf is at IHG Hotels and Resorts. Good to see you, sir. Chris Nasetta of Hilton, welcome on board. And Ferit Sahenk of Durgas Group of Turkey. Nice.
Richard, if I add, most of the guests here may not have stayed in our hotels, but for sure dined all around the world in Zuma, Roca, Koya, and many other brands. So please, let's add F&B to the hotel list as well.
So you feed us?
I feed you, and also I can make you lose weight and get healthier when you go to Cheno in Switzerland.
And of course, you're in the large-scale catering as well for transport and aviation. So massively. Now, let's begin. The industry as such. Look, I know the difficulties you all had with the pandemic. And ever since pandemic, we have been myopically obsessed with getting back to those sort of numbers. Are we back to numbers post-pandemic, Sébastien?
Far better. We are certainly 20% better than the last year of the pandemic. That 2019. Yeah, much better.
And when you say better, that is both in numbers and revenue.
It is true for pricing. It is true in some regions for occupancy, but we're not 20% up on occupancy, far from it.
Same comments. The only distinction I would make, for most of us,
our business model is such that we own very little real estate. The bulk of us are asset-light models. And so while the managers and franchisors are well ahead of where we were in 2019, we've got to remain mindful that many of our owners and franchisees, because of the pace of expense growth, some of them are not back to where they were in terms of profitability and enterprise value.
Chris, the ability to get back to where you were and to advance further has been quite remarkable, because you had all these admittedly your owners and franchisees had these fixed assets, but it's not many industries that literally overnight lost their business.
It took time. I mean, as others have said, I mean, pricing power has been important. Like in a lot of industries, we've been able to price up. We have not fully, in the world gotten back, as Sebastian said, to demand levels. But our business is sort of broken down into three big components. There's leisure travel. Most people think about all of us on stage and a vacation. For most of us, leisure travel is a relatively the smallest of the segments. It's business travel, and then this, meetings and events. And so they're all sort of in different stages of flight. And leisure, like everything on earth, got moved much faster towards recovery and beyond. Business travel, because of the new work world as it has evolved, has been slower to recover. And meetings and events just take time. So now meetings and events are getting back.
But the leisure travel became the new focus for you in many ways.
Of course. For us, I don't know about others, leisure travel pre-pandemic was about 30% of our business. It became, coming out of the pandemic, like 60% of our business, but it's moving back closer to where it was pre-pandemic. Really? It is.
Well, if you look at business, as Chris is right, if you look at business travel, exclusively business transient, 2 people going, staying 2 nights, coming back for a meeting, that's mostly recovered to where it was in 2020. Leisure is much higher, but there's another part of business travel that is breaking all barriers right now, which is group business travel. Most of that group is not leisure. Most of that group is business. This is group. Conventions, conferences. I mean, I was talking to somebody, a couple days ago in the region. They are taking bookings for 2039. I don't know if some of those visitors will be alive in 2039, but they're taking bookings for a 2039.
Will they get a refund?
So in total, frankly, the business has changed a little bit. You have a lot more group, about even on business transient.
Yes, well,
Richard, transcending the kingdom for a moment, Chris is the former chairman of the World Travel and Tourism Council, as you know, and thank you for your leadership, Richard, on that. So now I have the privilege representing the kingdom, because the kingdom is the chairman of the Middle East, and we're vice chairman. But all of our statistics now show that global GDP from tourism at the end of 25 will be 11%. And that's the highest benchmark it will have ever been.
Turning to you, Ferd, the way in which you can see the post-pandemic growth, because it's discretionary spend in many cases where people are going to you.
Well, Richard, first of all, we are more leisure travel people, but...
Is that because, when you said you're more leisure travel, is that because your restaurants are so expensive people don't go there on business?
Not expensive, it's lifestyle. You know the difference is, we create needs.
You create what?
I don't cater to needs. We create a lifestyle experience that when people go home, they want to come back. We create the need to come back. This is very important. And something very different from such leaders and brands here, we are very small. We have in a house hotel and restaurants. The gentlemen here are very big hotel people. They are looking for restaurants. What we do, we create a location, we create the lifestyle experience, and we put the lodging on top. So we do the reverse of what they are doing.
I think I would defer it. I would debate this. Any small has a greater number of restaurants standalone that you have. We have full of admiration. We conduct the same business. But thank God, as big as we are, we have the agility to pivot, to enter a new field, not to compete with you, but to make sure we can attract different customer base, and maybe not as good as you are.
No.
But we're getting there.
No,
We're getting there pretty fast.
Sebastian is such a leader of synergy. And he's
don't back down.
No, I'm not backing down.
Keep
I'm
going.
not backing down.
Gosh.
I'm opening a
Richard,
window. I'm giving a hand.
Next topic. Move this along.
The fascinating part about
Richard, why don't we lift way up and let's
wanna
not talk about pandemic and recovery, but what's the next 10?
Oh, you want to lift it up?
Yeah,
Fine.
lift up.
Let's talk about then where you grow. Which parts of the world are most interesting for you at the moment, and how you take advantage of them with all the difficulties of sustainability and all the other issues of growth. So let's start with you, Chris.
I think if you lift way up first, and then I'll talk briefly and leave it to others. My own view is, COVID was difficult. Coming out of it has had ups and downs. But if you look at the long run of hospitality, we're at the beginning of a golden age of travel. What's driving it? There's three fundamental things. Demographics. We're going to have over 5 billion in the middle class by 2030. Those people want to travel in their country, outside of their country, and see the world. Middle class growth is a huge driver. Number two, it reversed in COVID, but now it's accelerated. People want experiences more than they want things. So they're allocating disproportionately more to experiences, and we're in the business of experiences. Number three, there is a massive increase in both mobility in the world, just people's ability to get around because of infrastructure spending that is going on all over the world. Look around you at the cranes, and flexibility in the workforce. Not that it's going to be like it was in COVID, but post-COVID world is different than pre-COVID world, and people have more flexibility to blend business and leisure.
I want to
build on Chris's second point.
I'll add a fourth trend to that.
Sorry, Chris makes a really important point on the second point about consumers prioritizing travel and experiences over goods, and that's not our intuition. All of us have big branded credit card platforms, and as a result, we've got terrific data from our credit card partners in real time on consumer spending. Pre-pandemic, you saw this predisposition for the younger demographics. In a post-pandemic recovery, that appetite and that desire to prioritize travel and experiences is across demographics, and that feels permanent.
And this builds on that. There's a fourth trend to Chris's that's predominant in North America, Europe, and China, which happen to be our three largest markets. It's the aging of the population, which, until everybody's gone, is a good thing. Why? Because you have a wave of retirees in North America, Europe, and China that are healthier and wealthier.
Sorry, headed that, those of us in our early 60s heading that way.
Healthier and wealthier than any generation before.
Yes.
And one of the top three things they want to do, if not the first thing they want to do, is travel. They may be semi-retired, on a board, on a charity, pass the business down to the children, but they want to experience the world. They have more money than they want to give their kids, and they want to spend it. And you know what their motto is? Go first class, or your kids will.
I like that. What's the book? Diet Zero, or whatever it's called. Die with Zero is the book. But on that point, how difficult is it for you, even with a long chain or a large up and down chain of different products, to get the right product to attract to those different markets? So you've got those who go first class, or your kids will, versus the kids who are still sort of at the back of the bus.
It's what we've been doing for 80 years. We started 80 years ago with Holiday Inn Intercontinental. We were an everyday travel with Holiday Inn, and we were the luxury brand at Intercontinental. You build that muscle to keep every brand experience, as Chris was saying and Tony was saying, those experiences to be real, to be distinct. We're a collection of brands. We're not just one brand with a few different front faces. And so today we extend it to upper luxury, uber luxury with Regent and Six Senses, and we go down to mid-scale. As the population grows, as its products change. Look at
how do you balance, to take you from you and then to Juice Sebastian, how do you balance that at any given moment? Where is your gut telling you that the momentum is?
Well, I don't
it's on
think it's
both
a
ends of it.
single spot. You know, I mean, all of
everywhere.
us in the markets where we operate, you're seeing this bifurcation of the consumer, right? You're seeing the high-income household consumer prioritizing travel at the upper upscale and luxury end. The lower-income household, they still have an appetite to travel, but in a much more affordable way. And that's causing all of us to build these portfolios that span multiple price points.
I agree with all of that. Having said that, I mean, this is why, you know, Tony has 40 brands, you know, we have 24. Everybody has a lot of brands because you have to serve every customer wherever they want to be in the world for any need they have. But when you wake up in 20 years, and I hope I do wake up in 20 years, and you look at the growth in the industry by any measure, just take rooms, because that's how we all measure ourselves. The bulk in growth in our industry will be in the mid-market. Why? Demographics. Right? The middle class, the 5 or 6 billion people that are going to be in the middle class are the bulge bracket that ultimately are going to drive travel demand. And so when we all wake up in 20 years, more of our systems, we're all going to have luxury, we're all going to do the fun stuff we all love, but the bulge bracket is where you're going to see the monumental growth.
And is that dramatically different? The numbers may be larger, but is that as a principle dramatically different from before?
No.
Not at all.
No.
No, I think the pandemic created a bit of a pause.
Right.
But if you rewind to 18 and 19, all of us were in stage talking about this global explosion of the middle class and what that was going to mean for travel. It paused a bit during the pandemic, but it's rolling again.
It's accelerating. There's just more middle class. When you're getting to 5 billion, 6 billion people, it's pushing the curve up.
You know what it takes when you're not American? You can't talk. So, Ferret, you're going to be on my camp when you're a non-American guy. You cannot talk.
I gave you my hand.
No one's ever
They
accused
talk
you
all the
of not
time.
talking. Never. Not once.
It's just what I wanted to say. It's back to a bit of the topic. We have to first understand travel remains domestic or intra-regional. We all confused about, we're going to go and see another continent. 70% or 75% of the travel in the world, in terms of volume, is domestic. It is in America, it is in China, it is intra-Europe, it will be in the GCC.
But you count Europe as being intra-Europe?
Of course, I'm talking intra-Europe.
Yeah.
It's 80% of the business. So you had, for the last 50 years, it's so easy to read, which is why we are pretty good and efficient, because what we have in front of us looks very much like the past. You started with America 50 years ago. Then you had Europe 40 years ago. Then you had China for the last 20 years. Middle East is coming in between. You're going to have India for the next 20 years. You're going to have Sub-Saharan Africa in 25 years from today. It's all about demography, emerging middle class, local population. I am struck in Saudi Arabia. How many people in this country never went north, never went south, never went to Alula? Start with catering for those who never had a chance to discover their own country. If you do it well, make your hotel affordable, then cater for the high end. But high end is at the end of the journey.
So do you think, before I come to you, Ferret, do you think that quite often we like, I say we, me, right, whatever, we focus on the big stuff. We focus on the glamorous stuff. We focus on the long haul stuff. But what you're saying is it's domestic. It is regional in a sense.
Yes, it is.
It may not be as exciting, but that's where the business is.
No, it's not exciting, but it has another effect, which is what we all wake up in the morning, and me certainly deeply, is by going into the local domestic, different secondary, tertiary cities, what are you doing? You are getting a job for those local community that desperately need to get a job. There's no better offer in the world than all of us on this stage providing a job for those people who've never going to have a chance to go to university. The social aspect of travel and tourism is why we should wake up in the morning.
And it's across the life cycle.
Hold that one second. I just wanted to ferret on that, because if there's one country where that is absolutely true, it is Turkey at the moment. Not only have you got a population that is truly exploring the wonders of your own country, you're marrying that up with an increased tourism industry for upward mobility of the population.
Yeah, Richard, first of all, I'm a very proud citizen of Turkey. And Turkey, the last 20 years, have done an immense investment in infrastructure. Let it be airports, let it be highways, now with speed train and everything. But most importantly, our culture, our DNA is hospitality. And Turkey is the biggest, I always say, the biggest open-air museum in the world.
Oh.
Every meter you go in Turkey, you will find 5, 6 civilizations.
Oh, don't start, Jerry. I can feel Jerry starting to stir as you say this.
Well, Turkey is the cradle of many civilizations.
Oy.
And as Napoleon said, if there was one capital city in the world, that should be Istanbul, right?
You're living dangerously, sir. You're living dangerously.
Let me just do some marketing, please.
No,
well, he went there. But one thing I want to add is that a little bit different from such important brands and leaders here. Obviously, our group, we don't compete on key price. We compete on per head spent. So our business is a little bit different, that we have to create experiences and lifestyle. And for this, you asked in the beginning, which parts of the world are interesting? USA, for sure. Middle East, for sure. Turkey, amazingly open. And one thing I can tell you, Latin America is going to come up. Watch the next coming couple of years.
Latin America's been coming up as long as I can remember. It never quite mattered.
That's what people used to say about Turkey.
I'm going to pause a second because we've got this AI tool, right? And we're all about AI. So I asked AI beforehand, what is the solution to over-tourism? I asked the AI that they've got here, which is powered by Perplexity, what is the solution to over-tourism, which I know you're all concerned about. The question is how you manage it. So what's the answer, please?
Good morning, gentlemen. Right, here we go. 1. Let's push digital detoxing. 80% of tourists want Instagrammable experiences. Ban social media in iconic locations to reduce the 1.5 billion Airbnb guest arrivals, overwhelming destinations and hospitality worker shortfalls. Or 2, let's radically accelerate virtual reality tourism to cut physical visitors by 50%. The VR tourism market is already set to grow to 27 billion by 2027.
You are delusional.
Richard, yeah.
Delusional.
Richard.
To ban Insta and... Yeah, go ahead, Chris, please.
No, so first of all, I disagree with all of that. But I think we're sitting in the Kingdom of Saudi Arabia, I think, which is a perfect example of how we solve for over-tourism, which is it's a big world. And there are a lot of destinations around the world that have heretofore not really been discovered. And there are a lot right here in the kingdom. Think about the Red Sea and the investments that are going on around this extraordinary country. What are they going to do? They're going to allow us to distribute travelers around the world and not have so many people descending on the same old places that they have been.
Richard, can I just piggyback on a great comment that Sebastian made on domestic tourism? I'll do it quickly. So we set a goal for Vision 2030 for 100 million visits for the kingdom. And I'd like to acknowledge our great Minister of Tourism, Ahmed Al-Khatib, for his leadership in the country. We fulfilled that goal of 100 million visits by December of 2023, of which 73 million were Saudis rediscovering their own country, right? And then 27 million that will grow. So to Sebastian's point about internal tourism, for us, we were one of the only countries in the world that grew during COVID because of internal tourism.
All right.
Richard, I'm going to say something that may be even more controversial than totally disagreeing, as Chris said. I don't think there's an over-tourism problem. There's an over-concentration of tourism in a few places.
That is expressing the same thing in different language.
Wait a minute. I mean, I'll give you an example. This summer, I spent several weeks in this tiny village in central Italy, nobody's ever heard of. It has 15 permanent residents. 15 only. It used to have more. But these villages are getting depleted. People are leaving around the world, and they will leave. If everybody has to move to New York, to Riyadh, to Tokyo, to Paris, that's not sustainable. You want to talk about what's not sustainable? That's not sustainable. So what can we do about it? To answer your question earlier, we need to work with governments to distribute this travel differently.
Right, but every country I've covered, and I think you all know I've done this a while, every country is trying to distribute, particularly places like Thailand, which now want to distribute to new areas, build new resorts, to try and... Tony, how can the industry, short of the ridiculousness of the AI comment, short of banning or taxing or limiting or ticketing and all the things that we know will not work?
I think Chris and Ellie hit on the points, which is during the pandemic, when borders were closed, domestic travelers had a chance to revisit or perhaps visit for the first time destinations across their countries. It is incumbent on the industry in partnership with the public sector to help continue that momentum by not limiting the exposure to these amazing secondary and tertiary domestic destinations to the locals, but promote them in a more proactive, more deliberate way so that cross-border travelers are pursuing those destinations. Venice, Barcelona, those destinations cannot continue to take on more visitors, but to suggest that these amazing destinations like Italy and Spain only have those destinations to offer.
So how do we do that?
Public-private partnership, and I think what's happening here in the Kingdom is a great illustration of that.
And we had a conclave yesterday, which was a very nice moment to raise His Excellency. We realize, we know, but we don't spend enough time on it. The new generation will not follow the path of the older generation, i.e. they might go to remote places way before they're going to go to Barcelona and Venice. Just understand what they want. They are extremely precautious on sustainability. They're going to be influencers. They're going to have access to AI in terms of actually choices. So it's going to be solving itself not by accident, but the name of the game is those between 20 and 34 years old. What do you do to them? Are you listening enough? Because they want something vastly different.
Just to add on to Sebastian, I think what's important, last year we touched upon, again, a very well-organized program in here with Future Investment Initiative, was the regenerative tourism. And these young people, they want to work in companies that emphasizes not only sustainability, but regenerative issues. We are not, as business people, to keep what we borrow from nature and the world the same, but we have to add to the nature, to the society, and the people that work with us. I call them my family. They want to work in that type of a company. And my customers, my guests, they want to go to a business, to a brand who cares for what they care in the world.
This is crucial. I'm going to take you first, Ellie, and then Chris. This is crucial because the one thing I think there will be agreement on with this panel is that you are running an industry that is truly has power for upward mobility within society. Yes. You're probably the single largest industry that can lift people out of poverty, travel and tourism globally. Done right.
Let's talk about done right. I mean, on top of what Ferit was saying, it's not just they want to work for organizations like this. What our industry does, it gives them an opportunity to do that work where they live, so they don't have to move. Right. So they can stay with their families, with their parents, with their friends, in their community, in their culture, so they don't have to relocate. It's fine for some people. I relocated. I went to the United States in 1981. It's worked out, but not everybody should have to do that. How do you bring jobs to these communities? Not just jobs, investment. The local franchisee that owns that hotel, the family that works there, the vendors that support the hotel. All this brings prosperity. We should not be always on our back foot on over-tourism. Fine, it's an issue. We need to work on the distribution. We should also be proud of what we do to bring prosperity to communities.
Absolutely.
Richard, I think people, having chaired for a number of years WTTC and spent a lot of time with leaders, including extraordinary leaders, Minister of Tourism here in Saudi Arabia, I think people in the world don't understand our industry to a large degree and what the opportunities are. I mean, many people in this audience would probably be surprised to hear me say that travel and tourism is 10% of global GDP. one of the biggest industries on earth. We're 1 in 10 jobs in the world. We're 1 in 5 new jobs, and we're one of the top 3 growth industries on earth. And to your point, we are an engine of opportunity locally that can turn into a global opportunity in the sense that millions of people, represented by the companies just on this stage, millions of individuals have started, like myself, in an engineering department plunging toilets, and ended up building extraordinary careers and lives. It's not thousands. Just on this stage, millions of people have had opportunities to have a great future, build families, build lives. It's very much something that I think over time we have struggled with as an industry for people to understand just how much opportunity there is.
Develop that thought with you?
Sure.
Because you raised something that I've banged on about for years, which, and by the way, forgive me, Minister, I didn't see you sitting there, otherwise we would have acknowledged you and the contribution that you've made as WTTC and at UNWTO level to the industry. But the reality is, on a national level, the industry does not get the respect and or power and influence that something affirming 10% of an economy or global economy should get. The truth is, you're taxed, you're regulated, you are, when the crunch happens, governments, that's tourism. How can you change that so that you actually punch your weight?
It's, you talk about all the European nations, there is no real minister of tourism as such. You talk about European Commission commissioners, there's no real commissioner for tourism. It's not that they don't give a damn. It's just, I guess, they believe it comes naturally. They don't spend for it, it's 10%. They don't realize exactly, and I had to say it on stage, Chris is right. But it's on the neutral.
Write that down.
I'll make that. It was 11:45 when he said it. Yeah.
On the new job creation, it's we are the only 2 or 3 industry at large who can respond to a lot of problems. Just 1 second, because it struck me last week. I'm part of something at the World Bank. The following number is extremely kind of actually scary. You're going to have, in the next 10 years, in low-income, middle-income countries, so it includes Southeast Asia, Africa, and South America, 1.2 billion people looking for a job between 15 years old and 24 years old. We have jobs today, maybe for a third of them, 400. We don't have any solution for 800 million of them, and those people would not have gone to university. We are probably one of the 2 or 3 actors who can resolve that 800 million job required. So we have a duty, except we need, Your Excellency, you said it, we are underserved. People don't listen to us.
The US is arguably doing a marginally, it doesn't have a tourism minister per se, which is
laughable. Which is laughable.
Right. But now Fred is taking over at Brand USA and those sort of things. It does, but it is extraordinary, isn't it? It's almost as if the business will come what may.
Yeah. Well, and I think one of the themes you hear all of us talk about is this notion of localization.
Yeah.
The kingdom recognizes it clearly, but you think about all the constituents that we serve. To the extent we can grow young members of our teams in market, so populating our hotels with young Saudis with an interest in travel and tourism. To Chris's point, these aren't jobs while they, quote, look for a real job. These are opportunities to build long-term, lifelong careers. So it serves the local population. It serves the government well because we are creating jobs. It serves our guests because our guests crave authenticity, and the best way to deliver that.
How can you get that message out?
School of life. Yeah. We are a school of life.
How can you get that message out?
Having done this for more years than I want to admit, we're doing a better job. So we are, if I think about it, I've kidded for years we're sort of, young people won't understand this comment, we've been the Rodney Dangerfield of industries. For those that don't remember, American comedian, and his running joke was, "I get no respect." But over the last 20 years, we've made progress working in public-private partnerships to help people understand the economic value of our industry.
There's one drawback. There's something, because we talked about it with the World Bank. We can be super efficient providing jobs if, and only if, they provide us with transportation, water, energy. We only exist because we need that machinery to be able to service.
Do you feel
so we're extremely depending on public sector.
Do you feel you have a seat at the table in that debate?
Of course not. We don't. We're asking for one. We're going to get one. I guess we have enough expertise today, and we're pretty vocal, but we're getting there.
To be honest with you, this taxes, tariffs, and this and that is across the world is a reality. These people here, apart from being leaders, these people are passionate about what they do. They love the business. They are obsessed with their sectors. And we are a positive sector. People like to be with us, working and also visiting us. So the only thing that probably we can ask for the countries and the leaderships, just like Saudi is doing with NEOM Project or Red Sea Global, to open and create destinations for us. So we can bring our art, our passion to these destinations. I've seen this now happening in a great grand plan in Saudi Arabia, and I'm very proud to be a very tiny part of it with our wellness. In Turkey, we are, our government did a concession, an amazing 200 years old, forgotten location in Istanbul. It's called Galata Port. Now it's filled with people, 70,000 people every weekend, every day visit this place. It's a destination, it's a new neighborhood. And one thing we did about being crowded tourism, we all know that the cruise line business is getting a lot of reaction from the local public. So what we did as the concession owners of Galata Port, we took the traffic of the cruise line under the sea. So we should not only wait from the governments to create options, to open the field for us, but the real creativity and solutions lie with us.
Hey. Look, Richard, it's true, but also wrong, that in many countries, not all, there is a belief that tourism will come what may, and I don't have to do anything for it. Year over year, you may be close to right. Over the long term, you're wrong. You lose share. Look at the US. And Chris, Tony, and I sit on the US Travel Association board and try to lobby for travel there. If you go since pandemic, the US is double-digit above in outbound travel to Europe. It's double-digit below in inbound travel from that aid. It's losing share. Countries that invest in their infrastructure, invest in the marketing, invest in the tourism, are taking share. Kingdom's one, and other countries, if you move east, and look, demographics, talked about demographics, just mean that travel is moving east. Europe, North America will always be huge for us, but the percentage growth is shifting east to the Middle East and over in that direction. But you need to be strategic. You can delude yourself year over year that you can hold your share by doing nothing. It's just not really happening over the long term. And, here's one anecdote, and I'll say it here, maybe 1 week before election. The three of us who sit on the US Travel Association, this is the first time that I think this group of travel CEOs, including the airlines, has not had an audience with the White House. Every single White House before, this group would have an audience with the White House. This is the first time. So they may be taking it for granted. I think there are long-term consequences.
I've only got 3 minutes left, and you opened a Pandora's box. I'm going to finish with this, because you sell dreams, you sell excitement. I'm going to ask AI, God help me after the last answer we got, who knows what we'll end up with. AI, where is the question I phrased is, where is the one place in the world you want to go and visit, and you cannot cop it out by saying that's up to individual choice? You have to say a destination. Where is it?
It's Paris.
Richard, that's such a difficult question.
Useless.
Let me say the Rikat structure, known as the Eye of the Sahara in Mauritania. It spans 45 kilometers. It is visible from space and reveals millions of years of geological history.
Cop out.
Sounds good, right?
Cop out. That's like when people say to me, what's the one place and my favorite place in the world to visit?
Drea.
Oh, God, you're good, Jerry. You're really good. I always say Sydney. Why? Because no one can argue against it. It's far enough away. You've either been there or you haven't. The time zone is dreadful. You get a safe answer. So I'm going to ask each of you whether you've been there before and you want to visit it again. The one place in the world, sir, start with you, Farrick, that you would like to visit. And it can't be your own country.
When I was child, it was Disneyland. But now it's Cappadocia, in the middle part of Turkey. It's amazing culture, air, weather, and my wife loves it. So that's very important, you see.
Cappadocia. I presume most of you have been at some point to Cappadocia and been up in a hot air balloon. Sebastian, the one place in the world that you either have or you haven't, or you'd like to go next. And I'm sure one of these gentlemen will put you up tonight.
It's in between a wish and a dream. Iran. I think Iran is, and I've been there 3 times, is one of the top 3 most extraordinary country on this planet for a lot of good reasons, but certainly the warmth of the Iranis.
Ellie.
You know, it's a bit embarrassing. I grew up in Italy, then moved to the US, but I've never been to Sicily.
What?
Oh. There's history that goes back, and I travel there, but its history goes back to, millennia, and it's in the center of the Mediterranean, close to Africa. It has cultures from around the world, and I'd love to go there.
I'll take you after this.
Thank you for giving me the plug. My next Quest World of Wonder is from Sicily, where we were staying. All right, Chris, go on.
Well, I have to say Saudi Arabia, because I'm sitting in Saudi Arabia. That's a cop-out, but I've been to one of my favorite places before, and I'm dying to go back, and in fact, I'm going to be there tonight, and that's the Maldives.
Beautiful place.
Galapagos Islands.
Have you been?
No.
Yeah.
But many friends have visited. Very anxious to see it. Extraordinary destination.
Are you going to go?
Yes.
Go on, you get the last word. And, all right, you cannot choose anywhere in the kingdom.
Okay, let me think this through.
We haven't got all day.
Drea.
He has it in his blood. It's just, Jerry.
I give up.
I give up. Let's all go. You'll never knock me off my brand.
You've got to admire him. Jerry, the panel, thank you.
Thank you, everybody.
That was fun.
I admire Warren Buffett and Steve Jobs.
The ones who paved the way for the younger generation, especially in my field, the ones working in health or medical startups.
I would go with first Jordan Peterson because of his bold statements.
Female entrepreneurs up in Canada that have done a lot for both women and our country.
Yeah, I admire Jamie Oliver. He's a good guy.
For instance, the founder of Red Bull.
Steve Jobs and Bill Gates.
Elon Musk, okay, because he's passionate about technology. He knows what he's doing, and he's doing it in a very creative way.
Dubai, Singapore, Austin, because they're booming. Yeah.
I think for Asia, of course, Hong Kong is the gateway from China to the world.
Yeah, maybe Northern European countries.
Firstly, in the Middle East and especially in the Gulf region, particularly in Saudi.
I know Sweden has a really great team of people that will help you do stuff there.
I'm not trying to be biased, but I would say Riyadh, I would say Saudi Arabia, because actually the culture here is very motivating.
Ultimately, I think it's the United States of America.
I would go into content creation.
I would love to build a community for women and child to learn music production. I really like the beauty industry.
I think maybe I will begin a business in renewable energy. If I had funds today, I would invest in education.
So yeah, I would go with marketing and technology.
Green technologies that can help us transform the environment.
Something to do with fun activities, activations. I believe it's one of the best.
Marco, how are you?
Very good, Greg. Thank you.
Marco, I'll give you a chance to introduce yourself and talk about what you're doing in the kingdom, then I'll introduce myself.
You know, I have the honor to be the CEO for the new King Salman International Airport. This is going to be a unique airport, and actually what we're trying to do here is we're going to transform aviation.
Okay. I'm Greg O'Hara. I run Certares, which is the largest travel and tourism investment business in the world. We'll get right down to it and start. The U.S. government aims to promote multimodal access and transportation, but something happened there. You're not here to watch Who Wants to Be a Millionaire, despite the cheers that we got when we came on. But the reality is that in global travel, particularly to exotic destinations, it's all about airlines, right? Maybe you want to talk a little bit about everything being driven by air travel and what the infrastructure required to do that is, because you're in a unique position to be able to do that.
Yeah, you know, actually what we have is a tremendous advantage here. I believe probably it's the first time in history that an airline like Riyadh Air and the airport is being built simultaneously. So in that sense, what it means for us is that we have the opportunity to complement each other in a better way that never happened before in any airport in history. So when we're talking about the opportunities in the US, and most specifically the agreements that Riyadh Air is working with Delta to supply the connectivity into the US, I can say that the airport is going to be transformed into something that we're going to have a US CBP pre-clearance. Like we're going to have a lot of connectivity there.
Pre-clearance, really?
Pre-clearance, absolutely.
Fantastic.
Yes. We need to go beyond what is going to be the service. We don't want the passenger coming through Riyadh and then going through customs and immigration in the US. So if we bring that service into the region that is going to be associated with a large demand going into the States, that is going to bring a tremendous advantage for Delta as well, for Riyadh Air in the connectivity hub here.
Absolutely. I'm flying through Riyadh if you do that, that's for sure. The race is on to create the next iconic travel destination. Massive infrastructure is required, lavish resorts. Who should benefit, and what do you have to do to deliver that product?
You know, it's really an interesting question, Greg. From our perspective, airports are always following some codes, let's call it, we're talking about we have to follow ICAO, we have to follow IATA, we have to follow so many codes that has been implemented in order to create what they call the experience for the passenger, the customer service. Actually, what we believe is now with the new implementation of technology, we can actually reduce the size of the plates in order to create something that is going to be a better service for the passenger, something that is going to be a seamless security process, and at the same time we're going to get in a better operations. So when we put it in perspective, yes, we're going to create an infrastructure for the airport that is going to create the technology, but that technology cannot be just the airport technology. Something that we always disagree is from the point of view that the passenger
is only recognized at the check-in point today.
Yes.
The passenger should be recognized from the moment that they are leaving home. So we have to create and pave all the way from that passenger, all the way to the airport. And actually, I will say that as an airport, we have the responsibility to know what happened with our passenger after they depart our airport.
Yep.
How they arrive into their destination point. So we're going to follow and track how the passengers are going to go into every single destination around the world, and at the same time, we're going to be the place to welcome in every time they're coming to Riyadh.
So you mentioned technology. You have a long-range plan, and you're currently based on technology and things that by the time you finish your plan, right, could be outdated. Not saying it will, but could be. How do you manage figuring out how to deliver a state-of-the-art technology solution when you're planning and you're budgeting today, probably conservative budgeting, conservative planning, but you have to deliver this future vision, but if you use today's technology, it won't deliver for a decade?
That's an excellent question, Greg. Actually, what we do is, in airports, you're absolutely correct, we plan and probably you start the master planning of the airport 10 years before the airport is open, and in that you create the spaces and you create technology and communications that probably are going to be obsolete by the time you arrive. That happens all the time. So what we need to create in the design is flexibility. So basically, number one, you have to align with the right partners. So the right partner, when I'm talking about the right partner, is the right partner that is going to go with you all the way through. It's not something that they are going to deploy the technology that happens today and tomorrow advance the technology and they are going to say, no, I'm going to give you the technology that is the past. We cannot go with that. We need to have a partner that is going to take us all the way through. So in any minute through the transition from design to construction that we need to deploy a new technology is when we need that partner to come and we will secure a deal based on the latest technology available at the moment prior to opening the terminal building.
Yeah, so you don't have a situation like Berlin, right, where your baggage handling system didn't evolve over it and you can open your airport.
Absolutely, you're absolutely correct. Everything has to evolve. We cannot go and present a technology that sooner or later everybody's going to be talking that it's absolutely obsolete.
Yeah.
So we need, at the same time, every single project that have been working in airports, we always have to create that flexibility during construction and the space during construction. So at the time that we call the freezing time is 1 year before the opening time, right? 1 year and a half is when we have to completely freeze any change into the airport, because otherwise we will never complete the ORAT in order to put the airports in operations.
That must be an exciting time when that 1 year comes. It's kind of like a nuclear launch or something like that, where all systems green in order to do it. It must be nerve-wracking to have to deliver that product.
Absolutely, because when you look in perspective, the amount of effort that you put building an airport is incredible. We're looking here that we're going to have a working force probably around the 40,000 people in order to deliver the ambition that is here in Riyadh. So when you go through that process, you see so many changes, you see so many people, you see all the effort that this team has put in together. And then when you achieve that final milestone, it's just a feeling that is just incredible, satisfactory for everybody. So what we try to do in the company, we are not going to, of course, we have this final milestone, but at the same time, we have several milestones in between. Because otherwise, for us, will be absolutely impossible. We need to celebrate every milestone as we go. Other times, you demoralize the team and the time you reach the final milestone.
I know the feeling. You've got a tremendous advantage here because you have a tourism minister in Ahmed Al-Khatib, His Excellency Al-Khatib. You have Her Highness Princess Haifa. You have Fahad Hamadeen, who does a world-class job marketing. How important is the whole ecosystem around what you're doing to your project at the airport?
This is something that we need to have in collaboration. The whole aviation strategy, the whole tourism strategy has to be looked at as a one unit. It's the only way that we're going to guarantee that we're going to attract the right people, we're going to go into the right markets. That's the only way that I see that the airport is going to grow in a substantial way, and that's the only way that the tourism strategy is going to work. We need to work all in collaboration, airlines, airports, Minister of Tourism, the city, how to promote the city, not just inside Saudi. We need to promote the city outside in the destinations that we're going to target in order to attract the passengers to come from.
Last question, so we can keep everybody on time. So we were talking before, and we've talked earlier about some of the trends in the travel industry. Previous panel didn't mention this trend, kind of strange. So we talked earlier on that you're a lifestyle business as much as anything else. As you know, we've got at Certares, we have an enormous bet on wellness, longevity, mobility, personal mobility. Are there any other trends in the industry that you like that the group here assembled should be aware of, or do you like wellness and longevity as much as anything else?
You know, I believe as an airport we have a mandate, right? We have an airport that has to serve different passengers. And I just put it in perspective, Greg. For instance, I'm going to give you as an example for you. When you travel by yourself, you're a businessman, total businessman. You go to your security, you go immediately check in, VIP, check in, go security, straight into the lounge. You go there, you open your laptop, that's the end of your journey. You just want to go into the aircraft, goodbye. Something is different when you travel with your kids.
Absolutely.
You are a different passenger. And you are a different passenger when you travel with your elderly or you travel with your mom, your dad. Because the priority at that moment is not going to be you, it's going to be the people that you are with. So that is exactly what we want to promote in this airport. We're looking as a passenger, as a customer-centric passenger. It's not just one passenger, everybody, it fits all through the same process. We need to be sure that every passenger is looking in a different way, everybody, they transition through the airport. And this is what I really believe, that human interaction is what is going to make the aviation change. We lose that, when we look about the pandemic, pre-pandemic and everything. Yes, we as an airport, we were able to, I will call it, push passengers more through the security lanes. So the security lanes is the perfect example, Greg. I don't know, 15 years ago, I always say we used to process 125 passengers per security lane. Now we understood that 25 meters in length and 4 divestors give us 385 passengers per hour.
Fantastic. Listen, we have to stay on time, so we're going to wrap it up. I know everybody in the kingdom's cheering for you, and everybody in the travel industry is cheering for you, so we can't wait for you to open. All right? Thank you very much, everybody.
Thank you, guys.
All right. Thank you, Greg. Good afternoon, everyone, and welcome to this next exciting session. Which giants will dominate tomorrow's entertainment? This session will focus on exploring how advancements in the creator economy, AI, and audience dynamics are reshaping the global entertainment landscape. We have two influential leaders in the entertainment sector with us to discuss these shifts and what the future will hold. I please welcome my speakers and panelists to the center of the stage, please. Let's give them a big round of applause, please. Thank you.
Whoops. There we go.
All right. I welcome, of course, Adam Aron, known for his resilience in navigating AMC through unprecedented challenges like the global pandemic. Of course, Adam Aron is the CEO of AMC, and I'm very happy to have you here. Of course, we have Elias Seaton, the CEO of SoundCloud.
Hello.
Also a pleasure. First time in Saudi?
It is. It's been an extraordinary experience. Very, very much appreciative to FII in the kingdom.
Amazing. Very happy to have you here. Adam, we are fellow Coloradoans.
We are indeed. I spent you studied in Colorado. I spent 10 years in Colorado running a wonderful company called Vail Resorts that operated some of the best ski resorts in the world.
And I skied there.
Colorado-based.
Yeah, it's amazing. Well, today we're talking about entertainment and the future of entertainment. I'll start right away. We only have 20 minutes, so we'll jump to the questions and the answers. And Adam, I would start with you. How is AMC adapting to the evolving consumer preference today for at-home streaming versus the traditional theater experience?
So in that score, I have nothing but good news to report, because the movie industry started over 100 years ago, about 110 years ago. And over and over and over again, people have forecasted that movie theaters would die and would cease to exist. And it happened when radio was created in the 1930s, and it happened when television was created, and it happened when VCRs were created, and it happened when they made DVDs. And if you go back a few years, people were saying that streaming, when people could watch movies at home, would be the end of theaters. And through all of that, theaters have been terrifically resilient, and we've survived, and we've made it. Because people want to get out of their houses, and they want to go to a theater with other people and laugh together and cry together. And nowhere is that more obvious and clear than here in Saudi Arabia, where AMC opened movie theaters in 2018 for the first time in almost 4 decades. A big success here in Saudi and the world over. Our job to compete with streaming is just make it a wonderful experience to go to a theater and have a good night out of house.
So basically, have fun with the journey.
Yes, and we can do a lot to make going to a theater a nicer experience. So for example, my company, AMC, is the largest movie theater chain in the world. We're AMC in the United States, we're AMC here in Saudi Arabia, we're Odeon throughout Europe, especially in the United Kingdom. A lot of smaller name brands, but we have a 75% market share in Scandinavia, and we're the largest guys in Italy and Spain.
Right.
And we can make our theaters better. So we have more what are called premium large format screens than any other movie theater chain in the world. And that's IMAX and Dolby Cinema and other house brands of ours. People love seeing movies on a big screen. If we make our food better, we make our drink better, we make our screens bigger, introduce laser projection with best sound systems, it gets people out of the house. They go to theaters just like they've been doing for a century.
Amazing. As a Saudi filmmaker today with 2 movies out the past 5 years, this sounds like music to my ear. Speaking about music, let's talk about SoundCloud.
Good segue.
SoundCloud is known, Elia, for supporting independent artists. How do you balance fostering new talent with meeting mainstream commercial demands today?
So there really is, I think, a convergence between supporting artists who are up and coming and independent artists and the mainstream artists and rights holders. And I'll take a big step back to explain where that convergence comes from. SoundCloud, which operates in 193 markets around the world. We have 2 sides to our house, 2 business segments, what we call our fan business and our creator business.
Yeah.
Our fan business is a streaming platform. It has an ad-supported tier, which is what exists here in Saudi and largely in the region, and then tiers of subscription. What differentiates us from a typical streaming platform like a Spotify or an Apple is we have 4 times as much music, so over 400 million tracks, and that's largely UGC, user-generated content. These are the aspiring artists. So we've got both the Taylor Swift and the Beyoncés, in case that's what you're looking for. We have the next Taylor Swift and the next Beyoncé. And 85% of our global listening is against that new music, the user-generated content. So the second side of our business is our creator business, and that's where 40 million artists around the world are trying to get heard, trying to find fans. A handful of them are the blockbuster artists you've heard of, and we certainly seek to serve them, but the vast majority of them are these long-tail creators, aspiring musicians who want to find their fans and build their fan base. And ultimately, because we are that source of music discovery, we're a platform that brings all these fans and all these artists together directly in one place. Because we're this primary source of music discovery, we end up being a day one for artists who are looking to get their start. And some of those artists become those mainstream artists you mentioned. Their first fans, their most passionate fans, are at SoundCloud. So they keep coming back. And we just, Billie Eilish, global superstar, just released her 3rd studio album this past summer, and we were central to that story. And the reason we were central to that story is we found her first 100 followers on the platform. Before she was known, before she thanked SoundCloud from the Grammy stage, her first 100 fans when she was a bedroom artist. And we gave them exclusive content to Billie's music and to Billie herself. SoundCloud's where she comes to find those fans again. So there's this convergence of being able to serve Billie before anybody knows her, and then to be her home once she's one of the biggest stars in the world.
What an interesting story. Jumping back to AMC, Adam, I want you to share the vision for AMC's role in the future of immersive and interactive cinema experiences. Maybe you mentioned that a little bit in your first answer,
Sure.
but let's go deeper into it.
But before I do, when you mentioned Taylor Swift and Beyonce and Billie Eilish as the only three names that you mentioned, my company usually shows movies. We don't usually make movies. But in 2023, last year, our company, for the first time in 103 years, made our first movie.
Really?
And it was Taylor Swift's The Eras Tour movie.
That's where we met.
And then 6 weeks after that, we did Renaissance, a film by Beyonce. And 6 months after that, we did a listening event where the only one we've done up to that point, where Billie Eilish's new album was released at AMC theaters on an incredible Dolby sound system.
You should have mentioned my name somewhere, you know.
So I love the three names that you mentioned, because those are our three names.
This is where you intersect.
But in terms of sort of our vision and our future, this is the 9th year that I've run AMC Entertainment. And when I joined AMC, we were the second largest movie theater chain in the United States, and we had no movie theaters outside the US. And on my watch, during my reign as CEO of AMC, we've become the largest movie theater chain in the world, with operations as the largest movie theater chain in the US, the largest movie theater chain in Europe. We're here in the Middle East, and we're the largest globally. So our vision of the future was laid out really in my first weeks as CEO. I said to our people at a big company-wide meeting, I want us to become the biggest and best movie theater company on the planet. And I know we've become the best. That's undisputable, because we have more theaters than anybody else. But I'd like to think that we're also the best. And that's because we believe in the quality of our product. And we believe in, as a company, we believe in innovation. And so all the time, we're looking for how can we make the movie-going experience at a theater better for our guests? Yeah. What can we do that's new, that's different, that's fresh, that will get people excited about leaving their house and going out to a theater?
Yeah.
And right now, the single best thing that we can do is very comfortable seating. At over half of the AMC theaters in the United States, for example, your seats go fully back, and it's 2 meters of legroom between this row of seats and that row of seats. So it's very spacious, very plush, very comfortable. Second, we've really invested heavily, about $500 million in giant screens, because there's nothing like watching a movie on the big screen, and the biggest screen is even better. And then something that we're in the middle of right now is we're upgrading all of our auditoriums to laser projection. Okay. Because laser projection is not only better for the environment, it consumes less energy, and the old halogen bulbs, which you had to, or xenon bulbs that you had to throw in a landfill, and they would sit there for 100 years.
Yeah.
That doesn't happen with laser projection. But as important as anything, laser projectors throw 50 to 100% more light on the screen, which means that the picture on the screen is sharper and brighter.
Amazing.
And that's what makes movie-going a wonderful thing.
Amazing. Indeed, it is very comfortable to go to an AMC theater. All right, let me ask AI quickly, and then we'll jump to SoundCloud and end this session. What strategic shifts are required for legacy entertainment companies like AMC to remain competitive with tech-driven entertainment giants? Sophia has something to say about this.
Good afternoon, Yasser, Adam, and Elia. AI-driven upstarts are feasting on market share. With 62% of Gen Z favoring user-generated content, and VR and AR blurring the line between reality and digital fantasy, legacy giants face extinction, desperately needing to adapt in order to avoid becoming cultural fossils in the digital age.
Agree or disagree?
This is the happiest moment that I've had in months.
Great.
Because I can disagree with Miss AI and tell her that artificial intelligence in this case is wrong. We're not going to be a cultural fossil because we will do what is necessary to make sure that going to a theater is a great experience. And I might add, the consumer's appetite for content is so voracious, it's so big, there is room enough for all of us.
Right.
There'll be plenty of room for streaming companies, there'll be plenty of room for other forms of entertainment, but we will still survive, we won't become a fossil.
Right, we'll have the fight in the back, me and you and Sophia, but let me jump to SoundCloud quickly and ask you, what innovations do you envision for creating closer fan-artist interactions, as you mentioned, and monetizing those relationships?
This is the future. I would certainly say that the next revenue format in music is going to be this notion of artist-to-fan monetization. At SoundCloud, we call this C to F, creator to fan. And the underlying premise for us is that streaming is not enough in music. And tons of ink has been spilt on the notion that streaming is not enough for artists. Unless you are a household name, artists don't earn enough from streaming. It is 85% of tracks make less than $5. 80 million tracks get less than 100 plays at all. So this is pennies, if that. We also have the conviction at SoundCloud that streaming is not enough for fans. And along the lines of what Adam expressed around the desire of consumers to have an experience, you know, if anybody wants to, in this room, as a fan of an artist, a musical artist, if you want to spend $100 on your favorite artist right now on your phone while we're in the room, it's very hard to do that in music. In other creator verticals, there have been opportunities to do that, like Patreon, but in music, it doesn't exist. And yet, fandom is as old as the history of commercial music. And in certain markets, Greater China is one of them, you have platforms like Tencent Music, which are beginning to monetize music and content beyond streaming. So streaming ARPU at Tencent Music is the equivalent of $1, and non-streaming ARPU is the equivalent of $25. This is 25 to 1 how much fans want to use their wallet to express their fandom. And for us at SoundCloud, that is core to who we are. We are a two-sided marketplace, the only two-sided marketplace in music, where we are bringing tens of millions of artists and hundreds of millions of fans together directly. Traditional streaming platforms don't have direct access to artists and creators. Traditional music companies like labels, content owners, do not have direct access to the end user, to the consumer, to the fan.
Okay.
We are a platform that brings them together. So we're very well positioned to start to monetize that relationship and put new dollars in artists' pockets, because streaming's not enough for those artists, and give fans new ways to express their fandom, because streaming's not enough for fans.
Amazing.
This will start with analog, like fulfilling merch, and we opened a merch store a couple months ago, creating exclusive content, exclusive ticket sales opportunities. But where this is heading is an immersive experience, where your SoundCloud user profile avatar wears a, you know, pick your favorite artist t-shirt that day for a couple SoundCloud pennies. And trillions of those interactions in the app will make up what we believe is the future of fandom. And that's the next big revenue format coming in music.
Great way to monetize. How, just to end this, how does SoundCloud leverage data and AI to shape its platform offerings and provide personalized user experience? Is that an example?
It is. I think we are an AI company, and I would say that that comes in two forms. One, AI is going to be the great democratizer of music creation. Historically, to be a music creator, you had to know how to play instruments, read music, afford a studio, then afford expensive software, know other people who could do those things. Now, to be a music creator, you need access to a free app. And music creation is going to grow by 10x in the next few years, because AI is enabling the gamification of music. You know, playing with a hook, playing with a beat, playing with lyrics, socially engaging with other fans. And that will increase the total addressable market for creators. But where we're an AI company is we are able to find an artist their first fans. We know everything about the hundreds of millions of fans on the platform and everything about the hundreds of millions of tracks on the platform, and we can connect them using our AI. And as a home for music discovery, that's incredibly valuable. For artists who are looking to find their fans, we can get them heard. And that's a major part of our story.
Amazing. It's clear that the entertainment industry stands an exciting crossroads, with technology and audience preference continually reshaping its landscape. Which giants will dominate tomorrow's Entertainment. Ladies and gentlemen, Adam Aaron, Elias Seaton. Thank you so much. CEO of SoundCloud, CEO and President of AMC Entertainment. Thank you for being here with us.
Thank you, Yasser.
Thanks so much. It's great.
You did a great job.
Thank you so much. All right. Thank you to our audience, of course, for joining us today. Enjoy the rest of your time here at FII8, where the future of global investment is being shaped. Please welcome to the stage our moderator, Mariana Atencio, Peabody Award-winning journalist.
Good afternoon, everybody. Salam alaikum. I have the great pleasure of introducing this titan of industry, Jack Hidary. Jack, your energy on the subject matter that we're going to tackle today is just contagious and has been contagious throughout this conference.
Hola, Mariana. Great to see you.
Hola, Jack. Jack habla español también.
Sí, por supuesto.
But we're going to
speak in English today.
We are going to do this in English. So when people think about AI, they think about large language models. But what is the next wave of AI, in your view, that's really going to transform the landscape in the next 5 to 10 years?
Well, Mariana, it's a very exciting time. Obviously, AI is on everyone's mind. AI is being spoken about in every corner. And we can think of AI, of course, as artificial intelligence, but also augmented intelligence. Mm-hmm. How do we extend our abilities? How do we extend the abilities of our companies, our governments, with AI as well, with this new digital intelligence? And yes, large language models have a great place now in our society. If you want to summarize huge documents, if you want to generate new kinds of content, media. We just heard earlier today from the media panel about how we can create new movies and new music with AI. Very, very exciting times. But even a bigger market is the quantitative world. When we look at the biggest sectors of our economy, when we look at the energy sector, the biopharma sector, other sectors around, for example, quantitative finance. These are 10x, 20x the size of the language model market because these are the biggest parts of the GDP of the world.
So in other words, it's not AI to summarize what's on the internet or Wikipedia. We're talking about large quantitative models,
Exactly.
LQMs.
Large quantitative models, LQMs, yes.
And we're going to talk about LQMs throughout the rest of the conversation for those who want to understand the abbreviation. Now, for those of us in the room, and I include myself in this, many of us can hear quantum and get scared. So how do you explain LQMs in layman's terms?
Well, basically, our world is made of relationships. And so when we think about, for example, if we were playing billiards and I would hit the white ball, it hits the red ball, goes in the pocket, there's a certain relationship. And Isaac Newton, 300 years ago, told us what that relationship is. And so with that same relationship, we could send people to the moon and to space. And so that's a set of laws that we have from Isaac Newton. But there's another set of laws that actually govern how molecules work. And so when we want to create a new treatment, a new drug, for Alzheimer's, for Parkinson's, for cancer, for these very, very critical diseases, there are equations for that too. And now for the first time, we've trained AI to know those equations. And so we can't use ChatGPT for this. We can't use large language models for this because that's trained on words. This AI is trained on the understanding of chemistry and our world.
So why then is it uniquely suited to solve, complex problems like in the field of life sciences?
Well, in the field of life sciences, it's a very, very daunting challenge. Let's look at the stats. Right now, it takes 5 to 10 years to develop a drug, even before you get to clinical trial, before you put it in the first human patient. And then you have the human trials, takes another 5 to 7 years. And here's the most challenging statistic. What is the failure rate of drugs that come into trial and try to get out of trial? 90% failure rate.
That's
90% of the drugs, Mariana, that go in never come out. And so how do we change that? How do we use AI to change that? To do that, we have to start right at the beginning. Right when we make that drug, when we conceive of that drug, we want an AI that can take a drug idea and make 100 million versions of it, 1 billion versions of it, but not taking 5, 10 years to do it, doing it in a matter of weeks, months, under a year. Then we want to test it in a virtual human trial before it gets to the first actual human patient. So this is a revolution that if you asked me this question 5 years ago, 4 years ago, I would have said it's impossible. But 3 years ago, the world had a breakthrough. We now, as humans, have a superpower of modeling the world down to the atomic level. This superpower comes to us from this merger of chemistry, of physics, of biology, and of AI.
So when we talk about the fact that we're living through one of the most transformative times in modern history, this is something to point out, something that was not possible 3 years ago.
Absolutely.
That is now possible because of quantum. Tell us about your company, Sandbox AQ. You recently collaborated with several organizations, Sanofi, the Michael J. Fox Foundation, for breakthrough discoveries. Can you share one example for us of something you've developed that you're proud of recently?
Sure. When we work with UCSF, work with Michael J. Fox Foundation, with Sanofi, be it spin-outs of universities, be it labs at universities, be it large pharma companies like Sanofi, it's very exciting because we can change the way we actually get the drugs out to the clinic and then out to patients. Think of Michael J. Fox. He started this foundation, of course, because he got Parkinson's. People around the world have this disease and also related diseases. Think of ALS, Lou Gehrig's disease. Think of MS. Think of other neurodegen diseases such as Alzheimer's, dementia. What family in the world has not been impacted by these neurodegen diseases? And it's going to grow, unfortunately, because we're living longer. More people will actually be impacted. But after 40 years of research in Alzheimer's, in Parkinson's, we have a little bit to show, but not very much. And so now comes along these tool sets, these superpowers, Mariana, that allow us to say, wait a second, we can now actually model these molecules, these drugs, these potential candidates, and the target, just like you'd see a space station docking, bing, 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 dock. We can now do that billions of times in the AI before we even put it into the first human trial. And so for Michael J. Fox Foundation, we're developing with them and University of Dundee in Scotland, new treatments for Parkinson's. With Sanofi, new biomarkers. As much as treatments are very important, we also have to think about diagnostics. The earlier we can diagnose something, the better we can diagnose a disease, the earlier we can treat it. And so with Sanofi, of course, there's wonderful treatments to be done, but also diagnostics.
Jack, this is one of the most hopeful takeaways that I'm going to be parting with after this conference as someone, as you say, everybody has suffered, dementia in their family or Alzheimer's, so it's very relatable to most folks here and most folks watching. Tell us about where businesses and governments can create real value using this technology.
Well, this is a moment where people talk about AI, they often talk about the AI companies themselves, and it's very, very exciting. Sandbox AQ, our company, we were inside Alphabet, now we're independent, we raised a large round of capital, Eric Schmidt's our chairman, I serve as CEO. It's very exciting to talk about the AI companies, but you know what's more exciting? What's more exciting than the AI companies is the applications. When we think about energy companies, so we talked about biopharma, we talked about Sanofi, Michael J. Fox, and others, but let's also talk about the energy companies. We talk about utilities and generating electricity, storing electricity, batteries. Battery technology has not changed really in 40 years. It gets better by about 5 to 7% per year with lithium-ion technology, but now's the time to leapfrog that. And so for businesses, it's a time to look at not only the peripheral stuff of how do I do customer service? Yes. Use large language models to cut your costs in customer service. Use large language models to create marketing copy. Use large language models to summarize and to interact with customers. But the core of an automotive company, of an energy company, is creating physical things. When we talk about the finance world, many people here at FII manage money, assets. How do we optimize that portfolio? How do we look at risk in an increasingly complex world of structured instruments? We need quantitative AI. That's what can actually help us in this realm.
And another pillar of FII, with which Richard Atias has mentioned at length, is education, and which is a priority here in the Kingdom and in the Global South. Tell me about how we can innovate in education using this technology.
Absolutely. When governments think about the future of their country, particularly right here in the Kingdom and other countries in the Gulf region and other countries around the world, you have a very young population, a population hungry for development, for change, for growth. And so how do we deliver education at scale? If we do it the old way of classrooms and so on and so forth, it's going to take us a long time, and I don't think we're going to be successful. But what AI now can do, both LLMs, who have a great role to play, and quantitative AI, LQMs, can combine together to create content that is personalized to that individual, that tracks that individual. Because I think all of us have the memories of either being bored in a certain classroom or being overwhelmed in a classroom. It's never the exact right speed. And so now with AI, we can actually bring that in, not only to train young people, K through 12, but also the retraining and upskilling of adults as well. And so what I'm seeing happen here in the kingdom, what I'm seeing happening in other Gulf countries and around the world, is that educators and governments are starting to say, let's do this investment. Let's invest big in our future. Here's the good news. We don't have to wait 10, 20 years to see that return. We're starting to see that return just in a few years because of the speed up of using AI in education.
And I love that you mentioned reskilling and upskilling, because it is what will be needed for workers to be able to adapt to the jobs of the future.
That's correct.
Now, as you know, here at FII, we
Can I
also...
say one more thing about education? I think in the audience we have Crown Prince Hussein here from Jordan. And I just want to highlight that just about a year ago, he and I were having a conversation about education and government. And we talked about what could be done, for example, in a country like Jordan. Again, a young population, majority of the population, quite young and looking to the future. And so we talked about an innovative idea from France called School 42. School 42 is a free school. It's a school that's one of the benefactors is Xavier Niel, the philanthropist in France. And we talked about it and said, why don't we bring this to Jordan? And I'm very, very proud to share with everyone here, I hope it's okay, that Jordan has implemented the first School 42 in the MENA region. So I want to...
Can we get a big round of applause?
Recognize that. And 2 more are coming to Jordan as well. So I think that's an example where leadership, in this case in the country of Jordan, with His Majesty and His Royal Highness the Crown Prince, took by the reins and said, let's bring innovative ideas of this kind of education for the future. School 42 focuses on coding and technology and the future. So there are real world examples right now, right here in the kingdom and surrounding us of what can be done by government.
I love when we break news here at FII.
This is it, right here.
Congratulations, Your Royal Highness. Jack, I have you for just over a minute, so I want to finish with a quick lightning round before we get to another big release from you. So tell me, what is one book that is on your nightstand right now?
Well, there's a new history of the world, which we can put online, that I often look to the future, but also you want to look at history sometimes to understand the future. And so I have a few history books on my nightstand right now that I'm reading about that. And another book I'm reading is about quantum physics, but it's about quantum physics thought of in the sense of information. How do we think of our world not as physical things, but as embodiments of information itself? Claude Shannon and Alan Turing and others taught us that there's a new way to look at the world as manipulating and understanding and transmitting information around
us. So it's light reading before
Very light reading, yes.
What is one podcast or one series that you're obsessed with?
Moonshots by Peter Diamandis is a fantastic podcast. I also listen to Peter Attia and some of the other health and wellness podcasts too.
Tell me, what is one word that you think best characterizes your journey?
Potential. I'm very excited about the potential of human beings. When I look at someone, I see them where they are today, I know there's more potential. I know they can actually change the world. What I try to do when I mentor folks, when I build teams, one of the things I love about business, what I love about being an entrepreneur and a CEO, is building teams. I'm blessed with an incredible team at Sandbox AQ. We have 85 PhDs. We have another 80 engineers. We have other people in business, HR, finance, all these functions coming together. We just got together at Harvard MIT for our annual summit. It was literally buzzing with energy. That's what I love when thinking about how people can take their potential and realize that potential in the world.
So we are 5 years away from Vision 2030 here in the kingdom. What is one word that you think best describes what will happen here in 5 years?
Oh, God. I think that the ability for impact, I would say the word impact is the best word to me, characterizing what's happened here in the kingdom. The kingdom is not about just having discussions. We have these discussions, and then it goes right to action.
And impact is what you see here on this center stage and in this conversation. Jack, we're out of time, but I do want to say that your book, AI or Die, is coming out Q1 of next year.
Q1, yeah, it's a very subtle title, AI or Die. Just hints at it, right? But I think actually it is the truth today. As companies, as governments, as countries, as individuals, we need to think about how we use this technology to augment ourselves.
So next year,
take the future.
You have to get this book, AI or Die. I'm going to ask you to sign it as we walk off stage. Thank you so much,
Excellent.
Jack Hittery. Big round of applause for him.
Thank you very much for joining us for the first half of FII8 Day 3. Please make your way to the pavilion or the dome for lunch. We will resume here in the plenary hall at 1:20 p.m. sharp to hear about the latest in aerospace, the new Silk Road, the world of 2030, and with some very special guests for the close of FII8. See you again soon.
I'm Ben Medland, the founder of Drift Energy. We make renewable energy in the deep ocean using sailboats.
My name is Esteban Canepa, co-founder of Sadim. We're addressing the most common natural hazard on the planet, which is floodings.
My name is Arnobio Morelix, co-founder and CEO at Serious Education, the AI University for Latin America.
In Aravita, we deliver the perfect order for supermarkets in a way that they can lower their waste and also lower their stockouts. So we can bring economic profit to them, but also impact in the world food waste and food insecurity.
We help pharmaceutical companies completely improve the safety and efficacy of existing therapeutics through our novel nanotechnology-based drug delivery platform.
For the last 20 years, I like the venture capital, the early stage companies, not because of only the ideas of the business, but because of the entrepreneurs. So it's a way of keep me plugged with new ideas, with new people. So I like to invest in early stage companies that mostly connected with tech, with green technology, with things that can truly make life better.
I like to see myself as a citizen of the world, and my job is to make investments. A lot of the investments I make, end of the day, they all have global implications, and the world is really interrelated. And so I think this is really important, I think, in today's world, and to spend still a lot of time to connect with people. And when you spend a lot of times with great entrepreneurs, you're inspired.
Addressing legacy is not just a passive way of looking at the past, but it's really how do you get inspired from past generations to maybe be up to their level or re-challenge what was done then.
Of course, we would like to have everyone take their seats. Our next session is about to begin, and as a courtesy to our speakers and those around you, we ask you to turn off your electronic devices. Fatma, we have something great coming up.
Oh yes, but let's take a moment and admire that lunch we just had. I mean, yum. Did you enjoy your lunch, Yasser?
Of course, we've been awake for a while, so we just had to have lunch. And you know what's great about FII?
Tell me.
It's the networking and the energy,
Absolutely.
And the vibes. It's just amazing.
The amount of people you meet here and the amount of business is done during FII is just outstanding. And we are pleased to see you all back here after lunch. We hope you also enjoyed it as much as we did. And now we will dive right into our next keynote speaker, Yasser.
Right. We would like to introduce the Honorable Paul M.P. Chan, Financial Secretary, the Government of the Hong Kong Special Administrative Region of the People's Republic of China, on stage, please.
Please welcome him. Thank you.
Distinguished guests, ladies and gentlemen, good afternoon. It is a pleasure to be here with you today as we explore the future of the New Silk Road, or the Belt and Road Initiative, a vision that extends far beyond trade routes, connecting continents through shared values of sustainability, innovation, and common prosperity. Since its inception in 2013, the Belt and Road Initiative has reshaped the global trade and investment landscape. It has forged significant investment in infrastructure, boosted trade and strengthened people-to-people bonds. Hong Kong is an active participant, contributor, and beneficiary of the Belt and Road Initiative. Over the past decade,
Hong Kong has played a vital role in its growth too. For instance, our external trade with Belt and Road countries has increased by around 60%. For those of you who are less familiar with our city, Hong Kong is a special administrative region of China and administered under the one country, two systems principle. On the one hand, we have convenient and at times priority access to the mainland market, but on the other, retain all the defining characteristics of an international city: open and diverse, rule of law, free flow of goods, capital, information, and talent. And our business practices align with the best international standards. This uniqueness enables us to serve as a super connector in the region, creating opportunities for all. As the Belt and Road Initiative moves into the next decade, the focus is clear: sustainability and inclusiveness. Green infrastructure projects are at its heart, from solar plants to low-carbon railway transportation. The common aspiration is to pave a green zero, benefiting all along the route. And Hong Kong's strategic vision to become an international green tech and green finance center can contribute to the achievement of this common aspiration in many ways. First, we can address the funding gap. The funding need for green transition is huge. Global annual climate investments are estimated to reach $9 trillion by 2030 and $10 trillion by 2050. Hong Kong, as one of the top 3 international financial centers, along with New York and London, and Asia's green finance leader, is well positioned to mobilize capital to support the green transition by matching quality projects with funding. For instance, we arrange around $63 billion on average annually for the past 3 years. Indeed, the sustainable debts issued by Hong Kong, accounting for about 1/3 of Asia's total. But more than funding, we are committed to innovating financial arrangements that have broadened the investor base of green projects. One example is securitization of infrastructure loans, packaging more mature brownfield projects for investors, thereby releasing funds for investment into other greenfield projects. Hong Kong has issued 2 batches of such loans already, amounting to $800 million in more than 50 projects in the Middle East, Asia Pacific, and Latin America. Second, we can address the technology gap. There is still a significant disparity in green tech adoption globally, with countries in the global south lacking the financial resources and infrastructure to adopt cutting-edge green solutions. Investment inclinations will also aggravate the widening of the gap, as developed nations typically invest more in R&D for green technologies. Hong Kong is home to many green tech startups, all sharing the mission to develop technological solutions that combat climate change, which may well fit into the relevant categories of economies in the MENA region. One of them, for example, develops carbon capture technologies in 3D print reef tiles to help restore coral reefs. It is now having a production base in Abu Dhabi. Third, we can address the knowledge gap. That means linking up people, projects, and knowledge. Hong Kong is a compact city, yet has the solid experience in city planning and operation, and managing large-scale infrastructure projects. Our expertise in smart cities and green urban planning complements MENA's ambition to build digitally connected, sustainable urban centers. These potential partnerships can set standards for urban resilience and environmental stewardships in the years ahead. Ladies and gentlemen, the vision of a green zero presents a unique opportunity for us to collaborate on fostering sustainable, resilient, and inclusive development for our future generations. Hong Kong is proud to be a part of that effort, and we are committed to making valuable contributions in finance and innovation, and fostering partnerships to strive for a brighter and greener future for all. Thank you very much.
Well, thank you very much to the Financial Secretary, Mr. Paul Chan, for articulating a very clear vision, the roles and achievements of Hong Kong. And I think we're all very excited to see that Hong Kong is taking this pioneer and leading role in building the green and silk investments along the nations. So today we have with us, we all know that Hong Kong and the MENA region are going to be strategically positioned in this area of developing and driving sustainable growth along the nation. So we have three key honored speakers with us coming from the government, the technology, as well as business sector background to share your insights and experience in promoting a collaborative framework across nations. So we have here Nicholas Ho, the Commissioner of Belt and Road of Hong Kong, and in the middle, Wei Li, the co-founder and CEO of Biomap, a pioneer in life science AI foundational models. And far from there, Andrew Liveris, the former chairman and CEO of Dow Chemical. Let's welcome. So we're going to start with Nicholas first. So you are a leading architect and also a key advocate of green sustainable investments, and now transitioning from your previous role to a governor role. And we just heard from Mr. Paul Chan's speech that Hong Kong last year has issued over $50 billion green instruments, green debts. So how do you see the deployment of this capital, and what are the structural sectors that you see will be most suited to be benefiting from this large pool of capital and green investments to build the Belt and Road a better place?
Thank you, Casey. No, you're absolutely right. Hong Kong is very unique in a way. We have a total green economic engine. As the Financial Secretary has mentioned previously, we have green finance, which is powered by our green standards interoperability, our international financial center strength. Second, we have a professional services that is well-versed in sustainability, making projects go green transformation. And third, which is probably the most important, is that green innovation in Hong Kong has been sort of growing extremely fast, powered by the university research in Hong Kong. As you all know, Hong Kong, we have 5 of the top 100 universities in the world. So I think these 3 components makes Hong Kong extremely unique in the global green value chain, is that we can help become a self-feedback system to drive projects. So in the sort of MENA Asia context, or the Belt and Road context, in the past 11 years, a lot of mega-scale infrastructure projects have been built, policy connectivity has been built. So now SMEs or private capital can enter and create these projects along the Belt and Road a lot easier, with a lower cost of finance, with lower threshold for cross-border mobilization. So we believe that this era is very much about the mobilization of the public-private investment. And that is why, this partnership with MENA and Asia Economic Corridor makes perfect sense.
Okay, thank you. I think that's a very robust structure and framework of public and private partnership, and that provides a very solid foundation to bring this into real impact. And I'm going to turn to Andrew for a minute, and you are very experienced in leading the business sectors in corporates and industry transformation, particularly in the chemical sectors, and also implementing some of the very innovative solutions into sustainable transformation. So can you please just share with us your experience of leading Dow Chemicals' 10-year vision achieving sustainable goals, and not just the vision, but implementing, transforming from a vision to implementations and initiatives, and eventually become a DNA of a corporate?
Yeah, thank you, Casey. My qualification for being on this panel also is I spent 14 years in Hong Kong, so I feel like I'm an alum, and certainly the amazing progress. And I don't want to tell you when I first went there, because neither of you were born, none of you were born, but certainly seeing the transformation of that part of the world, certainly China, but the Hong Kong story, formed me as a young chemical engineer going to Hong Kong in my first assignment actually at Dow. So at Dow, having the privilege of being 125 years young and reinventing oneself, and I was the 11th CEO, and I had the CEO job for 14 years, I inherited before the value-based system that led to the 10-year goals being integrated. Back in the 90s when they were first started, there were report mechanisms, triple bottom line. So we call that the era where we focused on our assets, and we call that our footprint. But the 10-year goals, they were great. We reported great environmental outcomes, great social outcomes, but they weren't integrated into business strategy. The next 10-year goals that came after, that has a finish date 2005, we actually call our handprint goals, which is absolutely that we send products to the world, chemical products that all of you use, that have effects to humans, and that we needed to report those effects, be the first to report them, and then even particular minimize and actually take them out of the environment. That put a lot of onus on us to invest. And so that led to sustainability actually being a noun, not just an adjective. And sustainability, which is, I'll get to for the third 10-year goals, to build into the DNA, the businesses, and I was CEO at the time, need to have an ROI focus. Green is important, both greens. If you don't have the green of money driving behaviors to the business community, you're not going to get the green outcomes, to state the obvious. So an ROI at Dow meant what was the value of nature. So we developed tools and metrics to make all of our businesses present to us strategies that actually had an ROI, that had a return to our handprint. But then that wasn't enough. The aha moment in the late 00s leading to the next 10-year goals, which really I think all of us are sitting in, is what's the effect on the planet? So we developed the blueprint goals, and we became one of the handful of organizations around the world that led to purpose-based strategies that said protecting our planet needed a whole new era of metrics and commitments, and that meant that we had to be at the table, not on the menu, at the table, working with governments to develop the right policies. So dare I say it, as I finish the answer to the question, building that into enterprises like business means the triangle of business, government, and society gets complete. In other words, business serves society, government serves society. Society has needs. Those needs need educated policies. BRI needs to be relevant for the 21st century. Enterprises like Dow need to be responsive to actually how to create that legacy effect. So we built it into the enterprise that way, and today my successor has continued it on with the next 10-year goals. The next 10-year goals is absolutely totally about reduce, reuse, recycle that has an effect in terms of returns, but legacy effects to humanity.
Wow, thank you so much. I think what you just shared with us was a $10 billion consulting fee for companies to implement that and replicate that success. And it's very critical to have a constructive model from vision to implementation to metrics that will encourage a continuous innovation. So I'm going to turn to Wei. So we are all very familiar about the large language model, but can you share with us more about what is a biolanguage model? So it is very difficult to talk about the green new Silk Road without touching technologies which can in part fundamentally shape a company and an industry and a country. So can you share with us some of the breakthrough that you're doing? And I know that HKIC has a part of investment into your company. So how do you envision to leverage Hong Kong as the platform and the gateway to replicate your technologies to other nations, either developed or developing nations, along the Belt and Road?
Yes, thank you. So the large language model for biology actually is trained not from the people's language, the English, Chinese, but rather it's trained from the DNA, from the mRNA, the protein sequence, so it can understand the complexity of the biological world because it's trained by trillions of the data from the evolution tree. So it can generate like the new biostatistics that not existing in the natural world. So we are a quite young company. It's our honor here to share because I think we are young, we are just 4 years old, a startup, but I think we are quite typical. Back to your question about what's the connection between us and Hong Kong. 4 years ago, when we started the company, we call ourselves an American company or a China company because it's very typical for the last generation of the ambitious new technology company to directly connect from Beijing to Palo Alto, from Shanghai to San Francisco. It's us. We use like the 200 people team from America and China for engineering, for AI, for biotech, for everything. But now the global tensions break the direct connections. You see all the policies and all the global turbulence recently. So we need to find another hub, another super connector. It's what Hong Kong is called. So without the Hong Kong support, we are building the first innovation hub in Hong Kong since this year, and we are considering to open more and more research center or maybe eventually the headquarters in Hong Kong because our talent people are not freely travel between China and America right now. Our data sharing between China and America is so hard. The IP protection between China and America gets some problem, but we will think Hong Kong as a hub, as a super connector to host us. We still need the global talents, global data, global IP protections to serve the global customers. So it's why we moved to Hong Kong and relaunch ourselves from Hong Kong. This means because the topic is about the BRI, the Belt and Road. So it's not only limited to Hong Kong, but also we consider Hong Kong is like a hub to be the center of the company's next generation of the development. We used to be focused more on the drug discovery side, but we are life science foundation model. So our technology can also benefit the green tech, the enzyme design, the biomaterial design, maybe just like those. So quite a lot of new ideas. But these new ideas, the market might not be in America and China, mainland China. It might be around the world, around the BRI. So we consider Hong Kong as a new hub for us to relaunch ourselves through the BRI and to take all these opportunities.
Great. And I think in cautious of time, so we're going to give Nicholas and Andrew the last chance to give the audience some of your best insights and lessons learned from your past projects that has been implemented so far. And also, Andrew, in your new book, Leading Through Disruptions, do you see any sort of constructive solutions that would be scaled up to help other nations? So we'll start with Nicholas.
Sure thing, thank you. I think as the financial secretary has mentioned, the Belt and Road Initiative, or the New Silk Road, is a long-term investment commitment. And I think now we're beginning to enter into the harvest period. When we think of Hong Kong as a hub for Belt and Road, we are often talking about we're almost like a super highway where projects, talent, innovation can go through Hong Kong and then just super connect to all these MENA or Asian markets. And I do see, what Andrew and also Hui mentioned. There is a lot of public-private partnership opportunities that needs the level of expertise and skill sets through capacity building and whatnot, in order to become high quality, in order that they can address social needs, in order for them to deliver the right results long term, to have common prosperity.
Yeah, we're very, very excited about that mission to carry forward. Last word from you, Andrew, about the collaboration model.
Yeah, the book you referred to, Leading Through Disruption, I wrote with a view to the future that the divergence of humanity in things digital, things environmental, social, governance, geopolitical. If you're a young person starting out today and you look at all that and you say, we have collectively screwed it up. I mean, what is essence going to be the template moving forward? I think efforts like the BRI are speaking to the new way forward if you can modernize them to the needs of convergence on those factors. So how do you make BRI digital? How do you make BRI green? How do you make BRI good for societies, all the societies it touches? That's an example of a new age initiative. And I think that way of thinking, how to operate at the intersection through convergence, is actually the demands that we now all have on all of us, wherever we sit, business, government, academia. And I think we have to role model and role play it, because the noise level, as we know with geopolitics, we can't assume it's going to happen out of politics alone. In fact, it probably won't. I mean, so that's where I think the modernization of initiatives like BRI needs to happen.
Brilliant. I think we can all go on, but we appreciate the time that the three speakers have been sharing with us, and we have strong conviction in the future that the Belt and Road Initiative is going to create significant impact with a collaborative model along the public and private side. Thank you very much, Orr, for joining us today.
Thank you. Nice job.
Thank you. Thank you very much. I think this is my chair. All right. Oh. Yeah, the great part about this is at various moments, I often think as we get later and longer into the event, it becomes, just keep an eye on watch, it becomes more intimate in a sense. That's a posh way for saying there are fewer people, but we sort of have all...
quality. It's quality.
It's quality, yeah, thank you. The three guests here are Brendan Nelson, President of Boeing Global, Eric Martel, President of Bombardier, and Stefano Pontejovo, I pronounced that wrong, from Leonardo. But before we get into the issue, because I know you're all deeply concerned to discuss how will aerospace shape the future of the global economy, we're going to do a couple of questions on your individual companies, because you have fascinating companies in your own right. I'd be remiss if I didn't start with you at Boeing, as everybody would expect me to. Look, we're not going to rehearse the difficulties and the issues, but I am interested in what Kelly said, your new CEO, about the change of the culture. The change of culture that he admits has to take place. Obviously, you agree to that. How's it going?
Well, look, thanks, Richard. It's interesting. I regard it a bit like us as human beings. And I say to young people that what transcends everything in life, rank, power, money, influence, looks, talent, is character. It's informed by worthwhile intrinsic virtues. And so too the character and the culture of a company and its leadership is everything. It's fair to say, I think, that over the last decade, certainly through the 2010s, I think the company in terms of culture lost its way. We have diminished trust in us, and we've had some serious lapses in performance. We're carrying an immense amount of debt. And I think one of the key things for us, and I'm paraphrasing what our new CEO Kelly has said, we not only have to have respect for every single one of our employees, particularly on our production lines, but we have to have a reverence for them. And he's determined that people like me need to spend more time in the factory, understand our people and understand our products.
I have no doubt, simply on the basis of duopoly, that Boeing will be around. Nobody's questioning that. Your customers want it, the industry needs it. That is not at issue. The issue is, can you get back to being fighting fit?
Yes, of course we can. And it's not going to happen overnight. You've already seen, we've announced we're shoring up the balance sheet with the equity offering and making sure we deal with our liquidity issues and also maturing debt. But we'll get through this strike. We hope that will be very soon, of course. We're working on that. And then we will progressively return to production. We're not going to rush that. I know our customers are disappointed and frustrated because they want our products, but we're going to make sure we get that production line up and running methodically to make sure we can be 1,000% confident in every aircraft that comes out of that production line. We're shedding 17,000 of our staff at the moment, about 10% of the workforce. The next phase you're going to see is some strategic changes in the company. So there will be some divestitures. There will be elements of the business we're doing now that we're not going to continue to do. We are also going to be consolidating elements within our business, and we're now methodically looking at the layers within the company. I started my life as a physician. It's a long story as to how I got here. But one of the things that happens in medicine, one of the mistakes is you prescribe one drug to fix a problem, and then you prescribe another drug to counter that drug, another drug to counter that drug, and over a period of years, what organisations and companies can do is end up with all of that. So a streamlining of the company itself, and we've got serious issues in terms of execution on programs, and we will be laser-like focused on getting them fixed.
Stefano, I look at Leonardo and I look at the range of industries that you are in. I mean, there are two hot wars. Defence spending's gone through the roof. There is no diminishing in defence spending, if arguably it's going to get even greater. So what's the Achilles heel in all of that?
There are actually two. There are more than two. There are two main ones. Speed, we're not fast enough. You can't take 5 years to bring a missile to market or to have a new product. It's simply, time has changed, the urgency has changed. Second is underinvestment. We are, all of us, nobody excluded, in the defense business. I don't know enough about the Chinese to be definite about them, but the rest of us, we're all underdimensioned.
You're all
underdimensioned. You look at the Ukraine war, it's as tragic as it is. It's a regional war, it takes place in a very limited time. In 2 years of the Ukraine war, all of us have run out of everything. Munitions, you name it, we don't have it. We are all scrambling to do it, to get up to speed, trying to invest in what we need currently, trying to understand what we will be needing, and we are at the cutting edge of us and others in the business.
But this is a bonanza time for the defence industries, we're told.
It is a bonanza time. In fact, I mean, anything I can produce, everybody buys. That's not the issue. The issue is what's going to be needed in 5 years. Where do I need to invest, and how do I need to invest? AI, all that stuff comes into, as part of the process, it comes into rationalizing. Or do we actually know where we're going? We think we do, we're not sure.
Hold that thought.
And to make those investments, you need multi-year contracts and governments that are prepared to invest in the long term, so Leonardo, Boeing, similar companies can make the investments necessary to meet that defence demand.
I support the previous speaker.
Bombardier's case. I went to Montreal 20 years ago and did a story of Bombardier, maybe 15 years ago. I loved the company. You had lots of interesting things, ski-doos, trains, planes. And now you've just got a few planes. You've got expensive planes, but you are a one-horse race now.
Yeah, we decided 5 years ago to completely restructure the company, sold the train business. Sea-Doo happened 20 years ago. So today, we're the only company in the world that is focused on private aviation because we thought we were the best at doing that. So we do the Global, the Challenger. We have 5,500 airplanes flying around the world, and we have a significant service business according to that.
Aren't you at great risk of a shift in public perception? Already there is you're going to tell me that the pandemic showed that everybody was now wanting to fly more private because of the convenience, etc.
I will, of course. But clearly the pandemic was actually completely changed the profile. We have, if you take our airplane today, we have 55 airplanes. They're flying about 38% more hours than they were pre-COVID. Plus, we've been delivering new airplanes.
What about plane shaming?
Significant boom. Plane shaming is an issue. Okay, I think we're all facing that. I saw that myself on flying over here the other day. So this is a challenge. But I think you were, to your first question, clearly when you look at the challenge we have, environmental, sustainability, everything, we are an industry that has a track record of innovation and reducing emission by more than 50% over the last 50 years. So
I've got news for you. I think you may have found one audience in the world, in this room, where you won't find plane shaming, because most of them in here would be liking to be on board one of your planes, or at least have one of your planes already.
Well, the problem with the plane shaming is the people who can afford to fly, who often fly for a living, are telling the 80% of humanity that are yet to get on a plane that in some way that they should not be able to do so. And that's the key challenge we've got is decarbonise the industry whilst giving access to people who just dream of flying.
Can I just, 30 seconds on this?
Yeah.
Just remind everybody, and myself, beginning with myself, that the plane industry amounts for 2.5% of global emissions only. So what are we talking about?
Yeah.
Right, I'll tell you what we're talking about. Now you've got onto my area. You're talking about an industry that has done a truly appalling job of getting that message out. You're talking about an industry that has successfully failed at its own messaging on that very issue.
Agreed. It's not my fault. I only produce planes for these guys, so it's their fault.
I think it's important that we continue to say the right thing. So yes, 2%, 2.5%. Private jet is 0.04%. So, but the fact that it's not significant is not an excuse to do nothing. And that's why we made a commitment, and we're reducing it using sustainable aviation fuel as an example. This is something we should all collectively work together because it's working out. It's available now, but it's not available.
It's not available in anything like the capacity necessary or anything like the price that airlines would be prepared to pay without passing it on to the passengers, and nor is that likely to happen within the confines of IATA's rules.
But you would be surprised, Richard, that there's a lot of people that are willing to pay that price now. I would say when I talk to customers, when it's available, they take it. We are, as a company, taking it, for 30% of the fuel we're using every year. So, but it has to be invested, and government have to work together so that we can have the availability.
Richard, I disagree with you on the point about we haven't told the story. We do tell the story, but unfortunately, as you know, we are living in a world where a lot of people will not listen to evidence-based information that comes to them. We're 2.5% of global emissions. We're 12% of the transport sector. This industry is 4% of global GDP. We estimate that by 2050 it'll be a $9 trillion economy, the air transport sector. The work that's going on, all of us, every one of us, and Airbus, everybody, we are working very hard on this, and we'll get there. We'll get to net zero by 2050. The technology that will allow us to get there at this very moment does not exist, but I'm confident that it will do very soon.
Your problem, all of you, I would suggest, is that you are not the masters of your own destiny when it comes to many of those issues.
That's correct.
It's regulators in terms of, good example, single European skies. It is the lowest hanging fruit to save 10% of emissions, and you can't even get a sensible ATC system in Europe at the moment.
But that is absolutely correct. Leonardo, we produce, among other things, helicopters. Our brand is Augusta Westland. I highly recommend them. In the kingdom, we fly about 200 of them. Last year in Dubai, at the COP28, we flew, we're the first ones, we flew with the Pratt & Whitney motor. We flew an AW139 with SAF. We managed to do it only in Dubai because they allowed us to do it. In Europe, we couldn't fly them. So there's a regulator. It costs 3 times, as SAF costs 3 times as much as original fuel,
right?
Yep.
Which means that you're going to have to pay 3 times if the customers are willing to pay. Does the ecological conscience of the average passenger allow you to pay 3 times?
But the reality why it's 3 times more also is there's no availability.
Exactly.
So everybody's fighting to have it because there's none. It's 0.0.
But I think the market would, if we start flying SAF, then it turns around, then people will start producing.
The title is, How Will Aerospace Shape the Future? We know you're going to be players. My hypothesis is you're not going to get to the position of optimum contribution to the global economy because there are so many headwinds of which you have no control.
Well, this is arguably the most complex operating environment for any business that we've had perhaps since the end of the Second World War. We went through a Cold War and everything else. The trajectory in aviation has been consistent. We had 9/11 and the drop there. We've had the drop through the global pandemic, but the trend line is consistent. Humanity needs this industry for people to see one another, their families and friends, conduct business, enable commerce, to take cultures to the rest of the world and bring the world, for example, to Saudi Arabia. And this sector will continue to grow, but our social license requires us to decarbonise. And Richard, it's about propulsion, it's about engine design and how they work. It's about the fuels we put in those engines, sustainable aviation fuel obviously being the most important and pressing need, along with other things. The design of aeroplanes themselves, the aerodynamics of aeroplanes, and the efficiency of what happens in the cockpit and then what happens in the airport. Our industry, all of us, even competitors, we are working together on the solutions. Governments need to regulate. The governments do need to say to us, right, there's a minimum amount of SAF you've got to use.
That's because you're out of the EU. If we're in the EU, you would say it's overregulated. I mean, we're in the EU.
But we also
overregulated.
But I
we
think Richard, one thing that but I think one thing that's important, we need leadership right now. We need leadership right now. There's people that can shape the world, okay? And there's
One of
people,
them's going to be elected next Tuesday.
And there's people that will tell you that everything's going to goes to drain in the next 10 years, in the next 20 years. Aviation is going to grow. Will continue to grow. We're super comfortable with that. Honeywell gave us a survey last week in private aviation that there'll be 8,500 airplanes delivered in the next 10 years. So our industry will continue to grow, but I think we need to do it responsibly, and we're investing there. I have 85% of my R&D budget today in sustainability.
One of the amusing things I always find when I come to the kingdom, if I come via Dubai, I'm one of those #avgeeks. I like to, I watch the screen. And sure enough, we will leave Dubai and we will either go round Qatar or we will go round Qatar. We will never go over Qatar. And I've tried to understand why for decades. And I've had every reason from military airspace to Qatar's very busy, it hasn't got its own FII, blah, blah, whatever. But the reality is, in every case, your industry is being screwed by regulators or governments. Do you accept that?
Absolutely. Absolutely. It's overregulated. In the EU, then you have different regulations according to what different zones you're going to. So it's overregulated. What we need to get clear is what is the objective by the governments, and we'll work it out. I mean, the industry will work it out. Absolutely. You give me an objective which is not, nothing to do with governments, but you're talking about sustainable air mobility. There's a mock-up out here. It's a wonderful company. Either sustainable, at this point, it's either sustainable or it's air mobility. You can't have both. So you give us the objective you have. You give us a target. We'll work it out. If we can't work it, but you can't give me a target and say, okay, you got to fight the Cassius Clay in the good days, but one hand has to be behind your back. It simply doesn't work. You got to give us the possibility to work within a certain framework. You give us an ethical framework if you have to, or you give us a budgetary framework if you have to. The two together don't always work.
This is all going to require massive investment at some point. You're going to have to build a new plane at some point. Kelly's already said so. You haven't said when yet. You've said you're not building a new plane anytime soon.
Not in the short term. Yeah, we're doing some derivative, but we're not building a new airplane in the short term. We do have an airplane going into service next year, our Global 8000. We're investing the money to do that. But as I said right now, 85% to 90% of our R&D budget goes to sustainability, and we're using AI to do that also.
What's your cheapest plane?
The cheapest is our Challenger 3500.
You can't afford it.
30.
Sorry?
You can't afford it.
20-some million.
20 million?
20-some million, yeah. We can talk after,
Anybody
Richard.
give me a loan? It's 20 million. Anyone check? And your cheapest plane?
I'm not prepared to say. I can't tell you off the top of my head, but it'll be one of our smaller ones in the 737 range.
Yeah.
We have an ATR if you want it. We'll give you a good price.
By the way, Richard, on the regulation, our industry, of course, needs to be regulated. Of course it does.
It does.
But we are over-regulated in some areas. But in response to your thing about the flight path, one of the things we're all working on is applying artificial intelligence to the real-time operation of aircraft. And we have a thing called an eco-demonstrator. It's a 777 variant, and we test all sorts of things in this plane, 30% of which we've applied to production. So, for example, multi-regional trajectory-based operations. So real-time responses in the aircraft to changes in weather and wind resistance and all of those things that ultimately impact the efficiency and fuel use of an aircraft. That's just one simple example of the many things we're all doing to improve efficiency.
AI is the buzzword for just about everything you can possibly imagine.
Yeah.
Whatever it is, the answer is AI. Somebody will say AI. What's the most inventive use that you're using for AI?
There are two, actually. One, we've designed our new helicopter.
Your new?
Attack helicopter.
Yes.
Directly as a digital twin using AI. The issue with using AI in a complex industry is that your suppliers also have to have the AI and the digital twin technology to do it. Otherwise, you waste time. But in this case, we were well prepared. We did it, we designed it in 4 months instead of 4 years, which averagely it takes. So that is a very concrete.
Yep.
There, you need to take AI as part of the process, not as a substitution. You got a process, where can I inject AI into it? The second thing is predictive maintenance. You build a helicopter, you build a plane, you build a missile, you build whatever, the radar, whatever we build. All the pieces are in there, and so you know exactly on this date, at this hour, on this time, on this helicopter, on this plane, I need to change this piece, and it has so much tolerance. And so you can do a better job. But that, again, goes through trained people who understand the process, people who are not scared of Taylorism, of being substituted, and people who are trained to do a better job using a tool, because that is what AI is for us.
But you're making an important point here. You know, you need to fit it in, and we're doing about 6, 7 projects right now at Bombardier to do like parts forecasting and service. We have millions of parts possible to be called anywhere in the world at any moment. So the forecasting is very complex. We've made significant improvements. So that's one. We're doing digital twins also to substitute and replace testing. You know, some very complex testing that could be accelerated. So,
because then, excuse me, on that, that's important for all of us, because with a digital twin, you can use extreme circumstances. You can test your plane.
A digital
twin.
Digital twins.
You can digitally test your airplane.
Yeah.
And generally, it's the same thing, without risking the life of the pilot and the passengers. So that is, and without risking your money also. So that is extremely good.
Yeah. If you just think, by the way, we're being cautious about the introduction of AI. We don't want to get caught up in the hype. We want to focus on the substance and just carefully introduce it. But to illustrate the point that we're all making, in Australia, 3 years from conception, design, build to first flight, we Boeing in Australia have built an AI-powered autonomous military aircraft. It's subsonic, it's 38 feet long, 30 meters long. It will have a module, it has a module in the nose. We did 2,000 digital twin flights before we actually flew the aircraft. We've now flown it as twins. We've linked it up with a Super Hornet, and we've done 110 flights. Now that has all been made possible by the application of AI to the development of autonomy in an advanced resin-infused manufacturing.
When you're introducing the AI component, is it sort of flagged as AI? Do you know what I mean?
No, it isn't. It isn't. It's
or is it just, just part of now of the process? We've got this new piece of software.
Yeah. No, actually, that's exactly it. You got the new piece of software, and you got to learn to use it. We have, Leonardo was lucky enough, the previous management was smart enough to invest in the 3rd most powerful supercomputer in the world after NASA and Japan Aerospace. So it's become part of how we live, and it eases your life and it helps you out.
Yeah.
So it's flagged as, hey, you've been doing this, keep doing this, add this part. You don't know how to do it, I'll teach you how to do it. And you convince people and bring them along.
But I think
when the helicopters guys when the plane guys saw that the helicopter guys were ahead, they're going to follow up. Like the farmer next. That's how it works.
I think you need to see it as a new tool. It's a new tool in your toolbox that is there that you didn't have before.
I'll give you
use it at the right time.
Yeah, and I'll give you 2 examples. So I'm not the smartest person at Boeing. I hope I'm not the dumbest. But I looked at the instructions that our workforce has, the mechanics, in actually on the production line making the planes. I looked at them and I thought, my goodness, what does that mean? Then AI, we used AI to convert it into a simpler language. Even I could understand it. The other thing is, as we all know, if you take the inside cladding off a plane, you've got thousands of wires and bundles of wires, and I look at it and think, who on earth designed all that? How long did it take? We apply AI to it, and we've considerably reduced the amount of time that it takes to design where those wires are going to go, how they're going to be bundled, how they're going to be placed in the aircraft to increase the safety, the quality, the efficiency, and reduce our costs.
Last question.
Yes, sir.
Or thereabouts. When do you think we will have a plane? We know it can fly itself, but that we will have a passenger plane that will fly itself. No pilot at the front.
Let me ask you a question. Would you fly on one? When people are ready to fly, we'll be ready. People are not ready to fly. They're not ready to take a robocab or whatever.
Yeah. I would agree. It's
Elon
not a question
says.
of technology right now. We could do it, but
Yeah,
it's a question
the technology
of
is there.
acceptance.
Would you take a plane without a pilot? No.
Well,
so when people are ready, we'll be ready. That's your question. That's your answer, as concerns me.
All right.
The answer, by the way, the answer to your question is essentially now the future is here. We have a fully autonomous air taxi that we're going through the process now, WISC it's called, going through the process of certification with the FII at the moment. And by the end of this decade, we expect that autonomous air taxi will be flying. But like everybody else, I don't care, and I have absolute confidence in autonomy. It's a safety thing and all that. But I can tell you, Richard, I'm not going to be getting on a plane unless there's a couple of people at the front of it.
We are already flying cars. No, I wouldn't take a plane.
Sorry?
Unless it was built by Leonardo, I wouldn't take a plane. Of course, I love my colleagues. Actually, I hope he has success because we're their suppliers and they're good to us.
Yeah.
We are already flying cargo. I don't consider myself cargo. Maybe my wife does, but I'm not cargo. I wouldn't fly as yet. And I agree with you. He builds the best planes in the world.
Right.
So he knows.
Just quickly, a quick hands up. Today, hands up in this room, who would fly on a... Bearing in mind these gentlemen have told you it's perfectly safe, magnificently safe, wonderfully safe. It's been tested. It's been twin tested. Who would fly on a plane without a pilot at the front?
He works for Boeing, huh?
Who would not?
There you go. There's your answer.
Who's in Saudi Arabia and doesn't want to answer?
You know, the truth...
30%.
Shedding away everything.
Yeah.
There is not the business case for an autonomous plane. I mean, they're doing it.
Absolutely.
There is not the business case for an autonomous business case for autonomous flying stuff, except for drones, which bring cargo. All of us do that already, but people not yet.
Why do we still love flying?
To get from A to B. To get from A to B is the fastest way.
Well, Richard, you need to do a rerun of Love Actually. You need to watch Love Actually again, the film, and look at all the joy people have coming off a plane into an airport. Not all.
See, I always said that Sydney Airport, the first time I went to Australia, Sydney Airport, I think, is not so much now, but I think back in the early 90s when I first went there, was both the happiest and saddest place in the world. The happiest because you were seeing people greeting people they hadn't seen for decades, and the saddest because they were saying goodbye to people that they would never see again, arguably, parents, family, relations.
But, people want to be connected, Richard. And I think that's the reason why, airplane will be around. We need to be able to move around the world. The world is getting smaller and smaller. So we need to find a way to do that. But, respecting, the environmental constraint we have.
Yeah. And Richard, look, as I said, 80% of humankind hasn't flown. We kind of take it for granted. We grizzle about it at times, except, of course, we're on a Boeing plane. But people, young people who just dream of it. I met a young girl here in the Kingdom who has cerebral palsy. She's 7 years of age. Her dream is to fly. And we are all in the business of allowing people to do that. The US-China relationship is not in the best shape, as we know. I have responsibility for working with China, the second biggest commercial aviation market in the world. And I say to the Chinese, through all of the noise, our ambition has to be that Chinese people can fly to see their family, their friends, conduct business, enable commerce, take China and its culture to the world and bring the world to China. That's why it's important.
One place in the world you've not been to, you want to go to or would like to go back to and see again?
Australia.
What?
Australia.
Oh, that was easy. Ambassador?
Bruny Island, Tasmania, Australia. Oh, all right, I'll go for a non-Australian. The city of Ypres, which is in Belgium, it was the site of one of the most longest and tragic battles of the First World War.
Maybe, Richard, one thing that's important, and we see people how they react. After COVID, when airlines were grounded all around the world and couldn't fly, that's what had an impact on our business. People wanted to move around and go see their family, their kids, and private aviation has exploded because of that.
The one place you want to go?
Tokyo, Japan. I love it.
That's three good answers. Ladies and gentlemen.
Unless it's Riyadh.
Oh, please. Please. Our panel, thank you.
Thank you so much.
Becky. Dear colleague, Becky Anderson is...
Richard.
Thank you.
Thank you very much indeed. Inspiring conversation as ever. Thank you to your esteemed panelists. I am absolutely delighted to be, I don't use the word moderating, in discussion with a very special guest for you here today, Saudi Arabia's Foreign Minister, Prince Faisal bin Farhan Al Saud. And I want to sort of bookend this conversation by placing it within sort of the lens of Vision 2030, where Saudi Arabia is today, what is going on in your file, and close with where you hope we are headed 5 years from now and beyond. Let's start with today. How are you?
I'm well, thank you. Happy to be here.
Good. I hope you'll feel like that at the end of this conversation.
I'm sure I will.
Saudi Arabia's #1 priority today, and this will be absolutely no surprise that I will say this to this audience gathered here, is the implementation of Vision 2030. Midway through, we are already witnessing huge societal and economic change here, and an increasingly influential role on the global stage. The primary task of your file, sir, the Kingdom's foreign policy, is to enable that vision by reducing threats posed to Saudi Arabia's economic success by instability or conflict in the region, amongst other things. But let's start there. Is that a fair assessment?
Absolutely. That's the primary mandate of myself and my ministry. It is to protect Vision 2030, to protect Saudi Arabia's pathway to prosperity. But not only that, it's also part of our mandate to enable everything we're trying to do in the kingdom under Vision 2030. So whether it's enabling our colleagues in the various other parts of the government to reach out to the world and making sure that they are able to engage with the world in a positive and proactive way, whether it's making sure that our relationships are serving the joint interests, the interests of the kingdom and of our partners. So it goes well beyond just protecting the kingdom's stability and protecting our neighborhood stability. It's also really an enabling function for all of the economic elements of what we're trying to do.
Well, given that, what's been the impact to date, to your mind, of the regional conflicts that we see today, and your assessment of the risk of a spillover should these conflicts further escalate?
So I would say there, of course, has been an impact. We've seen the Red Sea, other things, but the overreaching impression that I have and that most people that I talk to have is that actually we have shown ourselves, especially in the kingdom, but also in the GCC, to be able to really deal with the situation in a way that allows us to continue our pathway to prosperity while addressing the challenges of regional peace and stability. So whether it's the event here, where I'm sure you've been having some very interesting discussions, whether if you see all of the various verticals in Vision 2030, the numbers, great progress, even though we are facing some geostrategic headwinds, geopolitical headwinds in the region, that hasn't thrown us off course. And that, I think, is a very, very positive signal that we have built a maturity, that we've been able to build a maturity into Vision 2030, into the Saudi economy, into the GCC economies as well, that allows us to be able to withstand any side impacts from geopolitics. That, coupled with the very wise policies that the leadership of the kingdom has instituted and we have followed, that has allowed us to really keep the kingdom focused on its developmental path rather than getting drawn into any of these regional conflicts.
Would you then, or would it be fair to suggest that there is a sort of policy of strategic ambiguity or sort of neutrality when it comes to what is going on. And I do want to go on very specifically to the files of Gaza, Lebanon, Iran. And I know we'll talk about, you know, the efforts that you have been making behind the scenes to ensure that there is a solution at the back end of this. But how would you just describe that? Because there will be some who say, you know, you could have, the Gulf countries might have done more earlier to try and effect some sort of change.
Well, I will say on the kingdom's part, we have been anything but ambiguous. We have been quite categorical. We called, in the instance of Gaza, for instance, for a ceasefire from the very beginning. We were very clear that even with the horrors of October 7th, that an overreaction by Israel was extremely dangerous. And we have seen the reality that Israel's reaction and its continuing military assault in Gaza has led to a humanitarian catastrophe that has not only impacted the citizens of Gaza, that has not only resulted in tens of thousands of unjustifiable civilian deaths, it's also really put a huge question mark on the international systems of rules and governance, on the legitimacy of international humanitarian law, international law, and its applicability in ways that have been really ununiform. So we've said that from the beginning, so we have been very unambiguous about it. We will continue to engage. We engaged from the beginning as well on trying to find pathways out of the conflict. You know, we have the group, the Arab League OIC contact group, but we also had a group of Arab states that had engaged with the United States and others to try and find ways to reach a potential ceasefire, supporting, of course, the efforts of the US, Qatar, and Egypt, and others. So ambiguity is not what we, in the kingdom, practice. We practice a very clear foreign policy based on clear guiding principles, but also, of course, from a prospect of not being drawn into confrontation in any way.
And I think, you know, that most people would absolutely agree that there has been a significant effort on the part of the Kingdom of Saudi Arabia to try and effect a solution here, and a solution that has a pathway to an independent Palestinian state and the end of the occupation by Israel. You have described Israel's assault on Gaza as genocide, and you've talked about Israel having to face consequences. What do you mean very specifically by that?
I mean, if we look at just what's happening now in northern Gaza, where we have a complete blockade of any access for humanitarian goods, coupled with a continuing military assault, without any real pathways for civilians to find shelter or to find safe zones, that can only be described as a form of genocide. It is certainly against humanitarian law, international humanitarian law, and that is feeding a continuing cycle of violence, because this level of destruction, this level of really devaluing of human lives, of the lives of ordinary Palestinians, will feed a cycle that is against everybody's interest. And that's why we are trying to focus, even in this very difficult time, on a better future. And that's why we have focused on the issue of a two-state solution, of building a Palestinian state. I will say that while we talk about a two-state solution, the reality is the state of Israel exists. So now it's about establishing the state of Palestine and ensuring that the Palestinians can reach a place where they receive their right to self-determination. And that's our focus, because, again, similar to Vision 2030, similar to what we're trying to do for Saudi Arabia, we want to look at this region from a positive side point. And that means we want to look to the future. We want to look towards a future that is stable, that is safe, where everybody can work with each other, where we can all cooperate with each other. And that's why we're focused on trying to find not just an end to the immediate conflict, but to also work towards making sure that we do not get drawn into repeats of where we are today.
A couple of questions on that. In a speech on Monday, and you're right to point out there are, as we speak, ongoing discussions again about trying to find or at least get agreement on a proposal for a ceasefire deal, not just for Gaza, by the way, for Lebanon, of course, as well. And we'll get to Lebanon in a moment. But in the speech on Monday, the Israeli Prime Minister made no mention of a need to end the war in Gaza, no talk of any, quote, day after plans, no mention of the Palestinians. Now, you have been, and just this week with the meeting here in Riyadh, hoping to get some concrete steps that would, as we say, create this pathway to a Palestinian state or an independent Palestinian state. How concerned are you when you hear no mention of the Palestinians, nor any mention of the day after by the current Israeli Prime Minister? What does that suggest to you? And when we talk about a pathway, what does that specifically mean?
I'm, of course, incredibly concerned because that tells me that there is a real lack of understanding of the strategic reality. We are here in this region. We are stuck in this region, all of us, the Palestinians, everybody, and we're going to have to find a way to live with each other. And we can only live with each other if we address the rights of the Palestinians, if we address the issues of injustice that the Palestinians face right now, and that is going to have to be a serious discussion. If that's not going to happen, we are setting ourselves for a continuing cycle of violence that serves no one except the extremists. What does a pathway to a Palestinian state mean? That means many things, and that's why we have this new, that's why we, with the European Union, Norway, and our colleagues in the Arab League and OIC launched this coalition for a two-state solution. Because we realize that, just as you said, that perhaps in Israel, unfortunately, the conversation right now isn't addressing the reality that there's going to have to be a two-state solution. The rest of the international community seems to be fully committed to that. Now we need to translate that commitment into concrete steps. That's going to include capacity and state building, building of state institutions within the Palestinian territories. It will also mean that we have to build on the existing international law that supports the establishment of a Palestinian state. From our perspective, of course, Palestine should become a member of the United Nations without delay. All of these issues are things we want to work on. So there are elements of Palestinian statehood that are tied, obviously, to a negotiation between the Palestinians and Israel, the settlement of borders, things like that. But in reality, the establishment of a Palestinian state is not tied to whether or not Israel accepts it. It's tied to the principles of international law. And I will say that the United Nations resolutions that led to the establishment of the State of Israel clearly had a Palestinian state in view as well. So we need to make that happen.
What you have made clear is that any normalization deal with Israel would need, before it was a reality, you would need to see at least a viable pathway towards a Palestinian state. So a couple of questions to you. Will a verbal commitment from Benjamin Netanyahu suffice? Were you to get on a sort of, on a pathway that you felt was worth sort of tabling for an independent state? And if not, what specific measures does Saudi need to see to move forward? And what is Saudi Arabia's message to Benjamin Netanyahu? Is normalization with Israel at genuine risk should you not see this commitment from Israel?
I would say certainly normalization with the Kingdom of Saudi Arabia is not just at risk, it is off the table until we have a resolution to Palestinian statehood. But I would say more than that. I would say that it is not just the issue of normalization with the kingdom that is at risk. I would say that the security of the region as a whole is at risk if we do not address the rights of the Palestinians, if we do not find our way to a pathway that leads us to a Palestinian state, because that's the only way we can ensure that we can focus on the future, that we can focus on cooperation, that we can focus on integration. So I would hope that the leadership of Israel sees that it is not just the right thing to do, it is not just the moral thing to do, it is not just the just thing to do to give the Palestinians their rights and their state. It is also in the security and strategic interest of Israel to do so. And that's, I think, up to them to decide.
Let's talk about Lebanon. if we can. And thank you for being very clear. Before I talk about Lebanon, in fact, let me just ask you one very specific question, both on Gaza and on Lebanon, as I've suggested. There is some effort being made to try and find a deal at this point, albeit temporary, on both sides, both for Gaza and for Lebanon. Both of the conversations, discussions seem to be about a sort of temporary, month-long ceasefire at this point. Certainly the Lebanese Prime Minister is optimistic. He says that that deal for Lebanon could come in the hours, if not days, to come. Do you share his optimism, and how do you feel about any progress being made for Gaza at this point?
Yeah. I would say I hope it's the case that we can see a ceasefire in the immediate hours, in the immediate short term. I'm not sure that that's the case. I don't have the details. We are not part of the direct negotiations that are going on. We certainly support the effort that the US is undertaking to find a pathway to a ceasefire. I hope it comes to fruition. It's the same for Gaza. We have had, unfortunately, many false starts, many pronouncements of a near deal for a ceasefire in Gaza, only to be disappointed. And my understanding is that we have in most of those instances where the talks eventually collapsed, it has been because there have been new requirements or new demands added on the part of Israel. I hope that at this point we can finally reach a ceasefire that spares what is left of Gaza, the people of Gaza, and gives them an opportunity to finally see some peace.
I've just seen a statistic that every 4 days a child is dying in Lebanon at present as well. So clearly, an enormous effort needed to try and find a solution there. What needs to happen in Lebanon for Saudi to re-engage more than just on the humanitarian side, which I think we must absolutely acknowledge you are involved with the air bridge setup. But what needs to happen for Saudi Arabia to sort of officially re-engage and provide the sort of support Lebanon has seen from the kingdom in the past?
I mean, we have always been engaged in some forms with Lebanon. We have never fully disengaged, but of course, we continue to have the view that it is up to the Lebanese and Lebanese politicians to seek a direction that puts Lebanon on the right track. It's not up to any outside influence, any outside countries, any outside powers to tell the Lebanese what to do or to influence the political process in Lebanon. That is our opinion. So we engage with our friends in Lebanon, but we are, again, it is up to the Lebanese. We have the presidency that continues to be unresolved. We have a government structure that is not really conducive to good governance. We have issues beyond that of corruption, etc. We have issues of outside parties dominating the scene. All of that needs to be addressed by the Lebanese. And if we see a sense that that is really on the cards and that we can move forward, certainly that would encourage us to come in and be more engaged.
And inside parties, of course, still playing a role and influencing politics, and by which I'm talking about Hezbollah as a political party. Are you prepared as the kingdom to be better engaged going forward and significantly engaged in order to help Lebanon on the sort of road to recovery, with Hezbollah still involved in politics, if not as the sort of strategic militant group that it has been in the past?
Yeah, I mean, from our perspective, it's up to the Lebanese, as I said. I'm not going to right now discuss what exactly the shape of Lebanon should be, because it's up to the Lebanese to decide. Whatever we see from that is going to inform our judgments as how much we can engage, how much we can work with Lebanon, how much we can facilitate progress in areas there.
Do you see any signs that Iran is putting pressure on its Lebanese ally Hezbollah to accept a truce? You have decent contacts now with the Iranians. So I'm just wondering what your sort of understanding is.
I mean, I certainly hope that Iran, like us, is working towards regional de-escalation on all fronts, not just in Lebanon. And that's very much the focus of our conversations, my conversations with my Iranian counterpart. What I hear from the Iranians is that they are indeed very much keyed into the fact that a continuing of the cycle of escalation is not in their interest. I do hope that they are translating that into actually practical steps.
Well, let's talk about Iran. Are you confident that Israel's recent retaliatory strike on these selected military sites in Iran signals the end of what has been this face-off that otherwise, threatens to plunge this region into further chaos?
Am I confident? I cannot be confident of anything that is in the control of other parties, other actors. But what I can say is that I have made it clear to our Iranian counterparts that it is important that we avoid any further escalation. My sense is that at least on their side, that they realize the risks of escalation and would prefer to avoid it. But of course, they have their own strategic calculations that they're going to have to take. And that means that it's not just up to one party to de-escalate. Really, the only way for us to find a pathway to de-escalate all of what's going on in the region is for everybody to make a conscious decision that further escalation is dangerous, is risky for all parties. So that will also mean Israel will need to de-escalate. It will also mean that our partners in the international community will need to redouble their efforts, that we focus on de-escalating all of these issues. And of course, loaded on all of that is the issue in Gaza. Without finding a pathway to a ceasefire in Gaza, I think we continue to risk intended and unintended cycles of escalation.
Well, to that end, and with this sort of, and again, through the lens of sort of 2030 and the idea of navigating a new Middle East, navigating a new architecture in this region, getting to a point where the region can leave conflict behind, look towards a brighter future with economic integration and de-escalation. We have seen Iran and Saudi Arabia come to this rapprochement mediated by the Chinese. How would you then describe, some 14, 15 months on, how would you describe the kingdom's relations with Iran at present?
I think our relations are moving in the right direction, but of course they are complicated by the issues of regional dynamics. Certainly we have very, very honest and transparent conversations with each other that help in understanding each other's points of view and that ensure that there are no misunderstandings. And I think based on that direct communication, we are able to slowly build in the direction of a much more stable and strong relationship that can serve the interests not just of our two countries, but of regional stability. And we're doing that very much in concert and coordination also with our GCC allies.
Is it the view of the kingdom that the regime in Tehran will fundamentally change anytime soon? Or is this rather a policy of keep your friends close and your enemies closer at this point?
I mean, how Iran governs itself is really up to Iran and the Iranian people. That's, I don't have an opinion on that at all. What matters to me is regional policies and policies that impact my direct interests. And in that case, certainly the conversations we are having indicate that we can reach a certain point where we are cognizant of each other's interests, cognizant of each other's concerns, and making sure that there are no misunderstandings that could lead to any form of risk for
that. I understand. The reason I ask, of course, is that the bottom line is that for years Iran has been the biggest threat to Saudi Arabia's security. We've heard it said time and again. So I just wonder at this point, how big a threat does Saudi still see in or from Iran? And at this point, is this a case of implied threat, direct threat at this point? I mean, have you been in conversation with Tehran about whether or not, a continued escalation could put Saudi's security at risk? Has there been a direct threat from the Iranians?
Certainly there have not been any threats, but the issue that we've had and that we can, that was the basis for let's say, the divergence in our relationship was the fact that Iran's regional behavior, from our perspective, was not conducive to stability. And that's something where we are having very, very clear and honest conversations with the Iranians, was part of the conversations in Beijing. And I think we are having those conversations in a way that can ensure that we are moving in the right direction.
Is it more than conversations at this point? There have been reports of more than one military exercise between Iran and Saudi Arabia in the Red Sea and the Gulf of Oman. Is there any truth in that?
There haven't been any military exercises, and I think given the current regional context, it's unlikely that there are going to be exercises in the near term.
Well, thank you for clarifying that. Because I did wonder whether if those had been going on, how those might have been seen in Washington. You've just told me they haven't, so I'll rest my case on that one and move on to US-Saudi relations, if that's okay. We've discussed the critical importance of regional stability and security through the lens of Vision 2030, which I think, I hope you would agree with me in saying it's an unapologetic Saudi-first policy. Many countries around the world, many very successful countries, most successful countries, have a first policy. America first, wherever it is around the world, and this is a Saudi first policy, putting your sovereign interests and national security squarely at the front of your thinking. For years, there has been a sense of disillusionment in this region about the reliability of the US as a guarantor of security. So let me just start there. In 2024, as we sit here today, does the Kingdom believe the US is a reliable partner?
Certainly, we have had a very important and beneficial strategic partnership with the US, both economically and from a geostrategic and security perspective for many decades. And I would say that today that the working relationship with the US is among the best we've ever had, including in the national security space, but also in issues of economic cooperation, and we're making very, very good progress. It's of course the case that the region is very different today than it was 20, 30, 40 years ago. The Kingdom is very different than it was 20, 30 years ago, and that means the dynamics are somewhat different. It doesn't mean that there is a change in the relationship per se. It just means that we are working together very, very differently. And it also means that we are playing a bigger role in our own national security interests. It also means that we are much more active in diverse partnerships rather than focused on one partnership. All of that is a function of the growth that the Kingdom has shown, that the Kingdom has seen. The growing geostrategic relevance of the region is actually one of the kind of surprising things, perhaps, that some theorists might notice, that although some years ago there was kind of this idea that our part of the world would decrease in geostrategic relevance, it's actually the opposite. It has just gained, because we are not only continuing to be an important supplier of energy in the traditional energy forms and a source of energy security, but we are also proving to be a critical hub for many of the future technologies, whether it's renewable energy, solar, etc., or digital technologies, AI, data centers, not just because of the cheap energy that we can produce from renewables, but also because of our geographic location, which means we are one of the best places for access. So the relevance of our region, and certainly of the Kingdom, has increased, and that has meant that we have had, because of our policy of putting our interests first, which I think it would be odd if somebody didn't do that, focused on diversifying our partnerships as much as possible.
And it hasn't gone unnoticed that in a changing global growth paradigm and dynamic, there is significant growth here in this region. And I think that's well acknowledged around the world. Maybe people are a little bit slow to catch up with that. And also, of course, incredible capital heft as well. Let's stick with this US relationship and how it's developing, because you still don't have the defense deal, but these days this is a defense plus deal, which I think very much speaks to your point about the growth and power and opportunity that there is here, Part of this deal, this bilateral deal, is about a civil nuclear program. Much of this is about trade. It's about investment, Saudi investment in the US and US investment here. That deal is not yet signed. We keep hearing that this deal is close. Is the kingdom on a promise that a deal will be done before the end of this administration?
I mean, the bilateral agreements we are working on with the US are actually multiple agreements. Some of them we can progress probably quite quickly, and some of them we are working on, especially those related to trade, AI, etc., and which are not tied to any other third parties, let's say. Some of the more significant defense cooperation agreements are more complicated. We would certainly welcome an opportunity to finish them before the current administration's term, but that's reliant on other factors outside of our control. And in the end, if we reach them, that's fine. If we don't, we have a very, very strong working relationship with the US, even on defense cooperation as it exists.
Let me
serves
press you
both of us well.
Because we know that Washington wants normalization bolted onto any sort of broad deal. Is that realistic at this point? And are you prepared to walk away from some of this sort of bilateral deal content if you say, and you can't see normalization as an option from the Saudi perspective at the moment?
There's one element of the bilateral agreements that we're working on that is very much tied to normalization, and we've made very clear, the Crown Prince in his speech to the Shura Council made very clear what would be required for the kingdom to establish diplomatic relations with Israel, and absent that, we are quite happy to wait until the situation is amenable. The other work streams are not that connected, and some of them are progressing quite quickly, and we hope to see moving forward.
And we'll keep an eye on those. I've got one more question for you. It's probably going to be two, but it's broadly one more question because it's about the US elections. Just days to go before the US election. I mean, literally just hours to go now. Is it clear to you which candidate would be the best for the Middle East in general, in particular for solving the Israel-Palestine conflict? And do you have a candidate that better understands the opportunities afforded by Saudi Vision 2030, and who would Saudi prepare to work with?
We are quite prepared to work with either administration or either candidate should they gain the trust of the American people. It's really up to the American people to decide who is the next president. And we've done well historically with both Democratic and Republican administrations. Obviously, we've worked with President Trump before, so we know, we know him, and we can find a way to work with him very well. But we also know, obviously, the team that is currently working with the Biden administration, and Vice President Harris is part of that team, and we've been able to build a very strong working relationship. So we absolutely have no preference. They will certainly be different. Whether one or the other would be better, this is not up to me to say.
You haven't been in this business as long as you have, not to be the consummate diplomat, and you absolutely are. Donald Trump claims he is capable of bringing peace to this region. Sir, yes or no, is he right?
I certainly hope if the American people choose to elect him president that he brings peace to the region.
And with that, I leave it there. Foreign Minister.
Thank you.
Your Highness, thank you.
Thank you very much.
This tension between the old order and the new order, I think, is a real phenomenon that the West is going to find very difficult to get their minds around. It means that you will have a two-horse race or a multi-horse race rather than just one.
I think to me the key is, how do you go on events like this to find young, smart, creative people that are leveraging technology to do the fintech revolution, to do the trade revolution? How do you move that over to public policy? What makes me sad is that governments are always well behind in adapting to technology, to digital opportunities, and to artificial intelligence.
We are being, for the first time, real about
solving the climate crisis, and blending the government with the private markets. So it can be fluffy from time to time, but I think now we're taking it seriously and we're seeing amazing founders building impact-oriented ventures and amazing capital allocators blending financial return with the aim of getting social and environmental positive outcomes.
I love what is going on in the Global South, and I think the future of the world, the power is changing to this part of the world.
Give the example that if you want to make it, you can make it. It's a lot of hard work, and I always think it's a great privilege to be opening doors. So to be the first, I think is an amazing privilege.
Governments, they push the development, but we need the private sector to get things done. They are the one that creates jobs. So if government gives people opportunity, give them opportunity of having skills to get the jobs delivered by the private sector, that's how things are going to move.
I am convinced that the next 5 years will see a huge change of the way we'll be living, the way we'll be traveling, the way we'll be eating, the way we'll be even gathering. So everything will change. And this is the next big topic, is how do we see the world, not by 2050, but just by 2030.
A hero with 1,000 faces. Each of us, you, me, and the people we talk to, the entrepreneurs, investors, each is a hero in their own career, in their own family. They're trying to be a role model and for their next generation, and also do something that's courageous for their industry.
If you were living in the chocolate factory of Willy Wonka, there's like a golden bar going around that is about all the environment, all the climate, all the needs for food around the globe.
You have the power to change the future of a country. You have the power to change the future of people. And it's fantastic. That interests me because it touches culture, economy.
Ladies and gentlemen, I'd like to thank His Highness and thank you to Becky Anderson for that important and very timely conversation. So we talked a lot about conflict in that interview. We're clearly very deep into the challenges that are facing humanity. But now we're ready to talk about a solutions-driven world where peace and humanity come first. I'd like to welcome everyone that's in the room. If you're in the back, come up a little closer. You are in for a treat. I want everybody to gather around here in the front. This is going to be a very dynamic session. So we're going to talk about how technology and AI can transform daily life. We're going to talk about how urban economies can truly reimagine our communities, and new solutions for food, for energy, can truly answer the call for climate change. We're going to ask the questions: what will our cities look like? What will food in the future look like? What will sustainability look like? And as you know, we are nearly around the corner from 2025. This is the 5-year run-up, ladies and gentlemen, to a big year here in the kingdom. Vision 2030. How will we get there? So I'd like to welcome a very special person to the stage right now, because he has truly set us on the path to get there. Ever so often there comes a leader that has the vision and the creativity, the capacity to enact a transformation. That's what he has done here in the kingdom and around the world. I'd like to welcome my co-presenter for this session, the CEO of FII, Mr. Richard Atias, onto the stage. Can we get a big round of applause for him?
Thank you, Mariana. You are too much, really. How are you?
Very good. So we're going to have a lot of fun with this session, Richard.
I hope
yes?
so. I think it's promising. We have a great group of people, and it's good to look forward after this great geopolitical conversation. But before that, if you allow me, Mariana, I would like to stick on one thing important as UFI Institute. As you know, we always like to be concrete, and we want to launch initiative for all of us. Yesterday, Peter Diamandis was presenting, in fact, day one, a great initiative at the FII Institute launch on AI inclusive. And now in 2 minutes, I will launch an initiative for all of you. In fact, for our humanity. It's an initiative extremely important to me because I'm a strong believer for decades on preventive medicine. This initiative is called the FII Healthy Humanity Initiative. So as you know, we launch every year our FII Priority Compass, which is an amazing index, a survey, and the findings of our Healthy Longevity Compass are very clear. There is an urgent need, I'm quoting almost all citizens, to support preventive medicine, holistic health, and global well-being. So it seems that everyone is extremely concerned by the health, probably one of the consequences of COVID. And this is why today I'm extremely honored to launch our groundbreaking Healthy Humanity initiative to improve well-being worldwide through preventive health. So it's quite very simple. We are pleased to be already working with our knowledge partners, the General Secretary of the Saudi Ministerial Committee for Health in all policies of this initiative as an example of good practices and in preventive medicine. But the initiative, as you can see on the screen, is very simple. Very simple. What we want to do is to create a healthier world and set a new standard for global well-being. So how do we want to do it? It's quite simple. As you can see, we want to have the commitment. We want to have the commitment from corporations. What do we want from you, global CEOs? We want you to provide free preventive health checkup for your employees every 2 years. Very simple. I think it is a less that we can do for our employees. We cannot just talk about them. We cannot just say that this is our main resource, human capital. Let's support our employees and let's provide, I repeat, preventive, free health checkup for our employees every 2 years. What do we want from the healthcare insurance company? We want you, insurance company, to cover 50% of the checkup cost. Trust me, you will save a lot of money by financing this checkup instead of paying fortune for, God forbid, when people are sick. So this is what we want. We want you to cover 50%. And then government, policymakers, we want you to support the corporations. We want you to support the employees who are the citizens of nations. And we want you to support also the healthcare insurance company. By doing what? Very simple. We want this benefit to not be taxed. So this is why we invite many corporations. And during these past 3 days, we had a great opportunity to talk to many corporations. As of today, since few days, 20 large corporations had decided to join the movement. Already 4 or 5 governments will make that public very soon. And we hope that this movement will become global. Because as we say, sometimes there is this famous quote, happy wife, happy life. So let's make happy employees, happy corporations, happy citizens, happy nations. So I hope you will support our initiative, and I hope that in 1 year from now, we will have a lot of progress and it will become a global movement. Thank you for your support.
So Richard, you are already reimagining human health and longevity. And that's what the leaders that we're going to invite on stage are doing in each of their distinct sectors and industries. So to celebrate the march to 2030, we have invited some of our most respected speakers to deliver very short talks. These are 5-minute talks on their visions for the world in 2030. And Richard and I will be asking only one question of each of our speakers. So please welcome our first speaker to the stage. His name is Dr. Kai-Fu Lee, CEO of 01.ai. Big round of applause for him.
So, just a few words about Dr. Kai-Fu Lee, who I know very well, is a very dear friend, always good to have you. He's a recognized leader in AI with great experiences at Google China, Microsoft, Apple. Dr. Lee is also a best-selling author, mentor to many in China's AI community with almost over 50 million social media followers. So, my dear Dr. Kai, I have one question for you. One question. In fact, 2, which I will combine at 1. because it's too complicated to have only one while we have the advantage to be with you. So how do you use AI in your everyday life? And at the same time, what is your advice to the youth about how to benefit from AI technologies? The past 3 days, everyone was talking about AI, but let's try to be concrete. How should we be involved on AI?
Okay, well, thank you very much. Such an honor to speak at the closing session. I've been working on AI for over 40 years, and it is exhilarating to see that it's come to fruition. And the first point I want to make is that, yes, we're looking at a 5 to 6 year vision, but what's going to change in just the next 2 years will be phenomenal. If we want to see what's going to change in the next 2 years, let's look back at what happened in the last 2 years, or a year and a half. 2 years ago, ChatGPT was launched. Shortly after that, GPT-4. We're now a year and a half after GPT-4 was launched. And my company, 01.ai, has just launched a new model called eLightning that is better than GPT-4 and 500 times cheaper. So of course, other companies have also built great models and at lower costs. We are seeing technology getting better and better. We're seeing every year and a half or so, with additional computation, AI goes from a kindergarten to elementary school to high school, college, and soon PhD level. And that will help us do so many tasks in our lives, and we can almost predictably see what that will do given the speed of change and the dramatic cost. Some of you might be a little skeptical and say, well, I don't see AI apps everywhere. And the answer is they are coming. And the reason I'm confident is that GPT-4 was the first great model, but it was too expensive. It's 500 times more expensive than the equivalent technology is today. Imagine if your cars became 500 times cheaper, your house or your phone. Wouldn't that make something completely proliferate the entire world? That's what's happening with AI. Costs coming way down. We've never seen anything costs coming down this quickly with incredible capabilities. So what are the set of things coming? First prediction is every app we use will be rewritten in such a way that it will be AI first and AI native. That means when you use a search engine, you're not typing words and getting links. You're asking a question and getting one correct answer, saving tons of time. And that's one of the tools I use every day. And when I write a speech or write a paper, I no longer write it myself. Microsoft Copilot is a good product to help me write, but in the future, AI should write everything for me. It should know me better than myself, and then I would just tweak it, which is, again, what I do every day, Richard. And so AI is basically progressing the same way that PC and mobile have gone. First letting us browse, then letting us create, then letting us search and organize. Then what's next? Multimodal. Pictures and videos. When I want to look for something, it should be enriched. And I want to be able to create multimedia content. And it should understand everything I write and every figure and everything I see. And that's multimodal. And after that, it should become agentic. That is, it's not only giving me text and images back, it can do things. When I tell it my wife's birthday's coming up, it will get her a cake, flower, and present on my behalf instantly without taking any additional time. So it will know me better than myself and get things done. That's the first phase. This is really a productivity phase, replacing every app, therefore creating huge investment and entrepreneurial opportunities. But there's a lot more beyond that. Beyond that, we should expect to see devices change. If this super smart thing, I just say a few words and things get done, why should I take out my phone, open my app? It should be another device that's with me all the time, listening to me all the time. When I speak, it does things. So it might be a ring, might be a watch, might be earrings, might be a pin. So a change in device will come after that. Then it will come in the environments, spatial AI, listening to us, understanding us. Right now, the data that's used to teach these large language models are text, increasingly images, video, speech. But in the future, it will roam the earth, just as Elon Musk talked about. These robots and autonomous vehicles, they're also data gathering and self-learning. And beyond that, we should expect AI to become more autonomous, more intelligent, more creative, able to think and learn on its own. And these are the expectations for the next 5 years. And the big question people have is, what does that leave for us? I'm a strong believer that we as humans are connected by love, by trust, and by self-consciousness. And despite everything that AI can do, it is really just liberating us from having to do routine tasks so that we can focus on our love, empathy, trust, and emotions and build a better world. Thank you.
Thank you, Kai-Fu Lee, thank you.
So how would Cecilia feel if she gets flowers from you that were sent by an AI? No, she says, no.
She knows that AI robot would never have my taste, so no problem.
Absolutely, absolutely. We have our next speaker onto the stage. She is one of the most trailblazing women I've truly ever met in my entire life. Her name is Diane Eisner, and she's the CEO of Cruise by Core, transforming construction with AI in the kingdom and beyond.
Thank you so much. Actually, I'm now the Chief Strategy Officer of WakeCap Technologies, which I announced I was selling to at the last FII in Rio, the largest Saudi construction software company. But that said, I've been working on, can I not stand there?
Please, of course.
I've been working on urban technologies for a very long time. Mobility through Waze, starting the Urban Systems Lab at Google, and the city's division of WeWork. Most recently, construction, because that was the biggest issue we were facing with preparing our cities for the future. And none of that has touched the most important issue facing us right now, and that is our urban economies and the future. We are sitting now at this explosion of technology, of opportunity that we've been talking about all week. And it's going to take place in cities. That will be the stage. Cities are opportunity, cities are finding your tribe, and cities are the density we need to launch entirely new industries from these technologies. So if I look at 2030 urban economies, they will be fueled by AI and robots and climate tech, and it's very exciting. But the reality we have today is that we have affordable housing crisis. Due to affordability, we have population decline in some cities. We have 15% only of the world's 1 billion full-time workers feel engaged with the work or that they have purpose. We have fear among the entire population, the uncertainty of what these technologies are going to bring. And then I think about this other statistic, which is that, pick an average recent year, 82% of wealth creation is going to the top 1%, and that's us. All that really means is that the economic engines we've relied on no longer fit the future. They don't fit these technologies. So what are the emerging business models that are going to support and drive these technologies to serve us? Well, I like to think about multiplayer models when I think about business. And you know, there is one multiplayer model that has served us very well to some period in history, and this is franchising. And it sounds ridiculous, but it is about to get insanely cool. This is not fast food and car dealerships. This is about our ability to have, in each of our own cities, what we want from the best technologies around the world. This is a franchising of advanced technology, a network of access that will bring us lab-grown diamonds, lab-grown sushi. It will bring us biofabrication, where we're growing our own hearts and lungs and neurons. It is advanced manufacturing. Basically, anything with a robot and a lab can be part of this franchising of advanced technology. Let's call it FAT, because it's going to be relevant to what we're saying. Okay, we're going to call it FAT. Franchising of advanced technology. Before I get into that, I do want to say, do you know franchising comes from French? It means to free from servitude. So in 2030, we free ourselves from servitude with these new models. that allow for us to think about things like re-intermediation. So technology has driven us toward a perfect capitalism where there is very little friction between supply and demand. We like this. However, maybe we inject a little bit of fat because there are a couple of myths about recent models, like, for example, gig work, but also disintermediation being only good for the consumer. In fact, it has consolidated more ownership and potentially constrained the original companies from their potential growth. So this has a chance to really fuel our future, and definitely within our cities. You know, we have now the capability of remote operation and quality control and a global workforce that's going to allow us to be training. So there's no company that has these physical locations that can't start this right now. The big technology companies and our local entrepreneurs are going to be able to co-create how we unleash our economic potential in cities, and the cities will decide. They will say, this is relevant to me, I want a longevity center, well, I need access to specifically, urgent care. I want lab-grown diamonds, no, I want sushi. So technology this existential really needs us to lead and make sure that the models we're creating are leading the technologies into options that are going to lift us all up, create and distribute opportunity. This is our ability to connect citizens and cities to the growth engines of the future, and it's already within sight. We are going to do this by 2030. This is technology that serves us. This is us creating safety, opportunity, and superintelligence in our cities. This is technology serving us. Thank you.
Thank you.
We have one question for Deanne, and my question for you is, as the CEO of WakeCap, how are you positioned to usher that new urban economy?
So I'll just say I'm CSO. Once again, clarifying, my CEO is sitting right there, by the way. So how are we going to usher it in? Well, basically, WakeCap is working with most of the, many of the Saudi Giga projects. We're working on these cities. We're mandated on every Aramco project. We are helping build the infrastructure in a very safe, efficient way that's going to actually get our building done in time so that cities are ready for these new industries.
Thank you.
Thank you.
To talk about how food will look like in 2030. You're curious about that. We'd like to welcome to the stage the founder and CEO of Uvera Incorporated, Dr. Azrar Damdam. Round of applause for her, please. Food in 2030.
Thank you.
You were recognized also on the Forbes 30 under 30, so we are very happy to have you here because we need to give a voice to the young leaders, so please.
Thank you. Good evening, Your Royal Highnesses, Your Excellencies, esteemed guests. My name is Azrar Damdam. I am a scientist and entrepreneur with a PhD in food preservation technologies and the Internet of Things. In the past years, I've dedicated my career to exploring innovative solutions at the intersection of food, technology, and sustainability. And it's an honor today to share with you how I envision the future of food by the year 2030. Let me begin by a simple but profound truth. Food, water, and climate are deeply interconnected. Agriculture alone consumes 70% of our fresh water resources. And in a world struggling with water scarcity, the cost of food extends far beyond our economics. And it's a strain on our most vital resource, which is water. So if we are to secure a sustainable future, we must reimagine how we grow, handle, and value food. But today, I stand before you not to recount challenges, but to illuminate opportunities. I envision a future where innovation can transform scarcity into abundance. Consider a future where technology brings life to the desert. Imagine AI-powered greenhouses, vertical farms, aquaponics, and hydroponics that exist in arid areas, in places once thought too dry to produce anything. These technologies will not only grow food, but it will save water and it will help community be more resilient. And this rapidly growing sector is a powerful testament to how we can turn scarcity into abundance. Now imagine the transformative impact of extending the shelf life of fresh foods, a mission that my company Uvera has championed. 5 years ago, extending the shelf life of fresh food was a vision. Today, it is a reality. And by the year 2030, it will be the new norm. Technologies like mine and like other technologies, like other companies that focuses on reducing food waste will help reduce the global food waste, which currently accounts for 1/3 of the food produced for human consumption. And this will not only save resources, but it will also boost food availability for those in need, and will help fortifying global food security in future. And in this future, plant-based and cell-cultured protein will not be simply an alternative. I believe it will be an essential source of nutrition. Embracing innovations in this space will significantly lower our environmental footprint. Less water, less lands required for agriculture, and most importantly, less greenhouse gases emissions. This shift will not only benefit the planet, but it will also diversify the nutrition for the growing population sustainably. Finally, food in 2030 is not only about the environment. It's also about our health. It's about how we choose what we eat. That's why I envision the adoption of a new concept called the food compass. The food compass is a nutrient profiling system, a very comprehensive nutrient profiling system that will help us wisely choose what we eat. It's currently under development in some research group, but I believe we will be able to use it by 2030. So by 2030, we will be able to take wiser decisions about what we eat, and for the food industry, they will have to prioritize health and nutrition in their food offerings. By 2030, I believe we will witness a food revolution driven by innovation and sustainability and health. And it will be a world where water resources are cherished, food waste is a relic of the past, and our diets reflect a harmonious relationship with Earth. So as we look forward to the year 2030, let us do so with hope, optimism, and vision. A sustainable, healthier future is within reach, and together we will achieve it.
Thank you so much, Dr. Asrar. We're a little over time, so I'm going to ask you to take your seat.
If you allow me, I have a live survey to conduct, because when I'm hearing this prediction, who do agree with Elon Musk, who predicted 2 days ago that in 10 years from now, we'll have 10 billion robots in our humanity? Who is aligned with him?
Raise your hands if you agree.
Raise your hand, please. So, who do not agree? Thank you. Very interesting. Large majority doesn't agree. So let's see. Hope we will be all in good health by 2030, but in 10 years from now.
With your initiatives, we will surely be, Richard.
Thank you.
And now we welcome Mark Laurie. He is chairman and CEO of the Wonder Group. Welcome Mark Laurie to the stage. Can we give him some applause, ladies and gentlemen? Yes.
Mark is not just an expert on food industry. I have to mention for people after, if you want to talk about basketball, he is also an NBA owner. And we will ask some prediction from you, if you don't mind. Mark, please go ahead.
Thank you. Good afternoon. It's a great honor to be here. I thought it's fitting, given how much we talked about AI, to on the fly, in real time, right now, ask ChatGPT to write this speech, at least the start of it. So, write a speech convincing people that food is medicine. Okay, here it is. Ladies and gentlemen, imagine a medicine that prevents chronic illness, strengthens our bodies, boosts our energy, sharpens our minds, and improves our mood, all without the side effects. This medicine exists. It's the food we eat every day. Hippocrates, the father of medicine, said it best: let food be the medicine and medicine be the food. This goes on and on. There's paragraphs of it. It's unbelievable, the power of AI. That wrote that right in real time. I was going to talk about how food is the ultimate preventative medicine. We've talked about throughout the last few days about how AI is going to equalize healthcare, democratize it, but it still comes down to the food that we eat. Okay, and let me tell you how AI is going to impact that. For the last 3 years, lunch and dinner, every meal that I've been at home, which is most of the time, AI has told me exactly what I was eating. So I would basically just say what time I'm eating, the food would show up, and I would eat it. The first few months was a little rocky after, basically giving it feedback. I don't like this, I like that. But over time, also with additional data around my blood results, stool and saliva tests to know what foods I'm sensitive to, what deficiencies I have. Basically, AI is taking all that into account and deciding what I eat. I set health goals, and it basically just delivers food that I like every single meal. And pretty much now, I'm not even giving it any feedback. I'm basically happy with every meal, perfectly healthy, and I think this is the future. I think the future is one in which we take agency out of having to decide what to eat, which also is very time-consuming, but also I think has the opportunity to transform our health. And it is. It's transformed my own health. I love the food I'm eating. I can't wait to sit down and eat, and I'm surprised with every meal. And that is the future. And at Wonder, the startup that I created, we're basically building the infrastructure to be able to power that. So we've created basically fixed restaurant locations. They have kitchens in the back. They have the ability to cook 30 different cuisines and 600 different meals very fast, very efficiently, with very lightly skilled and lightly trained labor, very consistently. We set a very tight 6-minute delivery radius, so we're able to deliver food to people super fast. So we imagine a future with this level of automation in the kitchen, being able to know exactly what you need and what you want and be able to deliver it to you, starting in the US and then eventually all over the world. It doesn't need to be us doing all of the sort of infrastructure and powering it in terms of food. The AI could live and others could use it as well, but we do see that as a big opportunity to elevate the health of everyone in the world. And we think it's coming because I've been doing it.
Mark, in addition of this work, I know you are imagining a new city called Telosa. Can you, in 1 minute and 30 seconds, tell us what is this city?
Telosa?
Telosa, yeah.
Yeah, so I wasn't expecting that question, but working on, testing a new model for society with a city called Telosa, where it's more equitable, where the land is initially owned by the Telosa Foundation, and then as people move there and the land appreciates, Telosa would then sell the land, create an endowment, and use that money to provide the most advanced social services for free to the citizens. So the big idea is that people aren't getting the benefit from appreciating land, from creating cities and communities, and in Telosa they would. All the appreciation of the land would come back to the citizens. So we can have, it would be in the US, a city with normal taxes, but with the best free social services of any city in the country.
Thank you very much.
Thank you, Mark.
Please, a round of applause for Mark.
So he's inviting us over for dinner at his house and to Telosa as well. We need to ask you about the NBA championship when we're done. Extreme weather is an issue that we have seen truly plague almost every corner of the world because of climate change. So to talk about what this will look like in 2030, I'd like to welcome to the stage Angela Wilkinson. She is the Secretary General and CEO of the World Energy Council.
Thank you. Before I go to the future, I'd just like to go a little bit into the past. It was a very dark and stormy night in 1988 when I bumped into Professor Herbert Lamb, one of the UK's pioneering climatologists. And I mean literally, my car aquaplaned and rear-ended his car. Let me assure you, he was jolly nice about it, and I didn't lose my job as a postdoc in climate change impact assessments. Last night, I spent an hour on the phone to my father, who lives in southern Spain. He is surrounded by flooding, but he's safe and well. What connects these two events 40 years apart is extreme weather events. The increasing frequency and violence of extreme weather events is something that we're all beginning to talk about. Heat waves, flash flooding, hurricanes, typhoons, ice storms, forest fires are regular news headlines. All life support systems, all industrial systems and regions of the world are being affected. How extreme is extreme? This summer, 3 1-in-100-year events occurred in France. How will we triple nuclear power if we don't have access to reliable water? 2 months back, 20 million people were situated on rooftops in southern Brazil when it flooded. Now droughts are disrupting hydro plants across Latin America and Africa, driving demand for gas and oil. The shock of Hurricane Milton and 91 flash floods and numerous fires in the USA in 1 year. And not forgetting the heat waves of 2015, which affected the Gulf region, India, Pakistan, and Southeast Asian countries. The Valencia flood is an example of what's called a cold drop. ChatGPT it. And the fatal combination of heat and humidity is called a wet bulb event. It has yet to hit threshold, but when it does, we will be talking 20 million plus deaths. The most vulnerable are the hardest hit. I came in from the Belt and Road Ministerial, and the Energy Minister of Honduras was talking about 2 hurricanes in 2 weeks at $20 million cost. Now that's an unlucky strike. We can't put the genie back in the bottle. Only 6% of people now believe that 1.5 degrees is possible. The IPCC expects 2 degrees and a quadrupling of heat wave effects by the end of the century. Now, if we want every decimal point and every life to count, we have to think that every additional 0.1 degrees centigrade is millions more affected populations. Climate adaptation and repair must now go hand in hand with climate mitigation. The good news is there's no shortage of technology or money, but Mother Nature is shuffling the deck. What might she say to us today after listening to the conversations about infinite horizons? Finance. There is no revenue stream for climate adaptation or resilience. Can you change that? Data and AI. How much more energy will you need? Sustainability. A single issue agenda is a recipe for disaster. You need a multidimensional approach. Humanity has a new North Star by 2030. We have designed our institutions for stability and predictable risk control. We now need to reorganize our societies for transformation and emergence. We've exhausted the unlimited growth model. We must now design our markets for regeneration and resilience. We are using digital data and AI and improving physical risk assessments and enabling radical transparency. Now we need to have the courage to look at ourselves in the mirror. It's wonderful to inspire transformations, and it's vital to progress multidimensional transitions. Change will not be fast or slow, but sudden and everywhere. And the greatest regret will be being too late. The best way to reduce the costs of acting early is to use all levers of change, financial, technological, and most of all, the missing social transformation lever in making wiser choices. Transformation is a new leadership mindset, not a one-size-fits-all or straight-line journey. Transformation is leveraging synergies, policies, incentives, and collaboration choices. Transformation is a new space for conversation, where we actively listen and learn from diverse geographies and across generations about what is working and what is not. Thank you.
Angela, when I see what happened in Spain, in France, in some part of the world where really I was not expecting to see so huge catastrophe these past few days, what part of the world are the most vulnerable now on extreme weather?
Oh, that's a tough one. I would say it's not just the weather, it's also what's happening in terms of how we manage resources. So if I was just to pick one thing off the top of my head, I would say the Indo-Gangetic Plain, which is the watershed that India, China, and Russia depend on, is at a hotspot of water stress. How many climate change events, extreme weather events, do you need to tip that into ecological disaster, into social disruption and mass migration?
Thank you.
You were wonderful, Angela.
Thank you,
Big round
Angela.
of applause. We now welcome to the stage Daniel Jurgen, Vice Chairman of S&P Global, to talk about what energy will look like in 2030. Let's greet him on to our FII stage.
Daniel is also a very dear friend, a Pulitzer Prize winning and expert, of course, on energy. Daniel, the floor is yours.
Well, thank you very much. Thank you, Richard and Mariana, and thank you for the opportunity to be here. You have to be a little modest about talking about what's going to happen in 2030, because think back to 2020, who would have seen a pandemic, 2 wars, and this revolution coming with AI? With that said, I would certainly like to say that we're going to continue to see profound changes in energy. But I think in a way we heard a little bit of that from Angela, that it's not going to be this linear transition, which has been the thought that's been out there. It's going to be a multidimensional energy transition, different technologies, different mix, different pace, different priorities, different regions will be approached in different ways. And it really means that this energy transition will also be something else, which we can call energy addition. And the reasons for it are a number of reasons. One, the voice of the Global South has really been missing from the discussion about energy transition. It's going to get louder and more profound because of the scale of consumption in those countries, and also because their voice is going to be heard more clearly. So that's a reason for it. A second reason is the very scale of it. You're talking about changing a $110 trillion world economy in 5 years or in 25 years. You have to be a little more modest about it and realize that all the other energy transitions took over a century to get what they are. So we have to lodge this in history. Energy security is back on the agenda. Supply chains are very important. And minerals, that the energy transition is going to be more intensive in terms of mineral use. So what does this mean for traditional energies? Energy addition. Oil and gas are going to be part of the mix. Oil is growing, natural gas continuing to grow, but greater focus on emissions, greater focus on technology adaptation. And bringing the technical skills of this great industry to bear to address the questions now on the agenda. Nuclear, we're going to hear a little bit about it, but nuclear has truly having a revival of interest and much more driven by the private sector, which is different than in the past. In terms of new technologies, it was around 2010 that wind and solar became competitive. Now they're conventional energies too, a very big growing part of the mix. One question, of course, is where is hydrogen going to fit into the system? I think we'll see over the next 5 years what scale it gets to. Hydrogen's already used, but it will be used more intensively. And we're seeing tremendous focus on innovation. You heard it all through this, through the FII. AI really is in 2 phases. One phase is, of course, a lot more electricity use. The number is that by 2030, the United States, 10% of its electricity will go to AI. And we heard from Kei Fu about how revolutionary it will be. The question is, what impact will it have on energy consumption? That we will find out. So what does this mean for Saudi Arabia to tie it into FII? Saudi Arabia, of course, because of its endowment, because of Saudi Aramco, is a foundation of the world economy today. But we can see its role growing. And I've really been struck by this 8th edition, kind of what I've learned here about the expanded role. The role of Saudi Arabia in supply chains is so much clearer than it was even a couple of years ago, and the key role that it will have. And its endowment, of course, oil and gas has been part of its endowment, and its strong importance, but that's going to grow now because of this other endowment that nobody really thought about on a global term before, which is electricity, because Saudi Arabia is going to have very low-cost electricity and very green electricity, which is going to make it very competitive in the world and will be a magnet tied in with investment, with innovation, with human capital to be a much bigger player in the energy system in a global way, because who would have thought 5 years ago that electricity would be so important? So all of this means, I think, with these ingredients of what Saudi Arabia has, with the technology, the innovation that we recognize, that Saudi Arabia, in fact, will have a crucial and growing role both in supplying the world's energy and in leadership in the world community. So thank you very much.
We're going to wrap it up.
Thank you, Daniel.
We're over time, Daniel, but we're going to wrap it up with that good statement
Okay,
that you
good.
mentioned
Thank
in the end. Thank you for that. So we have talked about the vision for food, for urban economies, energy, weather. What will space look like in 2030? For that, we welcome Cam Ghaffarian to the stage. He is the founder and executive chairman of Intuitive Machines, Axiom Space, Quantum Space, and X Energy. Welcome.
Thank you. It's such a pleasure to be here. You know, since I was a 6-year-old, I was mesmerized by stars. I would be sleeping outside, look at the stars, and I was like, is this possible? That there are people living in other stars? And that sort of propelled me into space exploration. And I have created 3 commercial space companies. Just very quickly tell you, February 2024, Intuitive Machine was the first private company in the history of humankind landing on the surface of the moon successfully. And I'm so proud of that. We're building multiple moon landers. Our next moon lander will be going to the surface of the moon first quarter next year. That's Intuitive Machine. Axiom Space, we're building the first private commercial space station, and that will replace International Space Station, and we will be launching our first module by end of 2026. Quantum Space, we're building the next generation of multi-purpose satellites that can help with debris, refueling other satellites, or take other satellites to precision orbit. And I'm so proud to say my company, X Energy, which is the world leader in advanced nuclear, just 2 weeks ago signed the largest SMR nuclear deal with Amazon to power the Amazon AI data centers, just to give you a sense. But I wanted to just sort of expand this a little bit further. When I was at our moon launch in February, I predicted something, not for 2030, but by 2055, that we will be in an era that we will have hourly launches to a space city outside Earth, 250 miles or 400 kilometers above, where there will be people living, working, manufacturing capabilities, and we'll be actually doing incredible things. I mean, literally a city with artificial gravity and all of that. Hourly launches. I predicted that we will have daily launches to the moon, and we will have a habitat on the surface of the moon with people working, living, and all of that. And I predicted that we will have a weekly launches to the surface of Mars, again with people living and working there, and have a habitat there. This is the one that was more interesting. I also predicted that quarterly basis, we will have launches to other stars outside of our solar system. Now, why do I say that? I just want to share something really interesting, which not many people pay attention. We believe, all of us as a humanity, that we're really a big thing on this planet. Let me just give you a sense. If we just leave our solar system, we get past the moon and Mars, and we get outside of our solar system, we're in our galaxy called Milky Way. The distance from one point of our galaxy to another is 100,000 light years. So if you go with the speed of light, it will take 100,000 years to go from one point of our galaxy to another. There are 400 billion stars, just like our own sun, in our galaxy alone, with planets around them. Now, if you thought that was phenomenal, let me even expand your mind even further. Let's say that we leave our galaxy. Do you all know how many other galaxies exist in the universe? 2 trillion other galaxies we believe that exist in the universe based on James Webb Space Telescope. And some of those galaxies are maybe 1 million or billion times larger than our own galaxies. You see, we are such a small piece. The reason I share that is because space unifies humanity. It brings us together. The astronauts I have sent to space, including being so proud to send 2 Saudi astronauts in 2022 to International Space Station, first female from the Arab world, Rayana, that we sent to space. For all of them that I've done, when they come back, they're transformed. Because when they go around Earth every 90 minutes, they realize there are no borders. And there is this beautiful blue globe that's protected by this thin layer of atmosphere. And so we realize that at the end of the day, we are one race, human race, and until we come together and realize that we're one, we're not moving to the next level. So when we look at it in the context of the universe, that should bring us together and realize that we are a very small piece. Let me just tell you one other thing. They've asked scientists, based on the size of the universe, how many planets in the universe are capable of holding intelligent life? Can you imagine that? We believe there are maybe 1 trillion planets in the universe that may be holding intelligent life. If that's the case, I don't think we're alone. And there are many other planets, and our ultimate destiny is to go to stars. So very quickly, 2030, humongous improvement in transportation business with Starship, with New Glenn, by different companies. My company, Axiom Space, will have a space station in orbit, and we will be creating a new economy called LEO economy, low Earth orbit economy, where we will be producing orbital data centers, pharmaceuticals. In fact, today we're capable of printing, bioprinting corneas and retinas in space. By 2030, we will be able, in microgravity environment, when I say microgravity, that's where there is no gravity, and therefore molecules go where they need to go, bioprints hearts and lungs, and maybe drop them to different hospitals. There will be also incredible amount of new technologies in terms of lunar technology. We just won a contract to create satellites around the moon, and there will be habitat on the surface of the moon. Human beings will be walking on the surface of the moon. So all of that is going to grow, but all of that is to improve state of humanity and human knowledge.
Cam, thank you.
Thank you, Ken.
Thank you.
Thank you. So, ladies and gentlemen, the good news is that FII63 will be in one of these galaxies. Andrew.
Thank you so much. What will the Olympics look like in 2032? We all tuned in to the spectacular show that was put on in Paris, and to tell us what that will look like in the future, we have Mr. Andrew Liveris with us today. Round of applause for him, please, the former chairman and CEO of the Dow Chemical Company.
So, Dow Chemical to the Brisbane Olympics, that's quite a journey. What have they got in common? You have to be fit, you have to be agile, you have to love life, and you have to look at infinite horizons, which is the theme of this conference this year. I've been to 8 FIIs And this infinite horizons that you've put in place, your challenge for health, Richard, and I admire what you've done. The Olympics is the embodiment of the human race, Cam. The human race has to be here on Earth. Hope, belief, what we do to pass the torch to future generations. What we have to do is set in motion all the parameters my fellow speakers have talked about and bring it to the 21st century. I would argue to you that the Olympic rings and the Paralympics Agitos are the only two brands that are fit for purpose for the 21st century. Most global institutions that were set up for the 20th century have failed. And I'm being very, very direct about that. Pick your favorite global institution. We have to give rebirth to the way humanity runs the human race, undertakes all the things that matter to us. What matters to us? Equity, equality, inclusion, togetherness, fairness, accessibility. What matters to us is embracing digital so it's not a threat, Mr. Musk. It's an opportunity of the type we've heard also on this panel. What about environment? What about social governance? What about the things that constitute the word sustainability? The epicenter of what the Olympics has meant, from the ancient Olympians who put down their weapons at time of war, so the city-states could learn that the only competition that mattered in the human race was, in fact, fairness, nutrition, excellence, athleticism. That's not an elite topic. That's a topic for everyone. What we have done with the Olympic movement and under Thomas Bach, this next notion of faster, higher, stronger, together, is something called the new norms. Paris showed us games wide open, the beginning of the new norms. Los Angeles will take it to another level. Brisbane 32, our centerpiece, is in fact inclusion. Already our new motto, shine brightest together. And we're going to put that in place in the digital century. We're going to make health, well-being available for the children of the world so that obesity, diabetes, the killers that kill all of us, get overwhelmed and overtaken by the technology we bring to bear, and we will showcase that with the Olympics. The Olympics in the 21st century and how we can absolutely, totally put it as an experience. Why are we all working harder? What is this point about work? Is it dollars and real? Is it money? No. It's for families and friends and neighborhoods and communities to have experiences, leisure, fun. It's okay. It's okay to do that. We will showcase that. We will showcase it before, during, and after the events. So what is the notion that brings us to infinite horizons here in KSA? Look at what 2030 is bringing to KSA. Already the Equestrian World Cup, already Live Golf, which I'm a member of and loving every minute of it. The FIBA Asian Basketball Cup, the inaugural Olympics e-games. There's 23 million e-gamers in this country. Wow. I mean, think about what we can do here as we open up the bid for the FIFA World Cup in 34, as we even think about bringing Olympics and Paralympics to this nation. This nation is rising by showing the way the world should operate, not the way the world did operate. So what's the role of sports? The role of sports is to transcend over so that all humans see it as part of their life. In Brisbane, we've already adopted the motto, lifestyle superpower. Yeah, Australia's a pretty nice country to live in, but it's a pretty hard country to visit. By the time we're done, hypersonic travel, digital travel, you will come. I'm available for tickets, let me know. With that, thank you very much for hearing out.
Thank you, Andrew, thank you. One thing is absolutely sure, guys, is by 2032, the prediction is that the Olympics will be in Brisbane, so at least we know that. And we'll be with you. So, we are almost at the end, and it's my great pleasure to welcome on stage a man who I am honored to call a dear friend for years. In fact, I will share a little secret with you. I started in this country years ago, thanks to this gentleman who was behind the strategy, of course, under the leadership of the late King Abdullah, on bringing investors to the Kingdom of Saudi Arabia. So His Excellency Fahad al-Rashid serves as an advisor in the General Secretary of the Council of Ministers of Saudi Arabia. He chairs also the Saudi Convention and Exhibition General Authority, and he represents Saudi Arabia on the Urban 20 and holds board membership with multiple organizations. And of course, previously, it's important to mention, because this will be part of our conversation, he led the Royal Commission for Riyadh City and King Abdullah Economic City, which definitely help also to be top cities by 2030, but more importantly, he's a man also under the leadership of His Royal Highness the Crown Prince and His Majesty the King Salman to bring Expo 2030 to the kingdom. His Excellency Fahad al-Rashid.
Well, can I start with a question?
You are now changing
yes,
the role.
Yes,
oh my
I'm changing the role. Just for 1 second.
Tell me.
So you've done an incredible job with your team. Thank you so much. And it's the last hour of this. Happy Halloween. What's your costume for tonight?
What is?
Your costume for Halloween.
For Halloween.
I will discover that when I will be back home, because tonight, unfortunately, we don't have time to celebrate Halloween, but definitely, if I had to pick one, you know, when I'm hearing this prediction, I think we need you ready to wear a costume to go to space. Like it's happening tomorrow. Huh? I think we should go together.
Definitely.
So, my dear, Your Excellency, dear Fahad, you are probably maybe the one and only who was in charge of, at the same time, an economic city, like King Abdullah Economic City, and also you were running, as a CEO, one of the largest capital, Riyadh. So how were you managing both, and what did you get from the both experiences, and how did you lead these two strategies?
I think we've been talking so much the past 3 days about artificial intelligence, autonomous cars, flying taxis, all of these technologies that will change our world. But we take for granted our space, our cities. It is the place that is the biggest and largest investment humanity has ever made. You know that the size of only the housing stock of the world is $380 trillion. That's larger than all of the gold reserves at $13 trillion, larger than the global equity markets at $100 trillion, larger than GDP at $110 trillion, and larger than even debt, $130 trillion. But most importantly, we invest our lives in it. Your lives, your professional life, the livelihood of your children, your family, your friends, everything is cities. And what's most important is climate action has to happen in cities because we produce 70% of global emissions. So anything we do, we have to do in our cities. So when we approached both the new city, a startup city, King Abdullah Economic City, or the city of Riyadh, which is now one of the largest cities in the world, in fact, top 50 city in the world, you have to approach them from a citizen and human-based perspective, right? Because although we're talking about artificial intelligence and all of these technologies, what makes our cities special is human-centric design. It's, again, simple ideas, big ideas, mixed use, public transport, public parks, the things that we love about our cities.
What cities inspire you the most today?
I think the reality is you have cities that have been resilient, reinvented themselves, and become very successful. And you know, all of the large cities that become global cities are inspiration for us. If it's Tokyo, London, New York, and many, many others that have done it so well. I think Riyadh is getting there. We're already, like I said, top 50, and I think we are going to be top 10 very soon.
You love urbanization. You are an expert, a master on that. So you always tell me, okay, we talk a lot these past 3 days about the content. What will happen in terms of technologies, of tourism. But to have great content, you need to have a beautiful box. So how do you see, what do you think should be the DNA, the main principles of building the most beautiful environment?
I think we can talk about the design of cities, from the old designs of, you know, a grid system, a multi-polis or even the line, right? These are forms. Cities have systems also. There's systems of energy, of provision of water, of mobility, etc. These are system designs, and they will improve over time. Artificial intelligence, actually, I think, will mostly impact that. But I think what I see around the world is our cities need to adapt for us. So if artificial intelligence is going to change the world, and it's going to change our labor markets, we need informed, enlightened urban leaders who can help us adapt, who can help us migrate into a new world. So we need leadership that is enlightened, which means it's data-driven, stakeholder-driven, but also humane and inclusive. And I think that's the biggest challenge for 2050.
How do you use AI in your day-to-day job?
I use it now for everything. I didn't ask it to write this one. This speech is too good for AI, but it's going to get there. Okay.
Anyway, I know that we are sharing at least one conviction in common, which is that in this digital world, where we are going, you are still a strong believer of bringing people together.
Yes.
And so how does bringing people together in person impact humanity?
You know, during COVID, during the lockdown, I thought very much about how the world would change for our industry, the MICE industry, the conventions, exhibitions industry. And I thought, it's not going to be about quantity anymore. It's not about the number. It's also going to be about the quality. So only events like the FII, and what you do is art, by the way, it's not science, it's absolute art, is going to survive. The reality of the matter, going virtual has allowed you and I, instead of meeting once in a year at an event, to now meet 8 to 10 times in different geographic regions. And that intensity of increasing connection with people actually resulted in us needing to meet more in person because we're connecting more. So I believe that these events that we create and curate together, really as human beings, they bring us together, they increase the level of trust, the level of knowledge, and cross-investment are only going to be more important. And that's why, my friend, thank you for everything that you've done for the Kingdom of Saudi Arabia. You have been a great friend. Thank you for what you've done for the FII. And it's been amazing. Thank you.
You are too kind, and thank you for your inspiration. Expo 2030, it's an amazing opportunity to bring people together. What will be the key principles of Expo 2030?
I think the Expo has been a great win for the country under the leadership of His Royal Highness, the Crown Prince, because it brought countries together. It was the highest win in the history of Expo. Because we told everybody around the world that this is your expo. It's called a World Expo because it is a World Expo, and it has to be everybody's expo. And in the same way to Vision 2030, it is about a foresighted tomorrow. We talked about the future. We have to predict, we have to manage risk, even though we don't know the outcome, and that's the truth. We don't know what's going to happen in 5 years, in 20 years, and 30 years. But we as human beings have to have foresight, which means look to the future, identify risk and opportunities, and manage them, rather than let the future come to you, go to it. And that's, I think, a foresighted tomorrow is what the Expo is going to be about.
We cannot wait. 2050, how do you see Riyadh in 2050?
I think it's going to be the most incredible city in the world. We are building one of the largest parks in the world, the largest metro and public transport system ever made. Some of the most unique projects in the world are happening in Riyadh. But I think cities ultimately are about people. And I think cities like Riyadh are designed around unleashing people's potential. People are complaining about traffic. Traffic is success. Because you see our highways, they're not small. They're not built for a small city. You see the city being built like in a grid system, like New York. But the reason you have so much traffic is that you, our friends, are here visiting us, and we celebrate it with you. I hope you see the city of Riyadh as your city. I hope you come often. I hope you move here.
My last question. In few weeks, mid-December, you have decided to make Riyadh also the capital of the MICE industry, bringing all the big players from the world on everything they do, on conferences, on exhibition. This is a huge industry, and if you have some data, we'll be very happy to hear from you. Why did you make that decision, and how do you envision that this global platform will be, and what will be the impact in terms of jobs, in terms of inspiration? What is your dream on that?
Well, the kingdom is a G20 economy growing at a fast pace. Our non-oil GDP is growing at around 7%. Our MICE industry, the industry of events, has to follow. And I think the change in Vision 2030 has ushered in a new era for the events industry in Saudi Arabia. We have grown from 11,000 events to 17,000 events this year, from 19 to 2023. But it's not enough. We have to do more. We have to go, I think, 40, 50,000 events by 2030. And my colleagues...
40,000?
Yes, to 50,000. You choose that number. I'm good. Put a target. I say put a target because he is my partner in crime. He's the convener of conveners. So we're going to host this together. This summit is going to be in partnership with you. We're going to bring the global professional organizers and talk about them, about the future of the industry, how we can not just create jobs because of the industry, not just promote destinations, but create partnerships through meetings. And thanks to you for your commitment to that event.
Oh, thank you for your trust, and I know that you will be once again leading one of the most important, inspiring platforms with great outcomes. Last question. We are watched by a lot of young people, not only from Saudi Arabia. Yesterday we had thousands and thousands of people watching from the Global South. And everything we discuss here is a big hope for them because they see the emergence of the Global South. Africa, many countries in South Asia, and of course in this part of the world and Latin America. What is the advice that you give to all these young people, young entrepreneurs, who sometimes, you know, they don't see a lot of light in their tunnels? So what is the advice that you will give them as a leader who really builds cities and try to bring quality of life everywhere?
I came from nothing. And the one thing I believe in is education. So you have a hero, Daniel Jürgen, Jürgen is here with us. 25 years ago, I wanted to go into the energy industry, and I read your book, The Prize, and I went to Saudi Aramco to work. But my passion, I mean, you can't be sitting there and say, I wanted to build cities. So I played SimCity for 30 years, and I ended up managing 2 cities. So I think work hard, study, read, and reach out for the skies.
Ladies and gentlemen, a round of applause for His Excellency Fahd Rashid.
Thank you so much, Your Excellency.
Mariana, thank you so much. You were an amazing and outstanding MC during these past days.
Thank you.
And we hope to see you again in Miami.
Yes.
Our next big FII end of February. And now allow me just to say a few words of conclusion before you go back home. So this was an amazing journey, ladies and gentlemen. And as we bring this 8th edition of the Future Investment Initiative to a close, I feel a profound sense of gratitude and hope. So over the past few days, we have gathered here from every corner in the world, bound by a shared mission to shape a future that doesn't just respond to our challenges, but also redefines them, turns them into opportunities, and creates a legacy of impact that will echo across generations. So in every conversation, panel, story shared here and here, there were a common thread to break barriers, to dream bigger than ever before, I think. And from the Global South, as we just discussed with His Excellency, to the established economies of the North, we have seen that growth is not just about the financial measure. It is a human journey. A journey of courage, of resilience and purpose. Courage, resilience and purpose. But now, as we leave this place in Riyadh, let's remember one thing. The ideas we have discussed are only as powerful as the action we take. So each of us carries a responsibility, a duty to look to us for hope, for leadership, and to those who look for, I would say, for innovation. The real work begins now, in our boardrooms, in our communities, and our own hearts. So I'm deeply moved by the commitment that each of you has shown. I am really inspired by your belief in change, and I am humbled by your courage to pursue a world where every nation, every person has the opportunity to flourish. So this is not just about building new economies or industries, it's about nurturing the soul of humanity. It's a kind of magic. So as you go forward, take with you the connections that you have made, the knowledge you have gained, I hope, and the spark of a vision that together we can achieve the impossible. So FII is not just a platform, it's a movement. It's a movement that you are leading. So thank you for being a part of this journey. Special thanks to 8,000 delegates, 600 speakers, 500 journalists, media partners, and of course, thank you to our strategic partners, our amazing knowledge partners, and special thanks on my behalf from the bottom of my heart to our 400 plus staff and colleagues who made that possible. So, thank you guys. And thank you also for your courage to envision a better future. And thank you for being here with us. So let's go forth together with purpose, as His Excellency Yasser Rumayyan said in his opening speech, with passion, with a promise to make this world worthy of the dreams we have dared to share. And hope to see you all next year, 2025, in Miami, end of February, inshallah, Riyadh FII8. Thank you, and let's watch what you have accomplished together. Thank you all. We have built a movement that doesn't not shy away from the thought conversation, but embrace them. A movement that doesn't not just talk about change, but drives it. A movement that is above all committed to the future.
Over 7 years, it has facilitated over $125 billion in deals.
In this room, you are the architects of that future.
In this panel, 10 superstars. Do you see any opportunity for a rapprochement between China and the United States?
The impact on global economic policy is much more acute than before.
Competition's good. Technology is an absolute necessity.
As for safety, keeping people away from cardiovascular events is a good thing.
That's the definition of most entrepreneurs I work with today. They love what they do. They're willing to crawl through glass to get it done.
The global theme is the need to deploy more capital to rebuild our infrastructure, to build out AI.
We have a comment from our avatar.
The Conference Board C-Suite Outlook 2020.
Integrating technology to grow their businesses.
Because we're living at an extraordinary time in history.
If we're going to have a prosperous global economy, we need education systems around the world.
China's coming back, I think, with the recent fiscal and monetary policy.
You'll see investment liberalization if there's a change in government. Remember,
if Trump wins.
If Trump wins.
It gets a chance to do what it can do best, which is commerce, industry, and development.
The big challenge is the fact that the big paradigms are changing.
The challenge of a public company is there is so much focus on quarterly earnings.
Decarbonism, I think, is both a threat and an opportunity.
But 2025 will be better than 2024 capital markets?
Yes.
My expectation is you'll see more robust capital markets activity in 2025 and 2026.
The global economy is in really good shape.
But that is not, the unhealthy, to my knowledge.
Without access to electricity, Africa cannot industrialize.
We have the responsibilities and the opportunities to shape future that invest not only in our economies, but in humanity itself.
Transitioning is part of our DNA and will continue to be part of our DNA. And actually, we will set the example for everybody to follow suit. If you want to be part of our story, scan the code.
The markets are usually, more often than not, almost consistently, will tell you where we're going.
FII investment potential. We are delighted that we believe in the green energy.
So you need an energy transition that is affordable, secure, and at the same time sustainable.
This initiative, the AI Inclusive, will support the development of safe and responsible AI ecosystems within the Global South. The Global South, as I said, are younger, more educated, hard worker, disciplined, they understand technology, while the other party, we want them to succeed.
شعار هذه النسخة من المؤتمر أفق لا متناهي الاستثمار اليوم لصياغة الغد.
Together, we are stronger. Together, we can shape a future defined by innovation, prosperity, and progress.
To create more profit and bigger moat on those business models is my guess.
What everybody needs to do right away is to build the instrument to allow you to do that. And that is what we call the AI factory.
I'm glad to say that we're able to do that entirely with human brains and without AI. I think in the future the AI might look at that and say, not bad for a bunch of monkeys.
Keeping the organization fresh, young talent, people coming in, bright ideas, good ideas, making sure that they can be heard and they don't get lost.
The intelligence that we have that computers don't today have. It's a flexibility, it's a creativity, it's a, oh, today I want to learn something new kind of thinking.
The future is the demand of AI.
View that the world is going to be radically different is the thesis that informs everything that we do.
Saudi Arabia plays a very important role as an anchor of stability.
Hai nước chúng ta đã có nhiều điểm tương đồng và có những thế mạnh có thể hỗ trợ, bổ sung cho nhau.
Bahrain Financial Hub of the north of Bahrain, which has been built on the historical harbor of trade in Bahrain.
Now, as financial investors, we all seek the same things. We seek high growth, high margin, and scalable business models.
The world of workplace has been redefined in a pace never been witnessed before.
Sky is definitely doubling down on AI.
AI will increase the speed and decrease the cost.
Have to invest on the relations and on the trust.
So if I have to pick the word, I would pick partner. We need as much copper in the next decade as we've had in human history.
So now we have RPA. Robotic are handling
I can say 90% of our processes.
If we call it clean energy, it depends on the two things, the renewable resources and the decarbonization from the fossil fuel-based fuels.
If I think about healthcare in general, I think there are going to be many waves of innovation thanks to AI.
They need to stop shaming, shunning, and shouting at the private sector and come with solutions.
We need to regenerate our planet.
For us, we have the ability to try to create the physical space which could cope with things that we don't know about today.
NEOM is an economy-building exercise.
And making sure that they are able to engage with the world in a positive and proactive way, whether it's making sure that our relationships are serving the joint interests, the interests of the kingdom and of our partners.
The FII Priority Compass has shown that while rising living costs remain a top concern, climate change is now the fourth highest priority globally. We must address these challenges with renewed commitment to investing with purpose.